I didn't say it. The NATO chief said it about Trump. I mean, what was that?
I have absolutely no words. I have no words.
Zip. Okay, let's.
You don't have any words. Well, we're in the same boat.
Let's tell you what I'm talking about in case you missed it. This actually happened. This is real life. This is not even, some sort of a skit. On the sidelines of the NATO summit, NATO chief Mark Rutte referred to Trump as Daddy.
They're not going to be fighting each other. They've had it. They've had a big fight, like two kids in a schoolyard. They fight like hell. You can't stop them. Let them fight for about 2-3 minutes. Then it's easier to stop them.
And then Daddy has to sometimes use strong language to
get
us.
You have to use strong language. Every once in a while, you have to use a certain word.
Mark Rutte, the NATO chief, who is your friend, he called you Daddy earlier. Do you regard your NATO allies as kind of children?
No, he likes me. I think he likes me. If he doesn't, I'll let you know. I'll come back and I'll hit him hard, okay? No? He did it very affectionate. Daddy, you're my daddy. And I think they'll be able to, and I think they're going to remember this day. And this was a big day for NATO. This was a very big day. They took it. One of the gentlemen said, you know what? We've been trying to raise the rate for 30 years, he said, 20 years, from almost the beginning. And he's been there for a long time. He said, until you came along, it never happened. What you did is amazing. It's been sort of an amazing day.
Okay. So that's what's happening at NATO. But nevertheless, that sort of brevity is and that relief is what you're seeing on the street as well. Mixed trade on Wall Street as Iran-Israel conflict eases. You had a bit of a drop in the Dow, but the S&P 500 and the Nasdaq seeming fine in trade in US markets as well. So yeah, okay, Nasdaq, they're up in the green, completely flat on the S&P 500 really. Focus is now shifting to economic data. You'll have jobless claims out on Thursday. That's going to be important. All eyes on the May inflation data. That's the PCE, which will be out on Friday. This is what the Fed watches. Fed Chairman Jerome Powell once again making statements that, he expects maybe inflation to stay above the 2% mark. And this is going to be a bit of a pain point. In other news, a report that the US government may be looking at a replacement for Fed Chief Powell earlier than expected. In any case, Treasury yields continue to remain soft after an Israel-Iran ceasefire, the 10-year at 4.27%. So a mild recovery in oil prices as well after the steep sell-off. The Brent, though, remains under the $68 levels. A bit of a mixed open for Asian markets too. Largely the underlying sentiment being positive. Your Nikkei about 1%, but Hang Seng and Shanghai down in the red. As far as the Nifty is concerned, the implied open is indicating that we'll have a 40 points in the green, that kind of a start. So nothing massive, guys, but at least nothing to cry about after yesterday's close.
Yeah, no, and yesterday's close in the context of what you've seen over the last 4 or 5 sessions, in fact, because in let me go through my points. Let's talk about fund flows, because I put that down and you will see it on the screen in just a bit. It's either 4 out of 5 or 3 out of 4. I'll get to that in a bit. But the foreign institutionals net selling to the extent of 2,427 odd crore rupees. They have been net selling over the past couple of sessions, but that's been mopped up and how by domestic institutions. So there's a cancellation of that. But let's talk about the benchmark. It managed to break out of the range that it has held since mid-May. It gained about 0.8% to close at 25,255. The upside cap of that range, 700 points or thereabouts, was 25,200. It's broken past that. It has gained in 3 out of the 4 last sessions, and in fact it has gained as much as 451 points since Friday. Small caps sizzled in trade yesterday with the index up as much as 1.6%. The IT index was in focus and one of the bright spots in trade yesterday, gaining as much as 1.6%, but the Nifty Bank underperforming once again, and this has been happening in the recent past, but do bear in mind that it is trading at very, very close to all-time highs, just about 0.75% away from all-time highs. The consumption pack once again doing particularly well. You had consumer durables as a pack that did well as auto as a pack, but once again you had defense stocks which took a bit of a battering, down about 2%. Again, this is par for the course based on what you've seen over the last 3 months, the kind of gains that they've had, they're now being sold into. But importantly, and I'm sure Puneet will talk about this, today, of course, is monthly expiry, and the options distribution that you saw post yesterday's session or as during yesterday's session, I thought was very interesting. Put writing at 25,200.
Yeah, so those factors put together, plus the fact that the small cap index notably outperformed. So in the Nifty 500, 300 stocks in the green, 200 in the red. Small cap index outperforming even the Nifty, which has given the breakout as we spoke about, which is very, very positive. And like we said, I mean, Lawrence Blanco, amongst others. So, we're talking about him because he's one of the more noted ones, but Gautam Shah, who came on our show, spoke about 600 on the anvil. Yesterday, Chandan Taparia spoke about how 500 to 700 points coming up in the month of July itself, which seasonally is a very strong month. Yeah. And now, just one comment on what Blanco has said, right? That Nifty looks set to resume the original double bottom pattern that still supports an upside target of 26333. I think this is the key thing, so to keep an eye out for. So everybody who looks at it from a technical trade perspective is turned positive, which is actually a very good sign. Crude being lower is a positive sign. Now you know the usual winners and losers, whether they move on a Wednesday or Thursday or Friday, it's difficult to call out really.
No, fair enough. And just, that very interesting quote you pulled up, Neeraj, from Lawrence Blanco. Just some of the stocks that he's mentioned specifically. Indus Towers, Shriram Finance, Chola Finance, he says those are presented as buy candidates. One of the big factors to watch, of course, is the monthly expiry. A new session will start as well. And it's coming at a good time. The Nifty has registered its highest closing level of 2025, breaching that crucial resistance of 25,200. Bullish momentum is setting the stage for a further upside today as well. Analysts believe this breakout signal and renewed bullish momentum does give that scope. So resistance now at 25,350. A breakout above this could accelerate the rally to 25,500. 25,200, which was the previous crucial resistance, now acts as an immediate support. Now the Bank Nifty, meanwhile, has traded in a narrow range but comfortably held above its key short-term moving averages. The index continues to trade in a positive trend, with technical indicators supporting a bullish stance. It has maintained stability despite some intraday choppiness. Key resistance 56,600 to 57,000 and support at 56,400. But all the action in the derivatives market today with the monthly expiry, Puneet.
Well, thanks so much for that. Definitely, it's going to be a very interesting one, as you guys rightly said, going into the next expiry, because even yesterday we saw stellar recovery on the Nifty, and it was largely broad-based across sectors. Between IT and defense, we do see the ping pong happening on the negatives and the positive side, but largely a very positive move. Implied open again indicating 40 points, but let's look at the Nifty as well as the Bank Nifty very quickly, because we mentioned about the rollover data. Specifically, we've seen for June, of course, the open interest has fallen, while for July that has seen a stellar recovery in terms of volumes as well. For the Bank Nifty as well, we've actually seen a very increased open interest in July of 34% compared to the Nifty, which is at 17%. So it's also indicating that, and even visible in the CLSA note, that both NBFCs as well as gold finance is focused, but banks could be one of the key ones to watch out for going into the next expiry, both based on fundamentals. We might starting to see some updates also coming in the first week of July for the quarter gone by. So it's going to be a very interesting quarter, say the least, for banks in this particular time frame, and the FNO data also reflecting of the same. In terms of FII funds, we've seen some additions essentially by the FIIs. We've seen reduction of shorts compared to yesterday, but longs have been added by the FIIs in yesterday's session, and this has increased the index long again to 23% and that's one of the key aspects to watch out for. We are of course up from a couple of weeks ago, but again, it's going to be one of the key monitorables how the FIIs perform on the index long as well as on the short side. Finally, in terms of open interest distribution, just look at that candlestick being formed at 25,500, and it's very interesting because over the last week or so we haven't seen that. We've seen 25,000 being one of the key levels, but from yesterday's move, the 25,500 level also comes in. So if this could become one of the key support levels most market participants are going to cheer that on because we're increasing the resistance levels again from 25,200 to 25,500, and that's reflected in the positions. So overall, set for a very good and a very strong start to the July expiry date. That's going to be one of the key aspects to watch out for, and 25,200 if it could become the new support.
Okay, 25,200 could become the new support. It seems to be the consensus this morning, 36 points up on the implied open, but it's all about the stocks and we have so many to cover. So I'll go through my first three on my watch list very quickly. I'm talking about Vodafone Idea just for the simple reason that it's been buzzing one way or the other for the last couple of sessions. First, when there was a report that it would get an 84,000 crore reprieve from the government, then the company comes and says there's no such communication. The stock is still up 4% in yesterday's trade, and now reports that the telecom company is seeking $2.9 billion in loans to bolster their network. So a massive push over there. It seems now pretty clear that Vodafone Idea is throwing everything at it in an attempt to make this work. Will you see a further upside on the stock is the question today. This definitely will be seen as a positive. It's also a high volume stock with a lot of retail interest in it. Ask Automotive is the second one that I'm looking at. A thumbs up on the news. The company has entered a 49-51 joint venture agreement with TD Holding GmbH. The agreement is to manufacture, market and sell sunroof control and helix cables for passenger vehicles. Now it's the new rage in all passenger vehicles where every car needs to have a sunroof. Anyway, Ask Automotive now getting into that space. Looking at it as a thumbs up. The stock was yesterday up as well. And Tex Maco Rail is the other one. The company has received 535 crore order to manufacture and supply 560 open-top wagons from Kamalco SA. It's an international order, so will be seen as a positive. This is something you've been looking at as well, Neeraj.
Yeah, I mean, good orders, and the fact that they've also, I'm sure you highlighted that the future orders have been penciled in as well out here, so could be interesting. Are Indian wagon manufacturers finally making at scale for the world? It's a big thing.
And it's a 24-month timeline, so it's a very clear visibility on it. So Tex Maco also in focus.
All right. Well, let's talk about the stocks on my list. We've got HUL, which is a positive development. You have the Unilever Group, which has entered into an agreement with Magnum Holdings to basically acquire a significant stake in Quality Walls India. It will now be owned by Magnum. Magnum is set to acquire 61.9% stake in Quality Walls. That IP will be transferred to Quality Walls, which is currently held by HUL. Quality Walls will continue to leverage its brand and innovation expertise. Now, what is the further impact? Magnum Holdco will launch an open offer for public shareholders of Quality Walls. This is in line with SEBI regulations. And why is this happening? The spin-off essentially aligns with what Unilever is trying to do globally. And remember, this has been a bit of a talking point going forward as well, whether HUL will double down or not on that ice cream business, which has not really been contributing too much for them. PB Fintech is a thumbs down because you have co-founders Yashish Dahiya and Aloc Bansal who are set to sell 1.1% stake in the company. The stake will be sold at 1,800 rupees per share, 2.2% discount to the current market price. That is valued at 912 crore rupees. The co-founders at the end of March had 5.7% stake in PB Fintech, so that would drop down to about 4.8 or thereabouts. Canfin Homes, this is interesting because several players in the financial space are raising funds. That's one of the big talking points today. But Canfin Homes got board approval to raise 10,000 crore rupees. And this is important from the perspective of dry powder to grow going forward, especially in a scenario when lending is now looking much more attractive. There could be an increase in the lending velocity with rates having come off.
Yeah, the top three on my list, and all three could show some reactions, by the way. So Lloyds Metal is the first one. They have got an environmental clearance for the capacity expansion and will increase the capacity to 55 MTPA. This was the big one that was pending for a while, and this having come in could actually spur the stock. Remember, actually, if you look at steel companies or metal companies, this one has actually had a run up as well. You see JSW circa 1,000, Tata Steel circa 100 to 150 and in that range. But look at Lloyd's Metal in the last 1.5 months or 2 months. I think it's had a rally from 1100, 1150 all the way. Over a 12-month period, 100% rally, yes. But in the last couple of months as well, it's probably that one steel stock which has already had a rally. So be mindful of that. But this is a big piece of news for them. And therefore, you might well see the stock maybe showing a bit of a reaction. One MobiKwik, we're speaking of promoters selling stake, and Net1 Applied Tech is going to sell a stake via block deal today. It's a small one, 139 crores, not a very large one, but the floor price is at 225 rupees per share, which is a 8.4% discount to the current market price. Depending on what pricing and how it is done in the block window, how well it is absorbed, you could see some reactions on one MobiKwik. So if not absorbed very well, you could see the stock staying lower. If absorbed very swiftly, then maybe, just maybe, this marks the near-term bottom for this one. So keep an eye out. And yesterday, by the way, there were a lot of stocks on which there were some clean-out trades done as well. But the one that stood my eye was the buying that happened in Jaypee EKT India. Nippon India Mutual Fund bought some significant quantum of shares into this stock. Was up 2%. It's a small stock, but Nippon India Mutual Fund bought 40 lakh shares. Small cap fund bought 20 lakh shares. And the normal buying happened in 19.25 lakh shares as well. So clutch of buying done into Jaypee EKT India by Nippon India may react a little bit. So keep an eye out for this one as well.
So a lot of action in the primary markets, guys. So just wanted to take our viewers through what has been happening, because so many IPOs are open right now, and as much as the enthusiasm will be there, maybe in the cash markets you might see a bit of choke on volumes. So here are the updates for HDB Financial Services. Yesterday was day 1, 0.37 times was the subscription on day 1. For Globe Civil Projects, the issue was subscribed to 15 times on day 2. Ellenberry Industrial Gases, the public issue was subscribed 0.31 times on day 2. I believe there was no QIB subscription at all on Ellenberry. For Kalpataru, it was subscribed to 0.17 times on day 2. Sambhav Steel Tubes, the public issue was subscribed to 0.6 times on day 1. Of course, all of these issues are of various sizes, so keep that in mind. But I did think HDB would see a little more buzz, to be honest. I know the employee portion is fully subscribed, but
it could well pick up. It generally does, na? Second day on.
Second and third day. Yeah. Yesterday, the management inadvertently, when we spoke to him about, what do you think about the subscription, because you kept the pricing slightly lower, etc. He seemed fairly confident about the fact that he said, look at the anchor book, and therefore you will see in how it gets subscribed on day 3. So let's see. That's a large issue.
It's a large issue, and there is so much out there. I mean, it's like, one of those Fridays when there are 5 or 6 multi-starters that release.
Tamanna, you're actually right, because think of it this way. A 900 crore QIP by Marathon got completed yesterday. There were 4 or 5 block deals in which mutual funds have applied. The anchor books have been applied, and apparently 18 more IPOs in the next 10 days. SME and main board milake.
So you have that much money to buy your ticket and your popcorn.
And by the way, I think there's
which movie / IPO are
there's
going to
also the possibility that everybody assumes, a lot of retail investors assume that HDB to milna hi nahi hai. So what is the point?
Yeah, but the QIB book should get done. Sure. Let's wait for that.
No, I'm sure it'll pick up by day 3. All right, talking about fundraisers, it's not just IPO. SBI has proceeded with its 25,000 crore QIP plan. It's appointed investment bankers. Union Bank is also raising money, about 6,000 crore rupees. Why are these mega banks and, your top-of-the-line PSU banks raising money? Harsh is joining us for more details.
Well, yes. The big one is obviously SBI. It's the first equity raise they're doing in 7 years, and that's why, and it's a large raise as well, 25,000 crore, no means small, but of course in relative terms, when you're looking at SBI's book size of 50 lakh crore nearly, it's obviously small in relative terms, but nonetheless it's a large raise. When you're looking at the tier 1 capital of SBI at the end of Q4 FY25, it stands at around 12.11%, which is largely in line with the threshold. So this is a little bit to do with shoring up of tier 1. But when we had received commentary at the end of Q4, the management had suggested that they would do a raise as and when they see growth kicking in. And that is really the question. Are they starting to see growth kick in? or is this just to cushion the tier 1 capital? We'll have to wait and watch as to how that plays out. But most importantly, there are 3 big levers which they are clearly seeing. One is the 50 basis point rate cut which has happened. The second one is the liquidity infusion, and third is project finance. The diluted norms obviously give huge advantages to lenders, and likely that's what they are seeing when they are doing this raise. So that's SBI. When you're talking about Union Bank, around 75% held by Government of India, so no further dilution per se required, but they're diluting nonetheless. Board has approved a 6,000 crore fundraise. 3,000 crore is going to be equity, 3,000 crore in bonds. Out of the bond, 81 is going to be around 2,000 crore. So the tier 1 capital is going to get showed up by 5,000 crore. The current capital adequacy of the bank is 18%. The tier 1 capital is a shade below 15. The market cap is at 1.1 lakh crore, just for perspective, and therefore kind of rounds up both those fundraisers.
All right, so basically you're shoring up the dry powder in order to lend more, and that bodes well for these banks going forward as well. But let's take you through the watch list this morning. Balaji Mines first up. It's set to manufacture isopropylamine, and this is something to watch out for. JSW Energy has signed a pre-purchase agreement, or rather power purchase agreement with NHPC. Texmaco Rail has gotten an order worth 535 crore rupees. Canfin Homes has approved fundraise. We already told you about that. Western Carriers has gotten a 558 crore order as well. You have CEAT that has approved a debt raise to invest in an arm. You have Tejas Networks, which has gotten into an agreement with Rakuten. We'll get you more details on that in a bit. SMS Pharma, the inspection has ended at the Telangana unit.
Okay, RCF Chemicals, Department of Fertilizers denied its request. This is a thumbs down. You're going to see some pressure on the stock. PB Fintech as well. Founders will be selling a 1.1% stake. I mean, what's with all the promoter stake sales? They're just not ending. You have any stake to sell, Neeraj? This is a good time.
NDTV Profit should be tring, Mr. Gautam Adani.
Okay, now more, you have Dr. Reddy. Citi has cut its target as well. And I think I would add MobiKwik to that lot. A block deal today, so that might see some pressure. Just one more stock if you wanted to look at would be JSW Steel. And I thought this was interesting because this was in the works, but they have now gone to court for a review on their decision to stop their process of buying Bhushan Steel. That review petition will be in court today. And from what our reporters are saying in Delhi, that the government is indicative on its side to tweak the rules so that this kind of situation does not arise again. When you've gone through the whole NCLT process and then the Supreme Court comes and says, painful. No. So that is one to watch.
It's a large amount of money on the
and an effort gone in.
Okay, so let's talk about the latest on defense, and we've spoken about the recent profit booking that you've seen in the defense pack, but apparently NATO allies have agreed to increase the defense spending from 2% to 5% of their GDP, and Anushi is joining in to tell you what this means for Indian defense companies. Anushi, recently we've been focusing on the fact that Indian defense companies are increasingly making for the world. You have a larger export share in their overall revenue pie. Could this be going up further?
Well, it's a very big update that we are seeing in terms of what the defense sector would be in terms of where the exports are concerned. Now, what the decision is that NATO has decided to increase the defense spending to 5%. So that's the overall target that we are looking at by 2035. This is moving from a 2% of a guideline to a 5% of GDP by 2035 is what we are looking. This includes 3.5% on core defense spends versus a 2% target currently, along with that of 1.5% on other security-related expenditure, including infrastructure as well. Now, what this implies is with this boost in terms of where the defense spending budget is concerned in terms of the GDP mix also that we are looking at, this implies extra billions flowing to be added annually across the members that we are looking at. And NATO countries, if you see, have spent over $1.3 trillion on core defense in 2024. So it's a big shift in terms of where the growth is concerned. Stocks which could be in focus in trade today is the overall defense pack. Now, it has been in the correction mode in these last 2-3 sessions on the recent geopolitical developments. But here, HAL and BEL is something that we should be focusing on, as they already have demonstrable inroads in terms of where this new update is coming in, and products align with the mid-tier NATO requirements. If we talk about HAL key products, this includes the Tejas light fighters, combat utility helicopters as well. While for BEL, the important products would be something like the air defense system, which is the Akash Tir that we are seeing, radars, along with electronic warfare suits and communications as well. In terms of where the export opportunity is concerned, we just saw in FY25, the number came in at 23,622 crore. Now the government's target is to bring this number to 50,000 crore by FY29, which we are looking at, which is likely feasible considering now the new opportunities which will come from the NATO increasing their defense spending as well. So overall defense sector could be buzzing in trade today, so do keep that one on your watch list.
All right, we'll take a very quick break. Let's pull up the implied open before we go in. I wonder if defense will buzz today because it's been 2 trading sessions of a complete down day and a
defense will do an IT? Tic-tac-toe?
Tic-tac. It's too bulky a sector to move in that sense.
IT is too.
IT is true.
Market cap
I agree.
is huge.
Talking about IT, of all the things that came out of the Infosys AGM yesterday, this really caught my eye. Nandan Nilekani saying, we don't want to say it out of context, we'll play that bite for you after the break. But him saying this is one of the most challenging times that I have seen. What does that mean?
Yeah.
We're going to talk about it after the break. Implied showing you'll open up in the green, but no massive gains, but mildly in the green. That story coming up after the break.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Back with India Market Open right here on NDTV Profit. Let's pull up the implied open. About 30 or 40 points in the green, I reckon, is what we'll start off with. And you expect the markets to be decent. I mean, because the world markets were quiet, but our markets had a fabulous day yesterday, especially the broader end of the spectrum. You likely believe that will continue. Let's talk about whether that will happen or no. Bhavin Mehta of Daulat Capital to talk about charts, the derivatives as well. On the fundamentals, Nirav Asher of Latin Manarlal Securities. Gentlemen, both of you, thank you so much for taking the time out. Now, Bhavin, good morning to you. A lot of your peer sets in global brokerages, local brokerages are talking about cup and handle formation, some other formation, and likely breakouts which will take the indices higher. Do you echo that? Do you believe the Nifty and the Bank Nifty, or the Nifty, let's start with that, is slated to move higher? Would you be a buyer at the current levels, and what are the levels that you're penciling in?
Good morning. Yes, so definitely yesterday's move was significant one. Today it will be crucial to watch out if we sustain, because number of times we have seen that Nifty breaks out above a crucial level and the very next day we see a reversal. There is no sustainability at higher levels. Even if you look at yesterday's trading session, prior to yesterday's trading session, what we had seen was Nifty making a very strong move at start of the day, followed by a very sharp sell-off. So it will be crucial if Nifty holds on to this level of 25,200, then a probability of hitting that level of 25,800 to 26,000, moving closer to that all-time high level, definitely will be something that technically we will be watching out for. At the same time, what we have also observed is there is a good base formation in the recent consolidation pattern around level of 24,500 to 24,800. So as long as this level is managed on the downside, I believe we would be either moving into that range or a consolidation phase, or if we are able to hold on to this level of 25,200, a probable move towards level of 25,800 to 26,000 is very much likely on the cards.
Quick question on expiry date today. What are the key aspects that you're focusing on in the derivative space? Overnight or in yesterday's session, you saw increased put writing around that 25,200 mark. So the question that some people are asking is, does that form a very near-term support for the Nifty 50?
Yes, so yesterday we have seen good amount of put writing at 25,200, 25,000 strike as well. So that creates a good base for the index. As long as we see unwinding of call, specifically at higher strike price, that ideally should remain a positive aspect. As far as what we are watching out for on the roll side, we are particularly watching out for how the roll cost behaves this particular series. Notably, next series is slightly longer one compared to this one. We have expiry towards end of the month. So this is going to be a longer series, the next one. Usually what we have observed is that roll cost tends to remain higher when the series are longer in nature, given the effective costing for the futures. Our sense is that there is no significant aggression that is being observed on the derivatives data front. However, as long as put writers are active in protecting 25,000 as well as 25,200 strike on the downside, and we see unwinding of call at a higher strike price, there is a likelihood that momentum on upside could continue to remain aggressive.
Okay, what are the stocks that you'll pick this morning, Bhavin?
Yeah, so there are two stocks that we are watching out for. One is Bharat Forge. It is back to a very crucial support level. We have seen good amount of sell-off in defense recently. Earlier also we were positive on this particular stock. Our sense is that watch out for this particular stock in the range of 1275, 1200, 1270. High probability that from current level it will again form a base and witness a move on upside. We have a potential price objective of 1380 for this stock. Stop loss for all long should be at 1220. Second stock to watch out will be Infosys. Stock is currently quoting around level of 1610. We have seen a very strong move along with a positive crossover on averages. The short-term averages in particular, good base formation just below 1600. So keep a stop loss of 1575 and play on the long side for target of 1675.
Okay. Bhavin, how are you looking at, an SBI today? Only because there's this big fundraise, the stock is going to be in focus. Wondering how you're seeing it on the charts?
So if we talk about SBI, what we have seen is that the stock has been extremely ranged around this particular zone of around 800. Very strong base formation already at 780, 775. So my sense is that if you get this particular stock in that range of 775 kind of levels, one should look to buy. On upside, 820 remains a very crucial resistance zone. So if we break out above that particular level, nothing like it, the momentum could be positive. But till the time it does not do that, it will be largely a range trade, and it has been in this particular range since April onwards.
Nirav, I'll come to you on SBI in just a bit. Allow me to just mark one piece of information that our viewers should pay attention to first. And this is that Ola Electric sales continue to fall while TVS Motor remains the market leader in the EVs two-wheeler space. It's changed positions quite dramatically in that space, and one to watch. We've got Puneet joining in to tell you about the key analysis that he's picking up from the latest Vahan data. Puneet, what are you picking up?
Well, thank you for that. So we look at Vahan data, which is the actual and the retail sales, which people like you and me can purchase, and this is the real, metric to track in terms of auto sales as well. It's clearly reflecting three key trends. First is, of course, in the two-wheeler space, that after the previous month where we saw a lot of buying in terms of wedding action, that seems to have subdued now in June. But we've seen fall on a both YOY basis as well as a month-on-month basis for all two-wheeler makers. The least degrowth has been seen in Eicher Motors as well as TVS in the listed space, and we've also given Suzuki. And this is indicating two key trends, that scooters outperforming motorcycles and people are purchasing premium 350cc and above bikes, and that's reflected in numbers of Eicher Motors. The second trend, which is very important, is the EV sales now. For Ola Electric, it's down 65% on a year-on-year basis. So we're comparing June to last June. It's down 65% for Ola Electric, while all the other players are up between 40 and 70%. How does that change the market share? Ola Electric has now slipped to number 3 position, and it's actually on the way to slip to number 4 if these growth metrics target. And Ather Energy, which has been the number 4 player at 14% market share for a while now, could actually overtake Ola given the current growth metrics of both the companies. Number 1 player continues to remain TVS at 26% market share. It's the product strategy that's been working very well. And finally, in terms of cars as well, both in terms of YOY as well as month-on-month, the car sales have actually fallen dramatically. 20% is the minimum degrowth reported by all companies, including the likes of Mahindra and Mahindra. So it's been a tough month for the car makers. What's also interesting is that something like a Tata Motors has had the highest fall of 41% in the month of June. BofA also wrote a note on this. They've continued to prefer 3 stocks, M&M, Maruti as well as Eicher, reflecting the trends that's visible in the numbers as well. So overall, a tough month expected of June. Some more commentary on how Q2 could be once these results are out as well will be something to watch out for.
Thanks so much, Puneet, for putting that into perspective. And by the way, Puneet pointed out that these are the key numbers to track. You're wondering what happens at the start of the month. That is wholesale data that every company sends out. And that's basically the metal that gets pushed from the factory to the dealerships. So you have to account for inventory as well. It's not necessarily the best picture. So look at that data on a quarterly basis and you will be better placed. But Nirav, I was going to ask you about State Bank of India. It's a considerable fundraise, 25,000 crore. Details of that have emerged. And it's not a new story, but it bears speaking about. What are the implications of this? You have capital adequacy which would have to be brought up if growth has to sustain. And what levels are you anticipating loan growth to be at?
Well, good morning and thank you for the invite. Actually, State Bank of India, we have seen that loan growth has fallen short of expectations. And I think at this point of time, with the interest rates having come down, there is going to be a necessity for growth capital. So there's going to be essentially the need for that dry powder, which you can gather for doing the lending, as we see that lending is likely to pick up in the near foreseeable future. So I think this fundraise could be essentially a part of this exercise, and maybe it may propel the loan growth into double digits, into healthy double digits going forward. So I think it is going to be a step in the right direction from a medium-term perspective.
Nirav, what do you, make of Vodafone? And I know that all the analysts we speak to, and I've spoken to you before about this, there is a bit of concern about whether Vodafone is going to be able to make it despite all of the support. But one after the other, they seem to be making moves in an attempt to shore up. You've seen the stock up also the last couple of days. Now news about this massive debt that they want to pick up. Do you think that there is a short-term trade here, or at least an exit opportunity for investors that have been stuck?
Well, there is never going to be an exit opportunity, but traders will keep entering the stock, exiting the stock, and there will be all kind of confusion which is likely to prevail. And this is on account of the simple reason that someone out there has made up the mind that this company has to survive, come what may. So I think it's going to be a confusing kind of a scenario, and you'll have all kinds of retail investors who will thrive on trading in this stock. And I think it's best to avoid the stock from a fundamental point of view.
Fundamental. What about on the charts? Are you seeing another up move today, Bhavin, for Vodafone?
So for Vodafone, definitely the move could be sharper. We may see a retest of 788 kind of a level. However, one stock that we have been highlighting based on the recent news data is in the Tower, where good amount of strength is being observed. So watch out for this stock versus Vodafone. Vodafone largely remains kind of range between with the supply at kind of around 8 to 8.50 level. However, in this tower, what the price projection are indicating, believe that stock is moving closer to 450 in a very short period of time.
Okay. Let's go across now for another stock that should be on your radar. I don't know if there's going to be impact on BSE or of what kind, but two news pieces to look out for. One is then they put out an exchange filing about a notification from SEBI. They've had to pay a fine. And the second is that now there seems to be a clear timeline for the NSE IPO. I'm going to start with the first one. It's a strong message to market infrastructure institutions. In fact, SEBI has imposed a 25 lakh rupee penalty on the BSE for multiple regulatory lapses. What are these lapses, Charu?
Hi, so the market regulator has come out with a 25 lakh penalty on the oldest bourse of India, that is the Bombay Stock Exchange. Now, we have to see that while the fine might not be very exorbitant, the violations are quite grave. So what the regulator found was that BSE had the system in place where the fair access to market for the general public was breached, because in 98 out of 100 cases, the regulator found that the internal staff of the exchange was finding out about the disclosures and important price sensitive information before the regular public. In fact, in 6 out of 10 cases, the paying clients of the exchange was getting access to the information regarding the disclosures on the website before the regular public. Apart from this, there were several gaps and lapses also seen in a way that brokers could have taken advantage of the system. And BSE went up to the regulator and said that it did not directly profit from any of these lapses, but the regulator said that being the front line regulator itself, the exchange should have had stronger measures in place to avoid such gaps.
Okay, stay with us, Charu, because you have some information on what's happening with the NSE IPO timeline as well. This is one which has been watched now for so long that there's a lot of interest in when that IPO will actually make the cut. What are you learning?
Yeah, Tamanna. So the NSE IPO has been all the buzz for the past 1 week at least, and even before that. So what has happened now is that last Friday, the exchange went up to the regulator and said that they are, interested in settling all the pending co-location as well as dark fiber cases for an amount up to rupees 1400 crores. Now, what has happened here is that the exchange has, now applied for this settlement, and if this is approved, which is very likely that it is going to be approved on this amount itself, NOC, a no objection certificate, could be issued. Now, how this is going to happen is that first the settlement is going to be approved, then other obstacles that were highlighted in a February letter to the exchange are going to be, dealt with, and then an NOC. Now, this could take up to 2 months. After this, the sources have told NDTV Profit that they will, start working, the exchange will start working on its DRHP from the very scratch. Now, that is going to take a couple of months, and it is, something that could likely be filed by December, and then based on the approval and the nods that they receive from the regulator, they are planning on, launching the IPO by next year. But also, that is also going to depend on the market conditions at the time. Is the market going to be conducive at the time? But based on the regulatory timelines, we can say that by next year, the IPO, could hit the floor, and the DRHP could be filed by December, and NOC could be received in 2 months.
Okay, so you're looking at maybe April or May in the next calendar year. Thank you for that, Charu. All right, we'll get to views on exchanges from both our guests, but before that, time for that segment which you wait for every morning. Swamit, we've heard on the street. Swamit, your strike rate's been pretty good in the last couple of days, and since yesterday, 2 things have been now announced.
Well, yes, couple of things that have been already announced is firstly on PB Fintech, the block deal where Yashish Dahiya and Aloc Bansal will be selling close to some shares worth around $106 million. So that block deal is likely to happen today. Apart from that, Lloyd Metal has received the clearance, environmental clearance for increasing its capacity by around 55 MTs. What the exchange announcement has come in, we had indicated this. And on 17 June, we had also indicated that a big domestic broking firm will initiate coverage on pipe companies Astral, Supreme and Prince Pipe. And Motilal Oswal has in fact initiated coverage on all these 3 companies. Astral, it's a buy rating with a target price of 1800, Supreme buy rating with a target price of 5400, and Prince Pipe with a buy rating and a target price of 500. Apart from that, one stock that has been buzzing, other stocks that have been buzzing on street, firstly it's Delivery. Now the dealers are indicating that there could be a block deal that could happen today in trade. Nexus Ventures is the likely seller, and the block deal size is expected to be around 500 crore rupees. So keep an eye out for Delivery. If not today, most likely tomorrow this block will come into the market. Deccan Cement is another stock that we need to keep an eye out for. There could be a corporate development here. Dealers are indicating that the company might be acquired by a larger peer, and the price which they have indicated is anywhere between 1100 rupees to 1200 rupees. So keep an eye out for Deccan Cement as well. Then there is Vedanta and PNB Housing. Multiple dealing rooms have suggested that clients positional buy trades in both these stocks. And lastly, it's Trent. Dealers indicated that there are some sell flows at higher levels on the FII desk when it comes to Trent.
Okay, I just want to, okay, so the tendency is to miss some of that because I've been taking notes and I'm hopeful that our viewers have as well. I'm going to read them out very quickly. Delivery, Deccan Cement, because there could be a buy, Vedanta, PNB Housing and Trent, most importantly. Trent has been seeing a lot of up move in the recent past as well.
Right, the up move, in fact, we were talking about it yesterday, it's on all consumer facing stocks. And Trent is one of the beneficiaries. But there are some sell-flows on the FI desk, could be because of some profit booking coming in. But Delivery is something that we need to watch out for. Block deal that could come in today or tomorrow, 500 crore. Nexus Ventures is the seller. Fantastic.
Interesting. Okay. By the way, just 500 crores is how large from a Delivery perspective?
Around 1.2% equity.
Okay. This should not be...
yeah, but the important thing here is that this will not be the last of it. There could be more coming.
The overhang may continue. Okay. Samit, thanks for putting that into perspective. Well, Nirav Asher, do you track any of these names and either a Delivery or a PB Fintech which have seen block deals? If not, maybe a Jaypee, EKT India on which Nippon Mutual Fund has bought large shares yesterday?
We've been tracking a couple of themes. One is the auto ancillary space, Jaypee, EKT. I think there have been certain auto ancillary companies which have been neglected by the markets, which were overlooked by the markets, and they're available at very, very mouth-watering valuations. So we like Jamna Auto from this pack. We like Munjal Showa and Jaypee EKT. They are available at very good attractive valuations in terms of price to earning multiples, market cap to sales. So there's definitely an opportunity over here. Yesterday we did see some action in other auto ancillary stocks as well. We saw action in Varroc, Endurance, Suprajit, etc. So this space is really buzzing at this point of time on the back of attractive valuations. The second theme is relating to the consumption space. I think we are seeing some very good traction in consumption, especially in the light of the fact that Titan is likely to report a more than 20% growth prospects for the entire year. We are looking at some good pickup in DMart also, because the store count has been increasing. I think they have around 422 stores. And Trent also could be an opportunity because of the simple fact that they have reiterated that they are looking at 10 times growth in the next 10 years, which means a compounded annual growth rate of approximately 25%.
Okay, so Trent in focus, one of the stocks we have to look at. I mean, I'm just wondering, Bhavan, if you're seeing some rebound, perhaps IT and defense, both spaces. Any picks over there, and will you see some rebound, you think, in defense after being down in the dumps for a couple of days? Of course, news here, as Anushi reported a short while ago, that the NATO push to increase defense budgets for all of those countries, and we have now defense companies which have that connection already with NATO nations and our suppliers there.
Yeah, so what we like is particularly IT as a sector, anticipating a possibility of short covering rally that we have seen earlier to continue. High probability this index to break past level of 40,000 on upside. This largely should be led by something like Infosys, CoForge, Persistent. All the stocks are on our radar on the long side. Even Tech Mahindra kind of stock has seen some decent aggression on the long side. So these are few of the names that we are anticipating to move higher. And this is, as a sector, we like the few of the stocks where we can possibly see continuation of short covering rally. As far as defense is concerned, we are watching out for a key support level. So most of the stocks have witnessed selling pressure over last couple of trading sessions. There could be a potential pullback. However, we'll be very cautious given the kind of move that we have seen in majority of defense names. Be it Bharat Electronics, be it Hindustan Aeronautics, we have seen a very strong move over last couple of weeks in all these names. So for the timing, the best case scenario to us will be the stocks witnessing a range trade. However, if they break 50-day EMA, so for something like Hindustan Aeronautics, the crucial level to watch out on downside will be 4,700. If that level is broken, then it's a kind of a concern. Until the time that is not taken out, anticipating 4,700 to 5,200 is a kind of a range trade. Of course, the volatility or the beta nature of the stock continues to remain high, so the range would be much higher for majority of these stocks. However, the best case scenario to us will be consolidation above 50-day EMA for many of the names.
Okay, some important flashes on your screen, and I believe we'll get in Vishwanath in moments from now to talk about this as well. But okay, I'm told Vishwanath is ready. So let me first go across to Vishy. Vishy, I presume this is your story. Tell us a bit about this, because apparently, as you are saying, 6 bidders have submitted the financial offers for Jaypee Associates assets.
That's right. So Neeraj, these 6 bidders include Adani Group, Vedanta, Dalmia Group, PNC Infrastructure, JSPL and Suraksha ARC. Of these, I think 5 bidders are more or less clear. But the 6th bidder, which is Suraksha ARC, is sort of a proxy because they have bought a separate asset within the Jaypee Group, Jaypee Infratech, and therefore they're participating in this offer. But having said that, what lenders are looking out for, they haven't opened the offers yet. Once they open it and review it, what they look for is a good cash value upfront. And if they're not finding that, what the lenders are prepared to do is strip the company into multiple assets and sell individual assets to potential bidders. As we know, Jaypee Associates, so Jaiprakash Associates owns assets in cement, power, hospitality, real estate, all of these different sectors they have assets in. And if they believe that the sum of parts is going to be valued higher than the total asset group, then they may go for that. But as of now, 6 bidders have submitted the bids. Later, over the course of today and tomorrow, the creditors will look at all these offers and decide whether they need to go ahead with this or not.
Vishwanath, can you give us some context about how, what is currently the value of these assets? Because this is a case that has been hanging fire, and why this company had to go into insolvency. Just a very quick sort of a context setting of why this is a crucial story this morning.
just to set the context right now, Jaiprakash Associates is a perennially stretched company. It's been under stress for a good part of the last decade or so. They have built a lot of assets in the Delhi NCR and Noida regions, and therefore there is some interest amongst bidders to come and buy these assets, which includes, as I said again, cement, power, real estate, all of these prized assets, but they're not doing that well at this point in time. In fact, the debt burden currently, according to the creditor claims, is over 57,000 crores. So that's a big amount that creditors are awaiting to get back. As far as valuation is concerned, if you take all of these assets together, this includes a lot of cases that are pending with the government as well as related parties. So obviously that will bring down the value of these assets over time. And that's why probably lenders have kept this option open that you may want to strip the company into multiple assets and sell them to different people, because that will have a better sort of valuation at the end of it.
Rishi, just one quick very question. What's the timeline for this?
So timeline is anybody's guess at this point, because as I said, it's been a stretched company for a very long time. As far as I remember, 2017 is when the first insolvency situation started. So it's already been 8 years, and this insolvency is just literally in the first 2 or 3 stages of the process. After this, there's going to be multiple bidding rounds. Amongst these 6 bidders, there will be a competition. You will have to select the highest bidder. And if that...
Okay, I think we lost him. But yeah, it's a stretched timeline for sure. Bhavin, before we let you go, very quickly, Bhavin, 30 seconds. Is there a trade on this Jaypee Power stock? It's been buzzing off late.
Hi. We have not been tracking aggressively Jaypee Power, but maybe few of the cement stocks ideally should be watched out for. We have seen a very strong move in something like Ambuja Cement last couple of days. Even Ultratech is something that we are watching out for. So these are 2 names from cement as a sector.
So he's recommending Ambuja and Ultratech because there's been some uptick there. Doesn't track Jaypee Power. We'll come back to Nirav on this after a very quick break. Bhavin, thank you so much for joining in today. Viewers, stay tuned. We'll be right back.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in?
What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the
Welcome back. You're watching India Market Open. Just a couple of minutes left to go for the pre-open session. This is going to be an important session because, this is a market looking for direction, right? Your implied open is talking about between a 35 to 40 points bump up at start, but some pressure perhaps because you're also going through monthly expiry. Monthly expiry today, underlying factors, though, continue to be bullish. One space to look at, and this is something that Infosys Chairman Nandan Nilekani said at the AGM yesterday. He says there is uncertainty unlike anything he has seen before. He was speaking at the AGM on the challenges faced by the IT sector. Listen in.
Every business sector is facing fundamental challenges. Automakers need to transition to electric vehicles. Pharma companies need to get better at using AI for drug discovery. Logistics firms need to manage supply chain reordering. Financial services are exploring tokenization. Energy companies need to reassess the long-term demand for their products. Utilities must prepare for a very distributed future. Manufacturers need to successfully integrate robots and 3D printing into the mainstream processes. And service companies are competing with more efficient AI agents. Every type of business in every part of the world is having to first adapt to rapidly changing business and technological disruption before advancing into an uncertain and unfamiliar future.
Okay, so uncertain and unfamiliar future. I mean, it's coming from a person of the pedigree of Nandan Nilekani and giving you a sense of what the industry is going through. Just a quick word from Sushovan Naik. He's research analyst at Anand Rathi Institutional Equities and looks at this space very closely in terms of IT. What was the key highlight for you from the Infosys AGM, Sushovan? And when I heard this, it just struck me that this is something that the entire industry is going through, articulated by none other than Nandan Nilekani.
Yeah, hi Tamanna. This is Sushovan here. Is my voice audible?
Yes, please go ahead.
Yeah, so I think he has just echoed what's basically happening in the present macro environment. Right? There are a lot of headwinds if you look at tariffs, and then you see these wars that are happening. All of that will obviously have an impact on end industries, and given that IT is one which is serving these end industries, that is a short-term headwind part of it. And if you look at the other aspect, which is the AI-related part, obviously Gen AI is going to significantly improve productivity, and these productivity-related benefits would potentially result in certain amount of revenue deflation in the Indian IT, at least in the short term. But in the long term, it's actually going to be quite beneficial for Indian IT, because there's a significant amount of work that is also going to come about, is what my view is. But then there will be short-term headwinds. That is fair thing.
Okay. So from that perspective then, Sushovan, the key question to ask is, where would you place your bets and who would you be betting on? You have large cap IT companies, some of which have relative valuation comfort, some would argue, but you have mid cap IT companies which some say are the ones to bet on if you want to bet on that future growth.
So I think it is a mix of both. I guess within the large caps, if you look at it, the ones which are the most agile to the AI transformation are the ones which will significantly benefit. So, for example, if you look at Infosys, which has come up with its a tool called Topaz, if you look at something like an LTI Mindtree that has come up with Blueverse, which is also its AI-related platform. So I mean, it's depending upon which are the ones which are the most agile within the IT space. Within the large caps, these are the ones which at least we like. And within the mid caps, obviously there are sector-specific headwinds. Like for instance, if you look at the ER&D space, right? So thanks to tariffs, someone like an auto ER&D players are going to be impacted. But then there are these very agile players like Persistent or KoForge, which have adapted to the Gen AI, have their own products by which they are able to create potential beneficial outcomes for the customers, right? And the other way to look at it is, if you look at the read-through for various international IT companies, BFSI is the only segment which has benefited or which has grown significantly. So the BFSI-focused IT plays are the ones which will also benefit. So someone like an Emphasis is in the mid-cap space is what we really like because of the higher exposure to BFSI. And then we have KoForge, which also has higher exposure to BFSI. Persistent has been growing, so has been KoForge. So That's the way I would look at it.
Got it.
I don't know if I've answered.
No, you have. Thanks so much for giving us that perspective. So, Shovan is speaking to you. Thanks for speaking to us this morning. We're joined by Shrikant Chauhan in minutes before the start of trade. Shrikant, as always, thanks so much for joining us. Good morning to you. And do you see a little bit of consolidation? Of course, we've broken through that barrier on the upside, 25,200 in trade yesterday and held above that. What is the trend for the benchmark Nifty 50?
Good morning, Alex. Good morning, everyone. See, for Nifty, it is in the range, although we are seeing a gradual upward activity, but it is still in the range, and we need the market to sustain above the levels of 25,320, which was the highest point of the previous day. But at the same time, today, as it's a monthly expiry day, and if we consider this time the put call ratio, then it is around 1.20 of the same expiry, which is on the higher side. Means in the past, in last almost 5 to 6 series, we saw the put call ratio somewhere close to 0.65, 0.85 sort of levels. But this time it is around 1.20 levels. It indicates that FIs are still short on the market, and in case if something comes really positive in today's date, or let's say the market starts comfortably sustaining above the levels of 25,300, then in that case we can even expect short covering. So the possibility of 25,500, 25,650 to achieve increasing in a bigger way. And in case if there is any correction, then I don't think that the market can sustain below the levels of 25,100, because the writers have shifted the base from 25,000 to 25,200. So max if there is any correction, then 25,100 is the level to watch out for. I think that should be the final stop loss for holding any long positions. For Bank Nifty, it is in the neutral range. It is not crossing any important levels, but at the same time, it is above its important support levels of 56,100. So there also we can expect gradual activity towards 57,500 levels.
Okay, let's quickly run through the picks that you have this morning. What are you picking today?
So we saw some activity in tech stocks yesterday. Infosys, TCS, HCL Tech, they did well. In fact, we saw recovery in almost all the IT stocks yesterday. So we are expecting some short covering in this particular space. We can expect activity in TCS, which is around some 3450, 3440 sort of levels. There I'm expecting stock to move towards 3600. We can keep a stop loss at 3370 for the same. And the other stock on which we are bullish is Nestle. There also we are expecting stock to move towards 25 levels. It is in the, I'm to say, it has been consolidating, but now it has broken the range. So we can keep a stop loss at 2350 for creating long positions on Nestle.
Okay. Watch out for this as well. I mean, 8 minutes gone. I wonder if IT stocks have any reactions. I wonder if railway stocks have any reactions as well, because Texmaco has won an order and that stock might be reacting. The question only is, are some of the others. Texmaco is up 8%, by the way, 188 at 14 rupees higher. I wonder if Titagarh and Jupiter Wagons, etc. have any reactions at all or no. It's a Texmaco specific thing. Okay, on to our big brokerage call for the day. Citi maintains sell rating on Dr. Reddy's and also cut the target price to 990. That's, well, about a 25% downside if I'm not wrong. Harsh Johnson with more on this report. Harsh, good morning. Why have you chosen this?
Well, it's a 25% downside, and they've they've cut their target price as well. So what they're saying and what's really standing out is they've done a study of the Canada market, which is what most analysts are most bullish about, where DRL is concerned, and they're saying that the GLP-1 penetration in Canada is already at around 60 to 80%, and therefore there's limited scope for a growth kicker to come from there. And this is higher, 60 to 80% higher than the US. So in comparable market, in comparable terms, it's higher. Why is that so? And they're trying to hypothesize here. Adequate supplies and lower price points is likely the reason why the penetration is higher. The street expectations, therefore, of semaglutide adding around $150 to $300 million in sales may need to be tempered, is what they are saying. The street is expecting 2 to 3x growth, while Citi's growth estimates are much more tempered at just 30% with regard to the overall market of Canada. and therefore that contribution which Canada may bring to DRL may be far lower than what the street is penciling in. They are saying that this is at a penetration of 16% versus the 13 to 14% penetration estimate in the US by FY30. So FY26 estimate higher, and despite that, Citi is saying that there's going to be a markedly lower number in terms of the total cumulative market in Canada. The EBITDA impact will likely be large and further impacted by Revlimid sales from H2 FY26 and PLI incentives going away. Both of those will likely have an impact on EBITDA, which will be difficult to offset. They've cut their FY27 EPS estimates by another 5%. Now the FY27-28 EPS estimates are 25 to 26% lower than the street consensus. And of course, there are risks to this. They are saying that value accretive acquisitions, sharp cost cutting, or surprise approvals could well play a downside risk to this largest 25% downside that they see.
Got it. Okay. Just a couple of names from the broader markets that are moving quite substantially. You have the likes of Timex. It is once again at a lower circuit. Remember, the latest update from Timex Group or the promoter essentially has used the option to sell as much as they possibly can. They are selling stake, remember, and that was at a considerable discount to the price when the announcement was made, 35% or thereabouts. That was what I remember. So that's one stock that is down in the dumps today. Mishtan Foods also losing ground. You have Sadhana Nitro, you have Infibeam that is also losing ground. But on the winners, you have a few that are moving higher. And Texmaco is one that has already been pointed out. Interestingly, dollar is moving up as well. Dollar Industries up about 6% or so. Nitin Spinners, an interesting mover, just over 2,000 crore rupees in market capitalization, 7% higher, is moving in trade as well. Dodla Dairy in focus as well, up about 5%. Shrikant, from the broader markets, and we saw this yesterday, the small cap index moving up very, very smartly, 1.6% or thereabouts. So several individual names from the smaller counters are moving higher. How would you play that segment? And do you see anything interesting, at least in the early session?
So see, like whenever there is expensive valuations for large cap companies, and if the market stuck at same level, we see most of the time activity shifts into mid cap and small cap companies. So similar sort of trend we are witnessing since last almost 1 week. Yes, there are a number of stocks which are doing really well and they are crossing their important levels. Like yesterday, we saw a specific buying interest in almost all the India Bull real estate stocks. India Bull related group of stocks, and we saw some activity in media stocks. So in that, Z specifically, Network 18, they did well in yesterday's trading session. We can also expect activity in a few of pharma companies, especially from the healthcare side. They're already NH, Max Health, they're doing well. But we also like Lalpath Lab, which is around some 2650, 2700 sort of levels. There also I am expecting stock to move towards 2950 or 3000 sort of level. So a number of stocks, they are doing well and buzzing, and the most important part is that they are crossing their important levels. Like RBL Bank, which is around some 235, 236. There also, if we see the entire technical pattern of the stock, then it is indicating us that the stock can again move towards the levels of its important resistance level, which was around 270 to 275. So there is like decent upside that we can expect from all these mid cap and small cap companies. And it is, I think, maybe happening because of expensive valuations for large cap companies. But at the same time, we can also expect activity because of this specific buying interest from institutions.
Hi, Shrikant. Good morning. So, very quickly before we start the open, some stocks which have shown some signs of life in the pre-open. It's quite a tired pre-open this morning. But Tejas, that deal with Rakuten, Star Health have joined in with Medi Assist, seeing some action there. PB Fintech, that block deal and promoter stake sale seen as positive on the charts. Do you like any of these?
Yeah, technically we like PB Fintech, which is around 1865. In case if there is any block bill and stock corrects back to the levels of 1750, then there certainly we should look for adding this stock. I think gradually the stock is heading for the levels of 2050, 2100 sort of levels. We also like few healthcare related stocks, but in that specifically we like Star Health, which is around 430, 435. There also I'm expecting upward activity towards 450, 455. But broadly, I'm of the view that we need to focus more on those particular stocks which are from the microfinance or from the IBFC side.
Right.
NBFC.
NBFC. Yes, indeed. Well, more stocks to talk about. Remember, the broader markets are starting off quiet, but that's been the pattern the last few days, isn't it? The market starts off okay and then builds up during the course of the day. In today's session, it's really starting off okay, but this may be deceptive because we may see a build-up. Starting to move up a little bit. Banks are flat, much like yesterday. I wonder if IT, post Nandan Nilekani's comments, flat actually, no great shakes. Remember, IT anyways placed tic-tac-toe was up yesterday. Very likely will be down today. Bring up the mid-caps and the small caps because the small caps were on fire yesterday. And today's session, mid-caps are starting off quiet. Small caps, 0.37% higher. Maybe, just maybe, the broader market might have big movers as opposed to the large caps. But pull up the large caps anyways to show you what's moving out there. Not too many losers, firstly. That's the first point. Dr. Reddy's maybe 1.3% lower because of the brokerage note that we highlighted, wherein there is nearly a 25% gash on the target price from Citi, I believe, on Dr. Reddy's. Tech Mahindra is the other stock that Citi has given a sell rating on. So the Citi impact is being felt on the Nifty 50 stocks right now. On the gaining side, BEL higher, Nestle higher. I believe Shrikant Chauhan gave it as an idea. JSW Steel, with the conjunction that they filed in the Supreme Court with regards to Bhushan Power matter, up about 1%. Hindalco, it seems that metals per se are doing well. Maybe I'm guessing Lloyds at some point of time will talk about it. Bharti Airtel, Hindalco, Geo Financial are amongst the others. But yep, a very flat start with the volatility index down, a couple of brokerage note led reactions on the downside, and maybe consumption and metals looking like they are making the presence felt on the upside, but a quiet start.
Very quiet start. I think Nestle, with the consolidation of their ice cream business, may be showing some excitement, but apart from that, nothing else really that you're seeing this morning. Let's look at the broader markets, whether there is any movement over there. But having said that, a quiet start is not necessarily a bad thing on monthly expiry day. You have to wait for a bit to see the action, and you've been seeing that trend, but the markets start picking up about an hour into trade. 0.25% up on the mid cap, small cap doing much better, about 0.5% up. Actually, I think if you pull up the sectoral heat map, you'll see the small cap index right up there, and there it is on the top row, about 0.5% up. India defense is rebounding. We spoke to you about it. NATO wants countries to spend more on defense, and yes, there are now enough Indian companies that are supplying to NATO nations. We'll pull up the internals of the India defense in just a bit and show you what's buzzing there. Metal stocks in focus. JSW, Hindalco could be a whole host of reasons, and also as recession fears are ending and Iran-Israel conflict is now receding in the rearview mirror, at least for now, metals and overall the consumption story globally looks good. CPSE also doing well. Auto stocks are buzzing this morning. Nifty Realty having a bit of a down day. All right, that's the defense story we're talking about. Since it's the top gaining index, let's look at it more closely. Data patterns, Garden Reach, a whole host of them doing well. Only Unimech really down in the dumps there, relatively speaking. Let's get to specific stocks this morning. Star Health, and there's a lot of news flow. It's all about the news flow in a market which is, not showing a clear direction in that sense. The pact with MediAssist helping Star Health this morning. Balaji Amines, they will be manufacturing isopropylamine, and that is about 0.5% up on that stock. Texmaco, they have a 535 crore order. It's not the size of the order, rather than where it's coming from, and it's an international company, so which is why you're seeing that excitement about Texmaco, about 7% up. I want to look at rail stocks and allied stocks overall, because the phase 3 of the MUTP Maharashtra project has come in. New rail sets will be ordered. Jupiter Wagon, Sitagar doing well. BEL and BEML would be also supplying there, and both of them up this morning. Tejas Networks have an agreement with Rakuten. And let's look at what's happening with Tejas Networks. 4% up, was one of the key gainers in the pre-open session. This one I find interesting because they're block deals, right? Promoters are selling some of their stake. So is PB Fintech and so is MobiKwik. Both seeing some impact over there in the red. Are these opportunities to pick up any of these is the question, because stake sales are going either way. But with all of that supply coming in, some pressure in the first bits of trade. I would add delivery as well if we can. That also has about 1.59% of equity trading hands. No big impact there on delivery. Let's just pull up an RCF Chemicals. A request has been denied from the Department of Fertilizers. That stock mildly in the red, but no major moves on the negative side, I would say, Alex. Some buzzers here and there that are, you're able to spot.
Yeah, you've covered quite a few of them. In fact, I just add a couple to the list. Not moving on any substantial updates, but KNR Constructions up close to 5% from the broader markets, doing particularly well. You also take heart from the fact that and I'm looking at the Nifty 500 right now, you have more advances, considerably more advances than declines, 322 stocks right now. So that market breadth remains positive in the early minutes of the trading session. You also have a Narayana Healthcare, which is gaining quite substantially. It's up about 4% in trade today and doing particularly well. Trident Limited is up and about 3.4% or so. Wockhardt. So quite a few names in the healthcare space are making their way higher. I wonder what's buzzing there. So Wockhardt is up about 2.7% or so. Apar Industries, another gainer, 2.5% or so. Garden Reach, which was down in the dumps yesterday, is gaining about 2%. And among the losers, not too many to speak of. In terms of the big movers, you have UPL, for example, which is down about 1.7%. Endurance Tech, about that same amount, 1.8%. Before we get into individual names with Shrikant, though, I just want to get a sense from him on how he is looking at the start on expiry day. It's a little bit tentative, but more positive than negative. Would you agree with that? And how do you see this expiry session panning out?
Yeah, it's positive if we consider the breadth of the market and the overall opening of the market in terms of its sell-off in the first few minutes. It was very nominal, and now it is crossing its previous high of 25,320, which is positive. Based on this, I'm expecting Nifty to move towards at least 25,450, 500 sort of levels. And we cannot forget that FIs are heavily short on the market. Yes, they may continue their short positions till 9th of July, till the announcement on the tariff and all. But broadly, on the day of expiry, most of the time we see some buying and selling activity on the extensive side. So today, after crossing these levels, if we see furthermore gains in large cap companies like Reliance Industries or Infosys, let's say, then in that case, we can expect a good amount of short covering in the market. But broadly, I am positive. I am keeping a stop loss at 25,100 for holding long positions and even for creating long positions at current levels. And we are focusing more on IT companies today, along with a few large cap companies like Reliance and even ITC.
Absolutely. Some of these large caps have actually contributed quite substantially in trade yesterday as well. KNR Constructions, by the way, now close to 6% higher. But Nirav, I want to come to you on the defense pack. And we spoke about the fact that it's all up today, practically the entire pack once again after losing ground for a few sessions. And the update today, of course, is that higher spend by NATO, that is, or NATO countries that is anticipated, and Indian companies now have a larger share of exports in their revenue pie. Would you still buy a defense stock right now, and which of those stocks look okay on valuations?
Well, I think the broad view on defense is positive from a medium to long-term perspective. There are going to be ups and downs in the near future, but the view is positive, and one has to be very selective as far as the stock selection is concerned. So I think we are positive on Bharat Electronics Limited. We like Data Patterns, we like Zen Technologies, we like Solar Industries, and Bharat Forge. So these are some of the stocks which we feel can be accumulated on every decline.
Okay, on KNR, right, this NTPC order. Now, a 10 PE stock, and it moved a bit yesterday. The order book as of last year was 5,000 crores. This new order at 4,800 crore, and they have a 74% share in that JV. So the total order book nearing about 10,000 odd crores. The margins guided by the management about 15-16% for the NTPC order. It adds what? Nearly 400-500 crores of EBITDA over the next 5 years cumulatively. So for that size of a company, this is a really meaningful one, and which is why I think it's about 5.5 million shares traded already on the NSE on KNR Construction as we speak. Nirav Ashar, did you give some, have you looked at KNR Construction and the order win yesterday?
Yes, actually the stock had gone into a limbo since quite some time, and I think this order should be a game changer as far as the company is concerned. So I think we have to look into the margin side also, because getting such an order from NTPC, largely I think it would be a balance of plant order, and I think there typically the margins tend to be on the lower side. So I think we have to forecast basically what kind of revenues will flow into the company over a period of time, what kind of margins can be expected, what is going to be the pressure on working capital, because this will envisage a higher amount of working capital requirements also. So it would be best to say that sentimentally it's going to be a positive as far as the order book is concerned, but execution will be a different ballgame altogether. But sentimentally it's going to be a positive in the near term.
Just marking Western carriers very quickly, they have, it's also an order win kind of a story coming in for Western carriers, and that stock about 7% up this morning. 558 crores order for slab, coil and sheet plate dispatches from Jindal Stainless, and that's buzzing as well. Srikanth, on the charts, have you been looking at Western carriers? And I'm going to come back to you on that question on PB Fintech, because some pressure now in the first few minutes of trade.
No, we actually, I'm not tracking this stock very closely, but for PB Fintech, I'm very clear with the view that the stock is gradually moving upward, and eventually we can expect the levels of at least 2,050, 2,100 sort of on the higher side. In case if there is any correction, then close to 1,750, 1,700, the stock is having excellent support. So buy on dips should be the strategy for creating any long position on the stock.
Okay, buy on dips on PB Fintech. Thank you so much, Srikanth. Thank you, Nirav, for speaking with us this morning and joining us on the show. So markets pretty much flat, but in positive territory, so no great concerns there. We're shifting our focus to the corporate side of things, and Gail in focus as the company continues to navigate so many complex issues. West Asia tensions, is there going to be an oversupply in LNG, all of those things to discuss. But before we get to the management, let's bring in Somi to give us context and set up that conversation.
Yes, Gail will remain in focus. The company is not only India's largest gas importer, but also India's largest gas transporter. Now, the three most important things to know from the Gail management today, firstly, will be given the volatility that we have seen in the crude oil prices amid the Israel-Iran conflict, did it have any bearing on the gas prices and any impact on the companies? It will be something important to track. Apart from that, how have been the transmission volumes picked up post the recent management commentary where they had downgraded or lowered their guidance of transmission volume? So has there been a pickup in volume is something that we need to track from the management. And thirdly, when should investors expect the big tariff hike to come in on the transmission segment? So these are broadly the most important things that we should know from the Gail's management. Apart from that, Morgan Stanley recently came out with a tactical buy idea on Gail, where they have maintained their buy rating on the stock with a target price of 240 rupees. They say they see an upside risk on Gail in near term on the back of improvement in the quality of returns. They're expecting the company to monetize $7 billion of pipeline infrastructure that they have, and they're also expecting the petrochemical margins to improve going forward. They expect Gail's long-term return on capital employed to rise to 14%, to more than 14%, and the monetization of the new gas infrastructure is expected to start by FY26. Overall, the analyst view is quite bullish when it comes to Gail. Nearly 80% of the analysts tracking the company have a buy rating on the stock. The consensus target price sits at around 216 rupees, which suggests a return potential of nearly 18%, while the highest target price on Gail is by Investec at around 270 rupees.
Wow, okay, let's try and ask some of these questions. Peripheral and at the central. to Mr. Sanjay Kumar, Director Marketing at Gail. He joins us right now on the show. Mr. Kumar, great having you. Thank you so much for taking the time out and being with us today. This is Neeraj here. Good morning. The recent conflict, right, did it have any bearing on gas prices, any deliveries, spike, declines in the final numbers? And now that it is behind us, hopefully, how does business continuity look like?
Good morning to all of you. And, the world is a connected world, and any geopolitical issue actually affects the LNG market or the crude oil market in a big way. The recent conflict that started a few days ago led to increase in crude oil prices, and accordingly it also led to increase in the spot LNG prices, all over the world. Some estimates around, from $68, $67, the crude oil had gone up to around $80 and around $79 or $80. And the LNG prices, the spot LNG prices, the JKM marker that we track normally, moved up from $12 to more than $14. Now, all this was due to the concern related to blockage of Strait of Hormuz, which through which 20% of LNG of the world moves, as well as 20% of crude oil and oil products. The volume which is traded, they move through that Hormuz Strait. Good thing is that the conflict is behind us, and it has shown in the prices. The Brent crude has gone down now to below $70. It's rather approaching 67, 66, etc. And the LNG prices have also cooled off. The Indian discharge West India markers have moved to below $13. They are around $12.5, $12.70 today. This augurs well for the gas segment in the country because it will help us, help the new demand come and help the spot market for meeting the supply demand gap, which could have created a lot of problems. We had seen that during 2022 when the Russian conflict started and the prices of LNG had gone up to more than $50, $60.
Mr. Kumar, very good morning and great to have you on. What is the new normal as far as gas prices are concerned? And I know this is a tricky question, but the fact that crude prices have also receded so sharply once that cloud of concern lifted gives you an indication that overall supply maybe is more than demand. What is, in your sense, the steady rate of gas prices that we could see, LNG prices that we could see?
See, the world actually trades about 410 million tons of LNG. Approximately 2/3 of that is priced as per long-term contract pricing, which goes on Brent basis, mostly Brent or JCC or something like that, some other crude markers. Some of the LNG traded in the world is indexed on Henry Hub, which is the local index of United States. Now, remaining volume may be having some other indices, but the point that I want to make is the spot market of LNG has very limited volume, more than not more. Now we are actually looking at the period when the LNG capacity of about 20% would be added in next 1 or 2 years all across the world. Now this the demand does not come up immediately, so the balancing would happen in maybe few years. So till then, for next 4 or 5 years, starting after a few months, we may be looking at softer LNG prices. The new normal that I foresee will be less than $10 of LNG prices across the market. By the way, the crude oil the Brent has also, the new normal for Brent, maybe we may be looking at $65 or $60 up to $70. So if we look at the standard LNG long-term prices of say 13% of Brent, those prices are also indicating towards the same number, Tamanna.
No, that's very heartening, and that's an important insight that you've given, sir. Now, having said that, all of the turbulence that we've seen in the last, I said, 2 or 3 months, is that something we'll see in your Q1 numbers? Will that be reflected in any way, since you contextualize that most of these are long-term contracts?
Not exactly. Our contracts are largely based on 3 months Brent average or Henry Hub. I'm specifically talking about Gail. The real crisis lasted for only few days, so the averaging effect should be there. More than the prices, it is actually the domestic demand which is slightly less this year. The power demand has been less, so that the volumes may be reflecting the quarter ending June has a lot of power demand traditionally in the past years. This year, because of untimely rain, cooler season, the gas-based power did not pick up. We did not have significant demand from them.
Yeah, and Mr. Kumar, is that probably one of the reasons why, or I'm just asking you because recently I'm told that in an investor conference you reduced the transmission segment volume guidance numbers, quite a bit, right? So what led to that piece, and are you confident of achieving that guidance?
See, we are a very good, we believe we are a very good corporate citizen, and that's why we went to the investors and we told that there is some sort of delay in the connectivity to some of our customers in the eastern side of the country. We also had lower power demand during last few months, lower than what we had estimated. Some of the fertilizer plants have taken their shutdown, and some of them were not going to operate because of some other issues. So we had gone to the investor community, and we had proactively declared that our target for transmission volume would be 132 million cubic meter per day for this financial year, and about I think 137 million cubic meter per day, 135 to 137 for next financial year.
And you're confident of achieving some of the new guidances, right? Also, just trying to think, what about the other aspects, power demand, etc. All of that is looking okay. Is it lower than estimates? What do you think? Predominantly, are you confident of the new estimates? And what about the allied pieces?
See, as per our experience, we believe nature has a method of balancing. So if the power demand was less in last 1.5 months, we believe it will come. It's not a scientific statement that I'm making, but the heat would come, and the power demand should pick up. Some of our customers are already lined up. Few pipeline segments we have already started charging gas. So we are quite sure about meeting the guidances that our management has given during different investor meets in last few months.
Just wanted to get a sense from you, sir, on the Qatar deal, which is now, it's a 5-year deal for LNG transmission, and it is now underway. What is the kind of impact that you see of this going forward?
So that's a typical, sourcing operation that we continue to do. See, we are the pioneers in the LNG segment in the country. The kind of thinking, the kind of strategic calls that we take is actually followed by other LNG buyers in the country and all across the globe. So we had gone to the market for a 5-year deal, which you said the name of the seller that we awarded to, and the supplies under that transaction they have already started actually. So these are many such transactions are planned, and some of them we are able to succeed because they meet our targets. Some of them we are not able to conclude, so possibly the media doesn't come to know about them. But these are every day in the war room that we have. We continue to analyze these market trends and see how can we grow the market and meet the national objective of improving the share of natural gas in the country.
Okay, thank you so much, sir, for speaking with us. To the extent that you could share what the outlook is. Sanjay Kumar there from Gail, talking about how the turbulence that we've seen in the last few days because of averaging is not really going to have an impact on their balance sheet. I think that is one of the big takeaways that we're seeing from Gail. We'll take a very, very short break. But when we come back, all the buzz is about the primary markets. We're getting in Sanjay Agarwal, Managing Director of Indo Gulf Crop Sciences, his CFO, is also going to be with us. Manoj Gupta, that IPO opens today. We'll come back with all the details of what it is after the break.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Welcome back. 25,300 and we're back on top. 25,350 and thereabouts counting. So yeah, I don't know if that bull is galloping. I would say more of a stroll right now, but definitely they're in that territory. We're 0.5% up on the index as we see. What's not working is the IT pack actually. IT is dragging down the street a little bit. Banks are okay. Just advanced decline ratio for a second before we move to our next conversation, because the broader markets seem to be holding up. That gap narrowing, but definitely broader markets still looking relatively decent. It's also that time and season, it seems, for IPOs. So we're, for a change, talking about the primary market here in this segment on India Market Open, and the focus on Indo Gulf Crop Sciences. That IPO opens for subscription today with a company looking to raise about 200 crore rupees. It primarily operates under 3 business verticals, namely crop protection, plant nutrients, and biologicals. My colleague Varsha joins in with more details and a quick SWOT analysis of that IPO.
Yeah, thank you so much for that. So yes, the issue is going to open today, and the market value at the upper end of price band stand at around 700 crores. Now they're going to use this proceed for funding working capital, repayment of their outstanding borrowings, and capital expenditure also. Now talking about the SWOT analysis, diversified product portfolio and specialized products across all the 3 verticals is one of the strengths that the company has. They have established distribution network in India and abroad. Backward integrated manufacturing infrastructure will actually help them to improve their margins. They have strong R&D and product portfolio. On the weakness side though, if you see, they have high supplier concentration risk. The operations are capital intensive, and they are vulnerable when it comes to raw material price volatility. On the opportunity side, if you see, we know that the India's agrochemical market is growing, and this company will take a good pie amongst them. China Plus One strategy will also work for the company, since company is into contract manufacturing services as well. Government initiatives and policies will also help for the company, and they're going to also set up new facilities which will aid growth. Lastly, on the threat, if I were to talk about, intense competition among the agrochemical sector is one of the a threat that the company may face. Regulatory challenges and the bans in some of the pesticides and herbicides will actually impact the financial profile for the company. And lastly, pest resistance and disease evaluation is one of the threats that the company may face in future.
Okay, so Indo Gulf Crop Sciences in focus this morning. We have with us Sanjay Agarwal, the Managing Director, and Manoj Gupta, the Chief Financial Officer of the company. Welcome to both of you. And as the issue opens today, I think what investors want to know first of all is why the requirement for fundraise? What do you expect to do with the 200 crore rupees that you're raising through this IPO? Let me start with Mr. Agarwal and that question, sir.
Yeah, good morning, Tamana. Indo Gulf is into food security, basically into manufacturing and exporting of crop protection and biologicals and nutrients. So with this 200 crores coming up, 65 crores approximately will be for working capital, 34 crores will be for loan repayment, around 12 crores will be the IPO expenses. And we have a capex plan for around 14 crores. Rest is general corporate purpose, and 40 crores is OFS.
Can you explain to us the kind of book that you have right now? How much of this is export oriented? What is the kind of, customer profile you have domestically? I think since we're just starting out on this journey for you as well, let's just try and understand a bit about the company.
Yeah, sure. So we have basically 3 categories of our business partners. The biggest is the B2C, who are our distributors. We have more than 6,900 distributors across India. We are working in all the states in India. The next vertical is our B2B business. That is basically institutional sales. So we are into backward integration. We manufacture some technicals also. Also, we have some technicals which we import. All together put in, it helps to grow our B2B business. And we are working with almost all major Indian companies, around 190 plus business partners we have in our B2B channel. Then the third one is our overseas business. We are already established in 34 countries. More registrations are on the way, and we are looking forward for expansion in some more countries in the times to come.
Let me just get a sense of how you are seeing the dumping that's coming from China in your space. And, that is definitely one great concern. And we can take that question with both of you. If Mr. Gupta, you want to start there first?
See, ma'am, dumping, because we are already in the regulated business. The companies which are registered with the import licenses, they can only import. So unnecessarily dumping is not a big question for us. And now the domestic market is growing very high. And like a company us, we are just importing 35% from the China and 65% from the domestic market.
So let me add what Manojji has said. So we are basically into formulations, and formulations are broadly manufactured in India. They are seldom import from China. Yes, of course, there are some technicals and some raw materials for technicals which are imported from China. If I see our journey, there were huge dependencies earlier, but gradually companies like us and many more have built up their capabilities to produce indigenous technicals, be cost effective, extraordinary in the quality parameters, and we are all successful. And in the coming times, definitely, it's a process. It will not be an overnight turnaround, but yes, we are moving towards self-reliance.
Mr. Agarwal, Mr. Gupta, good morning, Neeraj here. Just taking forward that point, Mr. Agarwal, are you trying to say that in the last 3-4 years, when a clutch of other businesses in this space have spoken about pricing pressure, and actually world over, in the crop business, companies have spoken about pricing pressure, you are saying you haven't faced it?
No, it is not so. See, like we are into two broad verticals, crop protection and crop productivity. So crop productivity is a very specialized kind of business. So that is not impacted by the overseas pressure. Rather, that is basically a kind of knowledge sharing and providing best solutions to the farmers. So that is altogether a different way of business. However, in crop protection business, yes, there had been an impact of prices, and the price impact has not only impacted our industry, but overall many industries as a whole. There had been price corrections in last 2 years. The quantitative growth has been there in the industry as well as with Indo Gulf, and looking forward with great monsoons and great opportunities. Now, in fact, the inventories also has been liquidated overall across the globe. So we are looking forward for a great year this year and the coming years.
Okay. So Mr. Gupta, lay it out for us. What has been the average growth rate, profile, color of growth for you, both on the numbers as well as on the return ratios for, let's say, the last 3-4 years, right? Because we don't want to talk only about the very short term of the last 1 year. So what has been that run rate look like? And what do you anticipate the next 2-3 years to go, considering that Mr. Agarwal just said that he expects the next 1 year to be very strong?
That's very true what sir has told. Last 2-3 years, our growth was very good. Only that 23 and 24 as comparison, if we will see, we are the flat. But in the 22, we have shown the 22-23, we have shown the 13% growth, and previously we have also shown the average CAGR is coming around 12 to 13%. And our this 23-24 was flat because, as you told, that price pressure, but if it was a quantitative, it was increased. In last up to December, we have already shown a growth of 13%, but and this March 25, we will do also very good. And the but our PAT is continuously increasing. From 23, it was 22 crore, which has increased to 24 is around 28 crores, even though our top line was on the flat. And if I will compare my PAT from as compared to last 9 months and this 9 months. Last year, December 23, our PAT was around 16.8 crores, which has increased to in FY24 December 9 months, 21 crores.
Mr. Agarwal, so therefore, would you say that over the next 2, 3, 5 years, you expect growth to be in the range of 12 to 15%? And would that happen because of margin expansion, or would you also see revenue growth of mid-teens for the next 3 to 5 years?
See, broadly, we cannot commit for any forward numbers, but yes,
some color.
Yes, of course. Yeah, yes, of course. There are a lot of opportunities. Across the globe, we can see there is a shift from generics to specialty. There is a shift from chemical-centric to bio-integrated. There is a shift from input-focused to outcome-oriented. So a lot of things are there. And I believe that the product basket is the power of Indo Gulf, and we have a great basket in all the verticals. So the foundations are quite strong, and the opportunities, I believe, in all the verticals and all the geographies will be quite high. Yes, we have made our roadmap, and we have chosen how fast to move in which specific segment, and biologicals, nutrients will be our core focus. The brand business will be our core focus. Though we will be growing also in overseas and B2B business, but B2C business will be our major focus area.
And so how are you going to crack into it, Mr. Agarwal? And this is something that you have to put in your RHP as well. What are the challenges that you see ahead? What are the headwinds? So why don't you share that with us for our viewers as well? What are the key challenges in the business that you are in?
Yeah, so Tamanna, very good question. So, of course, every business has some challenges. So, agri-business is basically, you can say, a monsoon-driven business. Of course, not only Indo Gulf, but all the industry takes that challenge. But having the pan-India presence and also the presence across the globe, and also with the umbrella basket of so many products, in fact, with both the categories of crop protection as well as crop productivity, Indo Gulf does not see any major jerk in the growth plan, and that has been our trajectory also. There were some tough years also, but we have been able to perform well, and that is because of our product basket. In fact, we have some patented packaging, some patent products. We have distinguished mascots, and we are marketing great. So our presence, our experience, and our credentials counts a lot. So there is always a risk of monsoon, but our omnipresence and great product basket will jerk it out.
A good monsoon right now augurs well for you very quickly?
Yeah. Okay. The monsoon is good this year.
So timing is right. All right, best of luck. Your first day of the IPO, we'll be tracking it in the listing as well. Mr. Agarwal and Mr. Gupta, thank you for speaking with us. Meanwhile, look at what's happening in the markets, 25,400.
IT is flat too, completely after being down. So it seems to be a rising tide, Tamanna.
Yeah, a rising tide, and now the bulls are truly in charge. They were sort of galloping around earlier, but 25,410 and climbing. I want to pull up the sectoral heat map if we can, and the Nifty heat map, because let's see what's powering this through.
NBFCs, Tamanna.
Yeah, metals.
Yeah, but if you just look at the Nifty 50, so you're right, but I'm just saying if you look at the Nifty 50, Tamanna, Geofin, Bajaj Finance, 2.5% apiece.
I wonder why. Is this an HDB IPO spillover? I mean, we're just wildly guessing here because it's changing so quickly.
But there's a Shriram Finance out there in the top 10 too. So it might well be the case.
Yeah. Something is cooking there, looking very interesting. Eternal is looking good. HDFC Life is BFSI all the way. Let's pull up the Bank Nifty if we can, and the intraday of the Bank Nifty, and look at what's happening there as well, because that excitement coming there, not so much on the Bank Nifty, but the BFSI pack as a whole looking exciting.
You're so right. And by the way, just on the broader end too, I mean, yes, the Nifty fund, I mean, the rally is rightly in the large caps, but the broader end of the spectrum might be flattish, but a lot of stocks moving around, the likes of Apar, Jay Balaji, Nuvama, 4.5% at 7,800. JM Financial up about 3.5%. So NBFCs, whether lending or non-lending, seem to be doing really well. Capital marketplace too chipping in. So that's the first set of stocks that you want to mark. Well, we should definitely mark what's happening to defense, simply because NATO allies have agreed to increase the defense spending from 2% to 5% of the GDP. This is big news. Anushi Johnson with details of what could this mean for the defense companies in India. Anushi, very important. Tell us what it could mean.
Hi, morning, Neeraj. As you emphasized on the fact that it's a big news that we are seeing for Indian defense players with the NATO allies increasing the defense spending from 2% of GDP to 5% of GDP, and this is till 2035 that we're expecting this change to happen. So now what this essentially means is more billions of inflows flowing in through the company in terms of where the defense budget spend is concerned. And with India steadfasting their focus towards the export side of the market, this should substantially benefit some of the key players that are there. Now, if you look at the current breakup in terms of how the spending was, this 5% includes 3.5% of spending on the core defense spends. Along with that, 1.5% spends on other security-related expenditure, including infrastructure. So these extra billions is to be added annually across these members that we are looking at. If you just take 2024 in context, NATO countries had spent over $1.3 trillion on core defense. So HAL and BEL in focus on that, since they are the companies that ally towards some of the key products which would benefit NATO countries.
So in that list of, just a quick follow-up, Anushi, in the list of companies that already have that pathway and that channel open with NATO countries, it's only HAL and BEL. Are there more?
HAL and BEL are the prime focus over here, since BEL is involved in radars, in electronic warfare suits as well, which augurs well for the 50,000 crore of export opportunity that we are looking at. But other countries too would be in focus. We are seeing companies now increasing their spends towards where the export is concerned. That should be in a track.
All right, so big opportunity there. We'll take a very short break. On the other side, conversation you don't want to miss, especially when markets are above 25,400. Nilesh Shah, founder of Envision Capital, joins us on the other side of the break. Nilesh, looking forward to talking with you after a very short break.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back. You're watching India Market Open and markets on a roar above the 25,400 mark for the Nifty and galloping ahead as we speak. Now, are we seeing markets shrugging off some concerns that we've seen for the last several days? I think we're going to cross, 25,400, crossed quite convincingly. Nilesh Shah joining in now, founder of Envision Capital. Nilesh, we always enjoy our conversations with you here on NDTV Profit, so thank you so much for coming in. What is the market mood that you're seeing right now? Tariffs was a big concern. We seem to have shrugged that off. World War III, market doesn't seem to care too much. Operation Sindoor, okay, we'll worry for a couple of days. I mean, is this, I don't want to try and sound Gen Z, but is this market delulu or is there something solid going on over here?
No, well, yes, there are some of these speed breakers, hurdles, headwinds along the way. And what we've really seen is all these geopolitical conflicts have been very episodic. They are something which probably lasts for, probably a couple of days, maybe a week. And then after that, basically, there is pretty much peace. So to that extent, I think somewhere the market is beginning to realize that this is something which seems to be very short-lived, though very episodic, but it's still very patchy, very short-lived. And market is taking all of this in its stride. In the process, what's also happening is the collapse of crude. That's something which is probably the biggest positive that's going for India right now. That we have basically crude prices which are significantly lower. That's doing a lot of good to India's macros. We've seen rate cuts happen, liquidity kind of getting unleashed. And all of this is improving micros at the ground level, which I think augurs well for company earnings. So clearly what's happening is that there is increasing uncertainty in the world, but basically all of that is having a rub-off effect in terms of positives for India. And that's something which basically the market is more focused on than some of the geopolitical issues which are become an overhang for some time now.
Okay. Nilesh, good morning. So, are we to say that the risk assets are now squarely looking at earnings trajectory and multiples and discounting these episodic periods simply because there will be noises in the longer term and therefore ignore the short-term noise and focus squarely on the long term?
Absolutely, Neeraj. Clearly, the markets are more focused on the long term. And that's because, firstly, the markets itself have been consolidating since September or October last year. So it's pretty much been a 9-month consolidation that the market has already gone through. It's not that, yes, the markets are now inching towards a high and all of that, but nevertheless, for 9 months, we've been more or less flattish. There have been some sectors or categories or some pockets which have done better and are at a newer highs, but overall, at the index level, we still seem to be essentially where we were 6 or 9 months ago. So to that extent, the markets have already undergone a time-wise correction and a consolidation. So that to that extent, I think is a very, very big positive from purely sheer market levels. Secondly is that the faith of retail investors continues to be unabated. And so to that extent, the allocation to equities has only been increasing. And more importantly, is with falling interest rates on bank deposits, the case for long-term equities becomes even stronger. So third is a move by the foreign investors towards de-dollarization. And clearly, India has been one country where allocations have been underweight the weight in the MSCI. So to that extent, again, you're seeing foreigners starting to come in, but expectation that they could come in a bigger way. And lastly of all, corporate earnings are dealing with a low base. I mean, just to flash back last financial year, we had probably one of the most modest GDP growth. And so to that extent, we are dealing with a very low base. So optically, for June and September quarters, we actually could see earnings, headline earnings, get into the double-digit zone. So these are some of the factors which I think the market is really more focused on than the geopolitical challenges that the world faces.
Actually, Nilesh, that's a pertinent point, right? We were talking to so many people or trying to ask so many people that the first half of at least for the Indian markets, right? The first half, which is Q1 and Q2 of FY26, will have a really favorable base, right? And therefore, does that incremental growth number look positive enough for the markets to take heart from? Or do people focus on the absolute number and then try and say, hey, maybe growth isn't as good because the advanced tax numbers were not very strong?
Sure. So Neeraj, I probably think that more on a slightly time adjusted basis, but broadly we would have earnings growth of about maybe 10 to 12%.
Okay.
Which is not a bad situation to be in, because just generally from an opportunity cost point of view for investors, it's more like kind of, the 6% which bank deposits offer. So if you have corporate earnings at 12%, it pretty much takes care of a couple of years of returns, even if 1 year has been kind of flat types return. So there's a kind of a catch-up trade which typically happens with equities. Equities don't behave in pretty much a linear fashion all the time. So there's a bit of catch-up which happens. So clearly kind of going back to saying is that the 9 months have been very flattish. So to that extent, you will see some kind of a catch-up trade happen for the next over the next 1 or 2 quarters. And that will also kind of get mirrored through the earnings growth, which we will have. So even if I think the headline or the big companies, the large caps, deliver as a group 10 to 12% kind of earnings growth, I think that should at least protect the downside as far as equities go.
Nilesh, what's leading this charge? What's leading this charge in your view and the next leg of this rally? Is it going to be financials? Is it going to be a consumption theme? Is it going to be a capex push theme? Where are you seeing that momentum?
It's going to be all of these factors. Number one, of course, for the financials, especially the large banks, the last few years have not necessarily been very good. They have again they have underperformed as stocks or as a category. So you again seeing a lot of catch up, and then there's some bit of an upside coming in because there's expectation that if foreign investors were to come in a very big way, a lot of that incremental allocation would go into banks because that's the easiest place to deploy whatever millions and billions of dollars. So I think clearly that's one. Two is regarding consumption, we have a situation where there's now lower inflation, leaving more money in the hands of consumers. There's low interest rates, which makes the case for rate sensitives to do relatively better. Third is all of the kind of policy initiatives which have happened, which is increasing the tax exemption limits for India's middle class, number one. Number two, the pay commission, which is expected, the impact of pay commission, which is impacted. All of that, and then some of the benefits coming in from various welfare schemes announced by the state governments. All of that is kind of likely to kind of bunch up in the next few months or the next few quarters. So clearly, I think consumption again stands to gain. Consumption also stands to gain because raw material costs could be lower, which could drive up margins. So I think there's a case for both volume increase, there's a case for margin increase, resulting into stronger earnings. Third is the capex side, and capex including defense, aerospace, EMS, all of those pockets within the overall capex and manufacturing space. That's again a space which is expected to do well because of larger increase spending. Last year, keep in mind, was a relatively tepid year from a spending point of view. A lot of all of that could play a catch up in the current financial year and even beyond. So I believe that it's going to be a combination of all of these, which are going to essentially be driving economic growth as well as earnings growth.
You spoke about defense. I'm wondering how you're feeling about railways, Nilesh, because just in that, taking that forward, railways, road, there was a bit of a pullback in the kind of spends over there in government schemes. Do you see that firing, and do you see the defense rally done and dusted with?
Well, for the very short term, the defense rally, one could basically argue that it's done with because there's been a sharp up move. So to that extent, and yet, yes, there's been the start of order inflows, but it's not yet as much to basically warrant the valuations in the very short term. A lot of stocks are already beginning to trade between 50 to 100 times trailing earnings. So to that extent, and then there's been a sharp up move of between 50% to 100% from the lows that we saw in February, March. So probably in the very short term, it seems to be done. But clearly, I would think of defense being more a decadal story. I think the whole need to kind of spend on defense and then kind of back that up with a huge bout of indigenization, which means to procure locally from domestic firms. I think that's basically a very, very long-term growth driver for our defense and aerospace companies. So I would probably think that it's become now, yes, for the very short term, you could say it's done. But I believe defense is now becoming more a buy on dips kind of a sector. Regarding railways, I would clearly think that defense is likely to take precedence over the railways, because firstly, there's a much wider choice of companies to invest in. In defense, you could probably see, there are whatever dozens of companies, versus that railways, it's a very small handful. And clearly, I think the spending on defense is going to be significantly higher over maybe the next couple of years versus railways. I clearly think between defense and railways, it's going to be more like a snake and ladder. There would be some phase during which defense does well, some phase which railways does well. On the whole, the two put together is a great place to be from a very long-term perspective.
Is that a rally you managed to catch, Nilesh? Because, we speak to people and some, managed to get it in time and some didn't.
Honestly, it's always dil mange more. You never have enough when things go well. And like as George Soros says, when you get it right, you better get it right big time. So honestly, yes, not to the extent one would have wanted.
Okay. Nilesh, the other question is, when Nandan Nilekani says that it is amongst the most challenging times for the business, you stand up and take notice, right? What did you make of what Nandan is saying? What did you make of your own conversations with maybe your portfolio companies or global companies and your readings? I mean, how does Indian IT fare over the next 12, 18, 24 months in such a fast-changing landscape?
So, I would tend to agree with, Nandan's views in terms of what he thinks about what's really happening in the global business landscape or the global economic landscape. The global economic landscape stands truly challenged. And somebody like Nandan, who's essentially looked at, the era from the 1990s onwards, where we basically began that era by saying the world is truly flat. Okay, from that now getting into that there is now increasingly deglobalization, countries are behaving in terms of silos. So I probably think his statement is more in the backdrop of that no longer is it now easy to conduct trade on a global basis, number one. Number two is, I think, purely from a technology point of view. And I would probably say that most businesses which are more world facing or global facing, I think I have to kind of deal with lower growth, slower growth, especially in a relative context where the domestic economy seems to be doing a lot better than the global GDP. And two is, we have pockets like capex, infra, defense, railways, domestic consumption, premiumization, all of those as businesses are growing in double digits versus global businesses growing in low single digit. And that creates a headwind for the larger Indian IT companies. I think the larger Indian companies have been growing in single digits for maybe the last decade or so, especially when the world was a lot more benign place, versus that the next decade doesn't seem to be as benign as what the last decade has been. So to that extent, I think for the larger IT companies, they truly have a challenge in terms of sustaining growth. And second is essentially the whole wave of AI, which is coming in, which is driving the world towards more automation and all of those kind of things. And that can make it even more challenging for the bigger IT companies. And therefore, within the world of IT, probably the smaller IT companies, which are more focused, more niche, are becoming specialists in AI implementation, they probably will do a lot better versus their peers, versus their larger peers.
Okay, Nilesh, I'm just wondering, I would like to know your view on the spree of promoter stake sales we're seeing. And it's as if most of them are successful, frankly. The promoters are selling and maybe large investors, mutual funds sitting on the other side. So two-part question. What do you make of this trend? Are you biting at some of those offers out there? And okay, I'm adding a third. What do you say to people who say that these are promoters cashing out when a market is at its peak?
Yes, I think yes, all of that is true, Tamanna, but it's also creating basically supply for the domestic mutual funds. I think they are the guys who essentially have been sitting on a lot of liquidity. They are receiving money through SIPs. The SIP flows still are in the ballpark range of 15 to 20,000 crores. So there's money to be deployed, and clearly I think if they were to kind of go out there and buy directly into the market, obviously that will create its own, it will create another bubble or so. Versus that, I think when you have these kind of supply coming in from promoters, from the larger private equity funds or some of the other earlier investors, I actually think it's a nice balancing of demand and supply which is happening in the market. And so to that extent, I actually think this is very orderly and very, very healthy. Yes, promoters are always the biggest insiders of their businesses, and they probably know their business best and therefore the valuations. But I think for many of them, these are first generation entrepreneurs who have essentially come in, set up businesses 10, 20, 30 years ago. And they also essentially want to take some money off the table to kind of create security for themselves and their families as well. I think that's really been the most common kind of reason why some of the promoters have been selling. Of course, the underlying reason could partly be valuations, but keep in mind, they're not selling out lock and stock and barrel. If a promoter owns 50% of his company and is going out there and selling it 5%, I still think that's like, he's still got more skin in the game versus relative to what he's selling out. So to that extent, I would probably I would look at more the positives rather than any kind of having any concern that promoters are selling.
Okay. Nilesh, final word would be the new Reserve Bank of India led tailwinds for NBFCs. You reckon that the next 12 months, it's that one sector there could be many, but it is one of the sectors to ride on because the growth numbers could look strong?
Absolutely, Neeraj. If there's one strong pocket within the entire market and within the entire financial space, I think NBFCs, affordable housing finance companies, and some of the smaller banks, I think this collectively, I think is probably one of the most strongest kind of segments of the market from an outlook point of view. This is the segment which essentially has had to deal with higher interest rates in terms of paying out higher interest rates, in terms of a much weaker liquidity or a poorer liquidity. And so to that extent, they have been facing some headwinds. All the policy initiatives from the Reserve Bank of India over the last few months, I think converts those very headwinds into tailwinds and creates an opportunity for them to grow, number one. Number two, especially some of the businesses which are more consumer facing, especially areas like affordable housing finance, they will also have the benefit of the tax exemption limits which have been high, which would make the middle class households eligible for more loans. So to that extent, that creates a bit of an organic growth opportunity for them, that if earlier you could give a home loan of say 15 lakhs, you would now be able to give a home loan of 18 lakhs or 20 lakhs. So all of these things essentially, I think, augur extremely well for this pack of housing finance companies, NBFCs, and the smaller banks.
Okay. Nilesh, always a pleasure talking to you. No different today. Thank you so much for taking the time out and speaking with us.
Thank you, Neeraj. Thank you, Taman.
Wow.
Thank you.
That's Nilesh Shah of Envision Capital, and echoing sentiment on IT for sure. What we didn't ask him was the piece around construction companies, but here's one such name which has had, well, you could argue a really good move and is doing well even now, and that is KNR Constructions. Now what's happened, viewers, is that yesterday in the dying minutes of trade, KNR Construction received a large order win. Now their order win was up to a number of about 4,800 crores from NTPC. It ended FY25 with an order book of about maybe 5,000 crores odd. Yeah, 5,052 crores. So this cumulatively takes KNR's order book to about 10,000 crores, right? Which is pretty healthy. The margins are around that 15 to 16% band for this NTPC order as guided by the management, plus minus 1% here and there. So that's competitive margins. The order won apparently could add about cumulatively about 500 crores of EBITDA over the course of the next 5 years, which again, for this business is actually pretty strong because it's a stock that's kind of lost attention, trading at about 10, 12 times FY26 P because it had a few state blockages, etc. Debt equity is comfortable, and hence I think the reason that the stock took a flare up yesterday, started off well today. The cool off could probably only be that this is one order that is coming. Can there be more orders that will come in? Will more states open up to this business or this company? I think that's the key question. NHAI had also, if I'm not wrong, laid out some guidelines for KNR to bid or not bid in select pockets. So I think all of that weighing in on the overall sentiment, but per se from a valuation perspective, from a large order win perspective, it ticked all the boxes and hence maybe the focus around it.
Also in focus is Nykaa and Nestle. Nestle 1:1 bonus issue is first ever, so that's why that stock is buzzing. Nykaa also showing some action after the investor presentation is put out today. Mahima joining on both stories. Mahima, let's start talking about what's in the Nykaa investor presentation.
Right, so I think the one thing that stood out for me for sure in the presentation was that they've now come out and said that they will achieve break-even in the fashion segment by FY26, which earlier in the conversations was indicated that this will happen by late FY27. So this is a big upgrade there. In terms of other key highlights, they're saying that they aim to grow in mid 20% levels plus, and this is by FY30. They plan to expand to 500 stores by FY30. Their ambition is to grow the overall organic portfolio at a 30% CAGR to a 6,000 crore gross merchandise value, and their ambition is to grow 3 to 4 times in the next 5 years when it comes to Nykaa fashion. Women segment will retain the dominance, but men's and kids wear will also become prominent going ahead. Plus marketing spends and efficiencies will improve going forward in the fashion segment, like it has already happened for the beauty segment, and they're expecting overall mid to high single digit EBITDA in fashion by FY28. Lastly, they're also expecting fashion EBITDA at 10% by FY30. And what they're saying is that they'll grow 3 times through geographical expansion for Nykaa e-Superstore as well. So these are the key takeaways from the Nykaa presentation. And Nestle, of course, the first ever bonus issue. They were set to consider it today, and now they've announced that they are issuing bonus of 1:1 for face value of ₹1 each. This will be issued out of retained earnings, and the date by which this bonus will be credited should be on or before 25th of August. Now, in terms of how the capital structure for Nykaa, for Nestle will change, authorized capital, which was at 100 crores, will now become at 200 crores. Paid up share capital will go from 96.4 crores to 192 crores, and again same subscribed capital will also go from 96.4 crores to 192 crore rupees. So these are the 2 big updates in the consumption space today.
Okay, so consumption is buzzing. You know, broader markets have cooled off. I just want to pull up the advanced decline very quickly, because while you have the Nifty roaring, that's not the case with the mid cap and the small cap at all. There's a very different picture going there, and you're seeing that gap completely narrowing between advances and declines. Let's pull up the small cap index, and the mid cap index dipped mildly in the red. Yeah, there you have it, completely flat, but way off the day's highs. For the small cap 250, mid cap 150, completely flat. A quick look at the Nifty once again and seeing where that's holding up. Not quite above 25,400, a bit of a pull down after that, but still about 0.5% up. So it's an interesting kind of morning, and it is a few stocks that are boosting the Nifty. Can we pull up the Nifty contributors just for a sec before we wrap up? And it is HDFC Bank coming in with that strength. RIL also coming to the fore. Bharti doing fine. It's the IT pack which is pulling it all down. I wonder if we could just pull up that Nandan Nilekani bite before we get into the break, because Neeraj, that really cut my eye with Nandan Nilekani saying that these are uncertain times, and he's not seen that kind of uncertainty at all. And of course, IT dances to its own tune, and if we can have that by before we go into the break, IT dances to its own tune generally, but this is definitely one time that we're seeing that kind of a pain.
Yeah, most certainly. Let's hear out, as we hit that break, let's hear out what Nandan Nilekani had to say. And I'm sure, Tamanna, that a lot of people will follow it up with queries on Ask Profit as well, because that sector is the key. So from Tamanna and me and the team that put this show together, thanks so much for tuning in. But as we hit that break, hear out what Nandan Nilekani had to say.
Every business sector is facing fundamental challenges. Automakers need to transition to electric vehicles. Pharma companies need to get better at using AI for drug discovery. Logistics firms need to manage supply chain reordering. Financial services are exploring tokenization. Energy companies need to reassess the long-term demand for their products. Utilities must prepare for a very distributed future. Manufacturers need to successfully integrate robots and 3D printing into the mainstream processes. And service companies are competing with more efficient AI agents. Every type of business in every part of the world is having to first adapt to rapidly changing business and technological disruption before advancing into an uncertain and unfamiliar future. Fiscal 2025 has been a year of strong execution for Infosys. Although it's a time of uncertainty, unlike any that we have ever seen in recent times, Infosys grew 4.2% in constant currency, delivering US dollars 19.2 billion in revenues. Operating margin for the year expanded by 50 basis points to 21.1%, and we generated US dollars 4.1 billion in free cash flow, which is a record increase of 41.8% over fiscal 2024.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
That's huge. That is a biggie. It's out of
Gold Plus Clear Glass. पार हो या नियर, सब कुछ दिखे clear.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and I'll be joined very quickly by Mahima Vajrajani, and we'll take you through the next 1 hour of trade. Let's take a look at where the markets are this morning, and you have quite a bit of the momentum from the early part of the session that has been given up, at least at the broader end of the spectrum. You have the Nifty 50 that's holding on though, and 25,350 is being held with gains of about 0.4% or so for the Nifty 50. The broader markets have capitulated somewhat though. So pull up the intraday charts for the small cap index and for the mid cap index, just about flat for both of those indices from what I saw. There you go. So quite a bit of those gains, which were quite substantial at the start today, have been given up, and that is reflected in the market breadth, which has completely gone back to neutral territory. An equal number of advances and declines at this stage of trading. Does that change over the course of the day? Well, that is an important question to ask, because today is in fact the monthly expiry for derivative contracts, and you could see elevated volatility heading into close today. Joining in today to answer all of the questions that you have is Shahina Muqaddam, who's an independent market expert, and Kush Bora, who's a founder of kushbora.com. Thank you so much to the two of you, as always, for taking the time, and very good morning to you. Kush, I'll come to you first, very quickly, to give a sense of how you would position yourself or how you would trade today amidst this monthly expiry.
Morning, Alex. Morning, Shine, and morning to all the viewers. Well, I think the bias squarely is positive, but I think just for the day, I wouldn't create fresh long positions. The Nifty PCR has already hit 1.31, so it's already into a bit of overbought territories. Also, if you look at the call option congestion, you've got that building up near the 25,400 mark. So the risk-reward ratio is not favorable for a fresh long on the upside. But yes, from a slightly medium-term perspective, the view is very bullish. We could probably be seeing new highs on the index, perhaps in the next 3 to 4 months. So all in all, the view is positive. Just for today, the risk-reward ratio for a long trade is not favorable. So if you don't have one, avoid. If you did, continue holding on with a trailing stop loss near the 325 mark. If any dip comes about, you might as well take your profits.
So that's with regards to where the Nifty 50 is concerned, and of course keeping in mind the expiries as well. All right, our first caller for the day, Kiran, is calling in from Hyderabad. Kiran, a very good morning to you. How can we help you today?
Good morning, ma'am, and good morning, everyone. So, ma'am, before asking my query, just a short, a small thing to know. Actually, I have been hearing that Nifty might break the all-time level highs from current levels.
Okay.
But I don't see the Nifty breaking its record level.
Okay.
As of now, because I think it will take one more result season. If the results might be better, it might perform well, because the Nifty Bank, financials, IT, pharma, the real estate performed and is now consolidating, and the power pack and the FMCG and the EMS and every space is like not performing up to its mark. Only some individual counters are performing. I think the froth is building up. Is it better to stay with cash?
Okay.
For good opportunities for the next 3 months? Is my query, ma'am. And then I would like to invest to be 3 lakhs now, today, in 2 specific counters, that is NTPC Green and State Bank of India.
Right.
Is it good to enter? I would like to know it both from both the experts, ma'am. Thank you.
Okay, understood your question, and that's a very good analysis, in fact, Kiran, that you've done. I'll take up both these questions separately. I'll take up the first question with Shahina. Shahina is looking to invest 3 lakh rupees in NTPC Green as well as SBI. How do you think he should divide his funds amongst the two? And if there's a better counter to invest in rather than these two, what would you recommend?
I would say NDTV Green is quite expensive at current levels. They have got very good plans in the long term, but over the next quarter, they are likely to see the stock very quickly.
Sorry, I'm going to have to interrupt you, Shahina, and because we couldn't really make out what you were saying, we'll have to fix the line so that we can hear what you're saying. But Kiran, if you're still on the call, I'm just curious about one. Okay, so he's dropped. But I was curious about why he was saying that he doesn't anticipate that there would be an all-time high on the Nifty 50. Incidentally, because there are a lot of chartists that anticipate that even as early as July, you could see 26,333, and I'm specifically talking about Lawrence Belanco, who has made that projection. And remember that the all-time high was around 26,277, if I'm not mistaken, for the Nifty 50. So Kush, very quickly, is there a is there something that you're seeing on the charts that could push that down the line somewhat? Is it likely in July? It's going to be a long series in July.
So, Alex, the reason for giving it some more time rather than just a month, maybe 3 months or a little more, is purely because of the fact that there is a lot of volatility and a lot of uncertainty going on, especially from the foreign angle, and very specifically, I mean the Trump angle. If those things don't sort of play out, then the consolidation for the last 6 months that we saw, or rather from 6 months of September up until March, was very healthy. The trajectory on the way up is fairly smooth. I mean, it's not just one way up; it's had its pauses along the way, but it's fairly smooth in the sense that you've seen the dips being bought into. Also, to add to the fact that FIIs have been heavily short in the market, so any kind of short covering, and you're just looking at what about 1,000 points, upside on the Nifty for that new high to come in. So I wouldn't really put a timeline to it in the sense that it could happen in a month or 3, slightly broad. But what's important is that the trend and the trajectory is upward. So if you haven't really invested up until now, it's not a bad idea to maybe consider even entering the markets at these levels and gun for another 1,000, maybe 1,200 points on the Nifty, significantly more on the Bank Nifty as well.
Okay. So that's the view on the benchmark. Very quickly, let's get Kiran's question answered with Shaina. Shaina, you were talking about NTPC Green and SBI. So he's wondering whether to invest at the current levels. 3 lakh rupees is what he wants to deploy.
These two both would not be my topics for now. One, NTPC Green, because it is expensive valuation. I would relook at it a couple of quarters down the line. And second one being...
Unfortunate. Yeah, I'm so sorry. I think we're losing your audio, Shaina. You want to try one last time before we repatch the line? You were saying NTPC Green is expensive. SBI is not necessarily the best pick in your opinion in the banking space. But what would be then? Now, we're having an issue with Shaina's line. We'll try and fix that as soon as we can. In the meanwhile, let's go across to the next question. And it's on TCS, which incidentally was a pick by one of our technical analysts in the morning. If I remember correctly, it was Shrikant who spoke about TCS as a pick. We've got Vasudev from Bengaluru, who's bought at levels of 3,512, and he's wondering whether the prospects are good for the long term. On the charts, Kush, what's the long-term view on TCS?
So, Alex, it's gone into a longish bit of a consolidation phase where on the downside you've got 3350 as the a lower end of the range, and about 3600, 3550, thereabouts as the upper end of the range. Now, as long as either side of the range is broken, it could continue in this direction. The volumes aren't really something impressive to write home. Momentum indicators also sideways. So what I would do is I would actually continue to hold on to this one with a stop loss near the lower end of the band, which is 3350. If that is broken, you should exit. If not, then you could see the stock hovering around these levels. And since his buying price is close to the upper end of the band, maybe he could exit at cost. Not very constructive just yet on the likes of TCS, given the kind of downward move then it's seen, and then now the consolidation that's going on for some time.
Okay, so that's with regards to where TCS stands. I'm moving on from a large cap IT to a mid cap IT, which is actually not a mid cap per se, but CoForge is the counter that I'm talking about. Bhupendra Mehta has bought in 350 odd shares, bought at 1690 levels. Wants to know if you can hold or sell. Kush, on the charts, we've been talking about IT throughout, and the entire Nifty IT has seen a bumpy ride in the past few odd weeks. But with respect to where CoForge stands, what are the charts indicating? What's the kind of support and resistance that you're seeing?
Mahima, if in the previous question you would have asked me what's the alternative, to TCS, I would have perhaps named CoForge. That's the kind of positive view I have on this one. If you see the move that it's made starting April from 1200 levels up until 1800, so splendid 50% returns in the last 2.5 months, 3 months alone. The move still continues. The volumes are starting to thin, but I think that is more to do with what's happened in the geopolitics in the last couple of weeks rather than anything else. On the whole, the trajectory is actually very strong for this one. There is a minor resistance at the 1950 mark where the rounding bottom formation will be complete. If that is taken out, and rather as and when that is taken out, you could actually see the stock bump up to 2200 as well. So I would continue holding on to CoForge, and now since he's sitting in a profit, my suggestion would be to put a trailing stop loss near the 1700 mark and continue to hold CoForge.
Okay. All right. Geeta is calling us from Bengaluru, and I believe, Geeta, you'd like to know about Torrent Power, is that right?
Yes, yes.
Good morning. Please go ahead.
Yeah, very good morning. I bought a level of 1659, but now it is 1476. Shall I hold or sell?
Okay. And what's the time frame that you have in mind, Geeta?
6 months.
Okay, got it. Kush, coming to you, she's bought at 1659 as she's pointed out, and she's wondering whether to hold. What are the key levels to watch out for? Where do you see support, for example, and where would you place the stop loss?
So, Alex, my suggestion to Geeta would be to definitely continue holding on to this one. I can understand her pain and her plight because, the stock's actually dipped a little. But if you take heart from the fact that, it's been consolidating for the last 8 weeks around the 1375 mark, being the lower end of the band, it's actually rebounded about 5-6 times on a weekly chart, from those levels. So which is a healthy sign. So that being your stop loss, you should continue holding on. For the last 5 sessions, if you see, out of the 3 sessions have had a very impressive uptick in the volume, and the price action has also picked up. So yes, I think you should continue holding on to this one. Almost immediately, the first resistance comes at 1545. That's where the 200-day moving average is, and a supply zone as well. And once that is taken out, to 1640. So these are some of the levels on the upside that you could look at. The second level is also very close to a buying price. But if she holds on and keeps trailing her stop loss, she could well exit at cost or maybe in a minor profit in the coming 6 weeks, as she's mentioned. So I would continue holding on to Torrent Power, stop loss near the 1375, 30 rupees.
Okay, so that's with regards to where Torrent Power stands. Our next question is from Subhash, who's writing in from Bengaluru. He's purchased SBI Bank 800 odd shares at 855 a piece and looking for a 6 months time horizon. Wants to know if he can hold or sell at the moment. He's sitting on a loss of almost 49,000 odd rupees right now. Kush, what's the view like?
I think he'll have to be patient on this one because the stock is consolidating. The heartening fact is that it has a rising trend line resistance support rather, and that support comes in at 775 and 780 zones. The stock's been respecting that. Momentum's missing, and that's the bigger worry. So I think you should continue to hold on 770. Keep that as your stop loss. On the way up, you could look at 825, and once that is taken out, 850 as well as the next key levels. I think it's more of a patience game rather than anything else. Momentum missing, that needs to pick up. Otherwise, the medium-term structure is fairly intact.
Okay, so that's with regards to where SBI stands. Shahina, your quick view on the SBI fundraising because considering the fundraising will happen, the ROE is expected to go down because of that. What is your expectations with respect to where fundamentals stand for the counter?
Well, I believe the ROA will be anyway maintained above 1% over the medium term, take a year's view. And in terms of price to book also is very attractive. It's just about 1.2 times. The loan book as well as the deposit growth has been healthy. So I would stick with the levels that Kush has given. Keep a stop loss of 780 and it's good to go.
Okay, so that's with regards to where SBI stands. All right, our next caller, Pradeep, is calling in from Bengaluru. Pradeep, a very good morning to you. I believe you have a question on Readington.
Yeah, madam. I'm having 100 shares of Readington purchased at 156 rupees.
Okay.
So it's nearly doubled.
Right.
It's been 2 years. So should I hold on to it or should I book profits on it?
Okay. Did you see the fundamentals of the company while buying or did you see the charts?
Fundamentals.
Fundamentals. Okay, Pradeep, I got your question. I'll take this up with China. China, what's the view with regards to where Readington stands?
It's a definite hold even as of now. The stock has given good performance last couple of quarters. But at the same time, if you see the numbers, the profit growth was substantial. If you see the fourth quarter numbers, the company is doing much better. It is moving towards the 1 lakh top of turnover type of levels, and I would say margins also improving. So it's a hold at current levels.
So it's a hold on Readington. All right, the next question is on Aloc Industries, and this is a relatively short-term question, and Raghavendra from Bengaluru's got it. He's bought 1,000 shares at a price of 29 rupees per share, and he's losing ground. And I know what Kush's strategy is on averaging. So the question is, should he hold on or should he exit at a loss?
Yes, Alex. So averaging is a no-no. As far as the levels go, I think he might be he might have to perhaps start booking some losses along the way. Luckily, that might just be at the higher side because now the stock's actually seen a good rebound. 200-day moving average around the 20 mark was a bit of a resistance today. It's taken out that level with with a very sharp uptick in the volume. But all of that said, there is a supply zone near the 24.50 mark. Once that is taken out, even 28, 29, the level that we spotted at, that zone remains a bit of a supply zone. So he could see some selling coming in. Now, since the stock is rebounding on the back of good volumes, suggestion is to hold with a stop loss at 20 or maybe just under. But I would also go ahead and suggest that keep booking profits along the way between this 24.50 to 29 zone. Don't wait for your buy price to come in because some supply pressure could push it sideways or maybe some declines along the way as well. So from 24.50 to about 29 onwards, you should start booking profit.
Okay, so that's with regards to where Aloc Industries stands. Our next question is from Anil, who's writing in from Mysore. He's purchased KPIT Tech 50 odd shares, bought at 1305 a piece, sitting on a loss of roughly 1300 odd rupees, and wants to know if he can hold or sell at the moment. And this query is from a shorter term perspective. So Kush, I'll again come to you on this one. What is the kind of support and resistance that you're seeing on the charts for KPIT?
The view on KPIT is an exit. It's not been able to break out of some of the key resistance levels. Just to begin with, the most important one is at 1400, where the 200-day moving average is, and the stock seen rejection at least about 3 to 4 times in the last as many months from those levels. On the way down, you're actually looking at about 1150, 1170 kind of levels, as support, where the stock has rebounded a couple of times. But the medium-term trend is downwards. Any attempt at an up move has been thwarted. So I would suggest an exit. Whatever loss is at the moment, you're better off taking that and exiting and perhaps redeploy somewhere else. But KPIT for now remains in.
Okay, so that's a view on KPIT Tech. We've got our next caller from Pune. Priyanka is calling us. Priyanka, very good morning to you. How can we help you today?
Yeah, very good morning. This is Priyanka calling from Pune. I have purchased some Havells shares a few days ago. Today it's going down. Okay. I just wanted to know the rally is again coming up for the Havells shares.
Okay, and when you bought it, Priyanka, can you tell me as to what you had in mind when you bought it? Did you buy it because of the fundamentals of the company, or did you buy it thinking that you would hold it for a few months and then sell it?
Yeah. I purchased those shares based on the fundamentals of the company because this company has no debt almost.
Okay. Okay.
Yeah.
Okay. And what else
I just wanted to hold it for a few months.
Okay. Okay. Understood. Okay. So Shaina, it's an interesting question because it's bought on the fundamentals, but she intends only to hold for the short term. What would you say about Havells specifically?
Well, I do believe that going forward, Havells will do better. We have seen a bit of correction, but I think at current levels, it's better to continue to hold and keep a target of about even 1,700. Because I think in terms of volumes, given that the power sector is likely to do much better and they have got good even consumer durable products, I would say it's a hold at current levels.
At current levels for Havells is the view coming in from China. Our next question is from Bharat, who is writing in and wants to know about the future targets for Union Bank. He's writing it from Hyderabad, and this is from a longer term perspective, I believe. So I'll come to you on this one, China. Lots happening with that particular bank. Yesterday we heard about how the top management was demoted. What's the view like here, and what should one do if he's holding from a longer term perspective?
At current levels, it is better to continue to hold because in terms of valuation, it is one time. There's a lot of consolidation that is happening in the banking sector, and I think Union Bank could be one of them. So to that extent, it is a hold. In terms of growth also, they are picking up. Balance sheet also is improving in terms of net NPAs coming down substantially. So it is a hold at current levels.
Union Bank of India in focus on account of fundraising as well. If I remember correctly, 3,000 crore rupees is what they, yeah, there you go. So 3,000 crore rupees in the way of fundraise. There are details as to where, or actually it's a total of 6,000, of which 3,000 is going to be in equity, 3,000 crore in bonds, and of that, a portion of that is going to be in additional tier 1 bonds. There you go, I remember correctly. All right. So, and by the way, in case you want to read any of that in more detail, the implications of that, you can check out the website ndtvprofit.com. Lalita is calling us from Hyderabad. Very good morning, Lalita. How can we help you today?
Hello.
Hi, Lalita. Please go ahead. Good morning.
Yeah, I'm holding Sonata Software Solutions.
Okay.
So can I hold it, or I just want to hold it for a long time. Is it good or not?
Okay. So when did you buy this?
I bought actually 3 months back.
Wow, so you made a substantial gain in a very short period of time. You want to hold for the long term. How have you defined that? Is it a few years? Is it more than 1 year?
It's more. It's just for 1 year. I didn't get it.
1 year time frame. Okay. So let me get you a view on the technicals then. So Kush, she's made a substantial gain in a short period of time, and so what should she do? Should she hold on for a period of 1 year?
First of all, kudos to her on buying the stock at the level at which she did. It's actually it's very close to the bottom that the stock had made, and has seen a good profit on that. So kudos to her courage on that. Now the stock has gone into a sideways zone. Since May, hasn't really seen a meaningful breakout. But the heartening fact is that any kind of down moves that you're seeing on the stock are on the back of very thin volumes. So my suggestion would be a hold. Also keep a stop loss or a trailing stop loss in her case, because she's in a profit, at the 395 mark, because that's a strong support zone. As long as the stock holds this current leg of consolidation, will be a healthy one and act as a launch pad for the stock to head towards 450, and once that is taken out, even a 495 as well. So continue to hold, but keep a trailing stop loss near the 395 mark.
Okay, so that's with regards to where Sonata Software stands. Our next question is from Krishnan, who is writing from Mumbai, saying that he has retired and he's holding 100 shares of Bharat Forge, bought at 1727 a piece since June 2024, and sitting on a loss of around 44,000 odd rupees, and wants to know if he can average at the current moment or not. Shaina, I'll come to you on this one. Bharat Forge, what are the views like?
I would say that it is better to average at slightly lower levels, but I think overall he can continue to hold. The levels he could average at would be about 1,120 type of levels. The company has got very good orders in defense also, and in terms of their raw material going forward, it is possible that that would be it would be more aligned. The US market remains an issue out there, because of which we've seen the stock consolidating rather than moving up because of the tariff issue with the US. And Bharat Forge does have a lot of products that go to the US market. So the tariffs and the sales in the US will determine whether the stock can see the rally, going forward from here immediately or take some time to move up. So to add, it is better to add at dips rather than add right away.
Add at dips is the view coming in on Bharat Forge if you want to average out. All right, our next caller, Deep, is calling in from Hyderabad. Deep, a very good morning to you. How can we help you today?
Hi, Deep. This is Shashi, and Deep, I have 200 shares of Dixon Technologies.
Okay.
With an average price of 15,500.
Okay.
And I would like to know whether I can buy at current levels for accumulating for some more quantity. Because on the other side, there are more investor meets are going on, and promoter is selling his stake to the mutual funds, and some other brokerage firms are downgrading it. So I'd like to know whether I should buy it or just hold it, whatever I am having right now, the position, or else should I split it off at this position?
Understood.
Because this is just in 2% of my portfolio. So.
This is okay. This is just 2% of your portfolio. Okay, got your question. I'll take this up with Shaina. Shaina, what he's saying is that, and the brokerage that he's talking about was Phillip Capital, which is given a target price of 9085 for something like a Dixon Tech, which is currently trading at around 14,000 odd levels. What would you reckon? Because he's bought at elevated levels per se. Should he average out, average down, or should he continue to hold?
I would say he should, partly book some of his losses and switch to some other sector stock. Basically, Dixon Technologies, they are pretty expensive at current levels. So for it, the stock to actually move up from here is tough. Also, in terms of the mobile phones, they were talking of big numbers. I do not know going forward how much of it will translate in the next couple of quarters. So while the long-term business is good, EMS business is good, as well as the products that they have and for the future potential is good, but valuations are too expensive. So I would partly book my loss or profit and, add some other stock to my portfolio.
Okay, all right. So that's a view on Dixon Tech, and hopefully that answers your question. We've got more to talk about, but we have to slip into a very quick break. Do stay with us. We'll be back on the other side to take more of your questions.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares.
Watching Ask Profit, a show that gets all your stock related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us. And before I move on to those queries, quick look at how the broader markets are doing, they've turned into red. The mid-cap 150 is trading 0.1% lower. The small-cap 250 is also trading around 0.2% lower. So keep an eye out there. Plus the Nifty 50, of course, we'll be seeing a monthly expiry today. So keep your eye out there as well. All right, our next caller for the day then, Snigdha is calling in from Hyderabad. Snigdha, a very good morning to you today. How can we help you?
Hi, good morning everyone. So my question is regarding Netweb Technologies.
Okay.
So I'm holding 50 shares of Netweb Technologies at 1885 rupees. So I would like to hold it for 1 month.
Okay.
And I also want to know regarding Nestle, if if I purchase it today, will I get the bonus shares or not?
So I'll be able to choose only one stock for you, Snigdha. You'll have to choose whether you want to do
But you can answer
Tech.
the question on Nestle.
All right. So yes, because the bonus has been issued today, you'll have to see and wait for the cutoff date to come. But mostly it will not, take place today. So if you purchase today, you'll not be eligible for the bonus because it was already announced before. So
when's the record date?
Record date they've not announced yet. So we'll have to wait to see as
if
to
she
when.
has it during the okay.
No, but what she's saying is if she buys it today and if today is the record date that they announced, since the AGM is still going on, we'll have to wait and watch out
but
for
record date will be in the future, na? Abhi tak announced nahi hua hai.
They've given the date when the counter will be credited to your account. So I think we'll have to check that, Snigdha. So we'll get back to you on that one for sure. But with regards to where Netweb Technology stands, Kush, 1 month's chart, what are they indicating?
Well, I think there is some consolidation going on. The stock had actually made a good up move, but that gave way. I think you should continue holding on to this one because it's not too far from Snigdha's buying price. I think there's a good support zone near the 1775, 1750 zone. From where the stock has rebounded. So I think you should continue to hold on. I think on the upside, you're looking at targets of 1925 once that is taken out to 2050 as well. So the kind of rebound that the stock has taken is encouraging. Also, the down moves were on very low volumes. So I think the stock will resume the up move that it had that it started in early May. So all in all, I think the trajectory looks fairly encouraging. Momentum is missing and hence a bit of a hiccup. But other than that, I think the medium-term trend is intact. You should continue to hold. As I said, with the stop loss around the 1750, 1775 zone.
So, while that question was being answered, I must confess I did not listen to Kush's answer because we were both frantically looking at the update from Nestle. And the update for you, Snigdha called right now. Snigdha, essentially the announcement came today for the board approval for the bonus share. And so I hope you're listening to this because I think you've dropped the phone. But what that means is that at some point over the course of the next few weeks, there will be a record date for this bonus issue. If you hold shares before that or on that record date, which means that you would have to buy it before that date, then you will receive the bonus share issue. I think what Mahima was referring to was that you will be credited those shares by August. That's correct. Okay, fine. Let's take the next question. Swiggy is the name of the counter that we're talking about, and it's a short-term question that is being asked. Rajiv Bhatia wants to know. He's writing in from Bengaluru. He's bought at a price of 525, and he's looking to hold for the next 1 to 3 months. And what the outlook is what he's searching for. Kush, I'm just going to take a chance. Do you have enough data on this to give us a view?
Yeah, for a 1 to 3 month perspective, yes, there's enough. My own see that the trajectory of the stock is upwards. It's made a good rebound. It's taken out some key resistance levels, on the back of good volumes. My only hitch is that his price is above the 500 mark, 525. I think you mentioned that could perhaps take some time coming, maybe more than 3 months. The reason for that is that if you look at the bottom of about 300, the stock made in early May. The stock's already up about 33 odd %, right? So any further up move from here on will actually put it in overheated territories, which it is very close to actually. So the trajectory is upwards. I think there will be some bumps along the way as well. But if he can extend his time horizon to maybe 6 to 9 months, then I think he is very well in for seeing his fine price. So I would suggest maybe extend your time frame if you can. If not, you might just have to settle for a slightly lesser loss than you are in currently. Anyway, the support zone for the stock at the current juncture is close to the 380 mark. So if the stock falls below that level, you should exit because this rally will then perhaps fizzle out. So 380 is your stop loss. Continue to hold. You might want to extend your time frame to see your buying price.
Okay, all right. So that's view on Swiggy. Vishwas is calling us from Mysuru. Vishwas, very good morning to you. How can we help you today?
Hi, sir. Good morning, sir.
Good morning.
Sir, Varun Beverages stock 200 quantity in average price of 408, profit in 4,000 last, sir. Exit till or what, sir? Technical analysis, please.
Got it, sir. Let me ask your question to Kush. Kush, it's a pretty straightforward question. 200 shares bought at a price of 480 rupees per share. What's the outlook?
And a very, very straightforward answer for Vishwas, exit. The VBL has been on my short list or rather shorting list for some time. I've initiated a couple of short calls as well on Varun Beverages, mentioned that on the channel as well. If you see, it's in a downward sloping channel for some time now. Support zones are fairly deep, close to the 410 zone. So no point holding on to this one. My suggestion on VBL, very clear, exit.
This is the view on Varun Beverages where charts are concerned. All right, our next question is on Ashok Leyland. Kantibai is asking this question. He's purchased 46 odd shares at 245 a piece and wants to know if he can continue to hold or not. China, your view on Ashok Leyland?
Yeah, he should continue to hold. They are getting good orders from defense, as well as I would believe that their margins should improve going forward. So it is a hold.
Okay. We're suddenly getting a lot of questions from Pune, Amchi Pune. Let us know and shout out if in case you are from a particular region, because that will help us identify who you are. We've got our next question, incidentally, from Shivats, who's writing in from Kolkata, and he's got REC, which he's bought 4,500 shares of. 245 is the buy price, and he bought this 2 years ago. He sold 6,500 units at 480 to 500, but he's currently holding 4,500 shares. So he's sitting on a pretty decent profit. He's asking what the outlook is for the next 3 years. I do remember that PFC, Power Finance Corporation of India, China, had announced that it would be raising funds via debt over the course of the next 12 months. What is the outlook on REC? And I'm pretty sure that it would also be able to take advantage of the lower interest rates. And so for it, the spread should improve.
Yeah, absolutely. As well as in terms of valuation, also REC is very well positioned versus some other finance companies. Pure power play where power is, going to have good growth going forward. REC has very good order book position, as well as in terms of valuation. As I mentioned, it's a dividend play also. Dividend yields is pretty high. So I would say, you can also add REC at current levels if you're looking at the medium to longer term.
Okay, so that's with regards to where REC stands and buys the view from China. Our next caller, Harish, is calling in from Visakhapatnam. Harish, a very good morning to you today. How can we help you?
Good morning, madam.
Good morning,
I'm having Tanla platform 100 shares at the rate of 739.
Okay.
Can I hold or exit?
Okay, and Harish, you bought this from a longer term perspective, or did you see the charts while buying the counter?
Buying the counter. The chart.
By seeing the charts. Okay, Kush, your view on Tanla platforms?
So I would suggest a hold on this one. The stock's seen a very interesting and a very sharp up move, and hence the consolidation for the last 10 sessions. Also the 200-day moving average. And there's also a convergence of the 20 and the 200-day moving average, but it's now starting to shape up more like a golden crossover when the 20-day moving average could well take out the 200-day moving average, and that's technically a very positive sign. So I would suggest a hold. Incidentally, the next major resistance for the stock also comes in close to the 745, 750 zone, which happens to be his buying price. So there is a good possibility that he might get to exit at his cost price, if not in profit. So a hold on Tanla, slightly deepish stop loss, comes in close to the 610 mark. So that is where he should keep his stop loss and continue to hold.
So the next question is from Pratap Shinde, who's writing in from Pune, and he's got Jaypee Power Ventures, which he's bought at levels of 18.4 rupees. Now, the stock is currently trading very close to the buy price at 17.9. But if I remember correctly, this is part of that Jaypee Associates group. And there was a story that my colleague Vishwanath Nair had this morning that said that it could be in the process of being bought. So if this is an acquisition candidate, just wondering, Shahina, what your view on this particular counter would be. Would you hold on, or would you exit at this point?
I would say it is a hold at current levels. There is some resolution happening, and it will happen in the near term. So it is better to hold on. I think the assets that Jaypee Power has, it is likely to, see the stock price moving up from here. And it's you can hold it, keep a stop loss of around 16 rupees if you would like. But otherwise, it's a hold from here on.
Hold for Jaypee Power from Shahina. All right, our next question is from Reddy Jain, who's writing in from Pune. She's bought Ola at 100 rupees is what she's saying, and she's sitting on a loss of almost 3,000 odd rupees and wants to know if she can hold or sell at the moment. She's holding 50 odd shares. Shahina, what's your view like on Ola?
I think it's extremely risky. There are other better stocks available. I used to be very positive on the stock, but unfortunately it has not delivered, and things are not looking too good for it going forward. So I would say it's an exit.
An exit on Ola. Things are not looking good. Indeed, the Vahan data that came out, which is essentially the retail sales data, the most recent print, seems to suggest that it is losing a market share in the two-wheeler space, in the two-wheeler electric vehicle space. TVS Motor, by the way, is climbing in that space, so watch out for that as well. We've got our next caller. Ravi is calling us from Hyderabad, asking about PNB Housing. Ravi, very good morning to you. How can we help you today?
Very good morning, Alex.
Please go ahead.
My query is on PNB Housing Finance. I'm holding 50 credits, bought at 1064.
Okay.
So, shall I hold or shall I sell?
Okay, give me some context here, Ravi. Did you buy it for the long term? Did you buy it based on the fundamentals?
Yeah, based on fundamentals, I bought it, and my time horizon is next 1 year.
Sorry, I can't make out what you're saying. Your time horizon is?
1 year, next 1 year.
1 year. Okay, Shahina, is this the best pick, PNB Housing? There are several players in the housing finance space, and among them Bajaj Housing Finance. There's also a good opportunity to ask you about the IPO that's underway. A lot of people paying attention to HDB, not necessarily a housing finance company. It's pretty diversified. But would you subscribe to the IPO, and what's your specific view on PNB Housing?
The IPO, in my view, it's a bit expensive versus the other finance companies in that space. So I would prefer a Geo finance versus HBD. In terms of PNB Housing, I think the valuation is very attractive. So in that space, it's about 1.8 times book, which is attractive. You could also look at Goodco. So I think both these stocks look good in the housing space at current levels.
By the way, incidentally, I didn't know, but now I do, and now you will as well. HDB Financial is going to be the stock that we focus on Know Your Company today, and it's in focus. It should give you a sense of whether or not to subscribe to the IPO. Today is the second day. Today is the second day. Today is the second day of the IPO. It hasn't been subscribed by a very large amount. And so you should watch for whether or not you get allocation. First of all, whether or not to buy. According to Shahina, who just spoke about it, she thinks that it's a little expensive. But we've got an analyst on Know Your Company as well. We spoke to the management yesterday, and you can find all of that on the website or in fact on our YouTube channel. But you can tune in live at 11:30 to Know Your Company so that you can understand what the rating that NDTV Profits research team has given to this particular stock. We've got our next question from Bengaluru. And Priyanka is asking, Joti CNC is the name of the counter. She's bought at levels of 1,213 rupees per share. Should she hold or add more at the current level is the question. Kush, on the charts, the stock is currently at 1,125. What's the view?
So, she'll have to have a longish kind of a time frame for this, and by that I mean 6 to maybe 9 months. On the whole, if you ask me, the stock's actually gone sideways. The weekly chart also suggests that in a couple of times the stock has seen rejection around the 1,300 mark. So that's a supply zone at a much higher level though. But yes, from a near-term perspective, continue to hold. A stop loss will be close to the 1,050 mark. And on the way up, there could be resistances around the 1,200 and 1,250 zones. But I think that should that should fairly cover her buying price as the stock starts to move higher. As I said, she might just have to keep a slightly longish time frame, 6 to 9 months. If she's fine with that, then yes, she should continue to hold with a stop loss near the 1,050 mark.
Okay, so that's with regards to where Joti CNC stands. Our next caller, Akshita, is calling in from Bengaluru. Akshita, a very good morning to you today. How can we help you?
Hi, good morning. So I'm holding around 50 shares of CDSLs and I bought it at around 1964 rupees.
Okay.
And now that I'm trailing under the losses, so should I have to average it or should I sell it or keep it on hold? I just wanted idea on that.
Okay, and this is from what time horizon perspective?
So this I've been holding for past 1.5 months, so
Okay.
I just wanted to check on that.
And you want to continue to hold it for how much more time?
Maybe for another 4 to 5 months.
4 to 5 months. Okay, Akshata, I got your query. Push, what are the charts indicating for CDSL?
I continue to hold CDSL, no doubt about it. There has been even the profit booking round that came about, which took the stock from 1800 all the way down until about 1550. But mind you, that was on the back of, the serious overheating that the stock, in fact, a lot of stocks from the capital market space had already seen. So my suggestion would be continue to hold on. This is a healthy sign, the profit booking that the stock has witnessed. It's creating room for the next leg of up move for the stock. 1625, 1650, a good support zone that should act as your stop loss, for this rally, this leg of up move. If that is sustained, then yes, the stock is actually looking at 1950, perhaps even 2100 as the next levels of resistance or targets. In her case, so CDSL, the kind of moves that it's seen is a hold in my books. 1650, 1600, those could act as your stop losses from a 4 to 5 month perspective.
Okay, so that's with regards to where CDSL and hold is the view coming in where charts are concerned. The next question is from Rakesh, who's writing in from Bengaluru. He's holding 100 odd shares of Tata Motors at an average price of 748 for the last 250 odd days. Wants to know if you can hold or sell and what could be a good target price for this particular counter. Shana is sitting on a loss of 7,000 odd rupees right now. Would you recommend him to continue to hold Tata Motors?
Yeah, he can continue to hold Tata Motors. I believe while there has been some issue with JLR in terms of China sales, but I think the prospects are good. The tariff settlement between UK and India will be a positive for Tata Motors going forward. And in terms of the reorganization of the company, that is very much on the cards, that they're going to divide the company into the PVC in the two segments, in the HCV PV segments. So to that extent, I think it will be a positive value unlocking for investors. So you can continue to hold Tata Motors.
Okay, continue to hold Tata Motors is the view as things stand right now. Rakesh is calling us from Vijayawada. Rakesh, very good morning to you. How can we help you today?
Actually, I have a coal pal.
Okay, Colgate Palmolive, yes.
2420.
Yes.
A very short term. Today is very drastically fall down around 55 rupees, while other assets are going up.
Yeah.
Any reason?
Okay.
Any idea?
Okay.
Or should I hold or should I sell it?
And
if I'm getting some loss around 11,000.
Okay. So Rakesh, how long do you intend to hold this for?
Hardly 1 month.
Hardly 1 month. Okay. So Kush, on the charts, what should he do? He's worried about the losses that he's incurring today.
I think he should continue to hold. The near-term trajectory has turned bearish, but the stock on much smaller time frames is starting to go into oversold territories from where it could see a rebound. I'll give a slightly deepish stop loss from where the stock has rebounded, and that comes close to the 2300 mark. One reason why the stock is seeing some pressure today is also could also well be the monthly expiry and the rollover activities that are playing up. But as long as 2300 is held, I think the stock could see some sort of a short covering bounce as well. So yes, continue to hold, but the near term stop loss or support zone on this one is 2300.
So that's the regards where Colgate stands. Our next question is on another FMCG company, that is HUL. Mohammad Ishaq has bought at the levels of 2,500. He's not given us the number of shares that he holds, but wants a view on this particular counter. Shahina, yesterday, they announced about how Unilever as a parent company is selling its ice cream business to Magnum, and how that Quality Walls share will now go to Magnum Limited. Just want to get a sense as to how, entire rural picking up plus urban slowing down, and of course demand recovery to be seen in this particular year. How are you reading that for the FMCG companies and HUL in particular?
Well, I think there is a pickup both in rural as well as I think urban is doing pretty okay. Monsoons are good. HUL, there is restructuring in terms of the ice cream business, as you just mentioned. And even in the India business, there will be a restructuring where the investors would probably get the share of the transfer of the business, ice cream business, going forward. So to that extent, I think HUL, it's always expensive, but it is showing some bit of consolidation in terms of stock price. If I'm a long-term investor, I would remain invested.
All right, so that's the view on HUL. All right, I do want to take the next question, particularly because it's very late in Florida, where Mehta is tuning in. Mehta says that he's writing in from Florida, and he's got Anupam Rasayan. He's got a significant quantity, 50,000 shares at a price of 707 rupees per share, and he's sitting on a profit of 2.1 crore rupees. Kush, he's asking for a suggestion as to what he should do right now. Should he book out and move to something else, or should he add more?
It would not be a bad idea to book out, because the stock has seen, Alex, a near vertical rise from precisely those 700 levels. So Mehta's splendid buy, and kudos to the courage to hold on to this one as well. But now the stock's gone into overheated territories, not only on the daily time frame, but also on the weekly time frame, which suggests that profit booking could be around the corner. For the last few sessions, the volumes have been thinning. A couple of sessions of profit booking also kicking in. Not a bad idea to take money home partially, at least about 75%, if not completely. And if you're booking it partially, then for the rest of the quantity, the trailing stop loss I would suggest would be at 1050.
Okay, so that's the view with regards to Anupam Rasayan stand, and sell is the view where charts are concerned. Our next caller, Shankar, is calling in from Kolkata. Shankar, hi, a very good morning to you. I believe you have a question on Berger Paints.
Very good morning, madam.
Good morning.
50 shares of Berger purchased at 507 rupees.
Okay.
I had wanted to hold it for long term of 2 years, but because of the crude fluctuation, the stock is a bit unstable. So should I hold it, or should I book profits?
Okay, got your question, Shankar. Shaina, what's the quick view for Berger Paints? What he's saying is that crude prices are going up, but now they've stabilized to some extent. What's your view like? From a 2-year perspective, should he continue to hold Berger Paints? It's seeing market share gains.
Yeah, I think you can continue to hold. In terms of crude, as you mentioned, crude prices have come off and are stabilizing. So I would say continue to hold. Most of the sectors are, in terms of auto, they are likely to do better in the current year in terms of consumer durables. So it's a hold. Also, in terms of competition, yes, you have big competition coming in the paint segment, but I think Berger Paints is likely to hold its market share. So it would be a hold with a 2-year perspective.
Okay, it is now time for the rapid fire round, and both of you know, as Ask Profit veterans, Shahina and Kush, you know what this entails. Let me start the first question with Ashok Reddy's question on Ircon International. He's been holding for 8 months, and he's asking whether he can hold for another year. He's bought at levels of 250 rupees per share. Kush?
Yeah, continue to hold, keep a stop loss at 185.
Okay, the next question is on Sensera Engineering. Shrikant from Bengaluru has bought it at an average price of 1200. Should he continue to hold, Shahina?
Pass, I don't cover it.
Kush, your quick view? Sensera Engineering.
Sensera Engineering.
Yes.
Yeah, I'd say continue to hold, keep a stop loss at about 1290.
Okay. Geo Financial Services bought at levels of 320. Would you hold for the long term? Abhilash wants to know. Shahina?
Yes, it's a hold. I had already recommended it as a buy, so it's a hold.
Okay, E2E Networks is the next counter. Ananta is holding at the price of 2798 and 18 is the quantity. Kush, on the charts?
Exit.
Tanla Platforms is the name of the counter, and is okay. I don't have a no. This is not a question. Axelia Solutions. If we have a view, 1891 is a buy price. Kranti Kumar wants to know whether it should be held or exited. Kush?
I'd suggest a hold, keep a trailing stop loss at 1350.
The next question is on HAL. Venkat from Andhra Pradesh is holding 8,000 shares at an average price of 3608. He's saying he's already sold 7,000 odd shares, but still holding 1,000 odd shares. Shaina, your view on HAL?
Yeah, he can continue to hold.
Okay, Vipin Paulos is writing in from Liverpool in the United Kingdom and asking about in IGIL, which is bought at levels of 552.9 rupees per share. Kush, should he hold?
You should ask him if he is a fan of Liverpool as well, like you are.
Next time.
next time. But IGIL, not really doing much. I would suggest an exit. But if you do want to hold, then keep a stop loss at 3 points.
Yeah, well, he's from Liverpool. He could well be an Everton fan. Let us know what you are actually, Vipin, or if you watch football in the first place. But thank you so much, Kush, as well as Shaina, for joining us today. Always a pleasure having you on the program. All right, that brings us to the end of this edition of Ask Profit from Mahima and myself and the team that put this show together. Thank you so much for watching. Hope it's been useful to you. Do stay tuned. Up next is Know Your Company, and this is NDTV Profit.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100%.
Now, one of the things that's taken grip and center stage
this week is the IPOs, and within that IPO frenzy, there is HDB Financial. Welcome, you're watching KYC, I'm Harsh Saita, and today we're going to focus in on HDB Financial. 3 or 4 parameters that really pique interest with regard to an HDB. One of them being the fact that it's owned 74% post this IPO by an HDFC bank. But what you want to see is whether there is a real large risk of that holding coming down to 20%, because that's what the RBI draft norms are pushing NBFCs to do. And within all of this, of course, is the fact as to whether you should subscribe to the IPO or not. And we'll get some insights from analysts on this entire RBI issue possibly, which could come up with regard to an HDB. RBI in a very different mood and therefore may not materialize as well as a risk, but we'll understand that risk better. The second piece is the interplay between growth and valuations. It's a decently fast growing company, and the IPO valuation is something that we'll highlight, compute and give you a deep dive on as to how you should look at. And we'll also ask analyst, one of the analysts who we're speaking with today, as to how he looks at both the price to book valuation as well as the 1 year forward and maybe the next 3 years that he sees with regard to this one. The promoter ownership shrinking, that's the third risk which I'm talking about, and we spoke a little bit about that risk. It'll come straight up on your screen. There you go. And whether this business is highly cyclical. How should we look at the business? Because you have HDFC Bank on the one hand with a very stable lending business trading at 2.5 times price to book. And then you have this business. Is it slightly chunkier? Is there a risk and high level of cyclicality within this, or can that cyclicality stabilize? And yes, in the good years, will it be extremely good? And in the bad years, can it maintain status quo? Even a 2% ROA is not bad in a bad year. And that's what I want to understand better. And fifth point being, can it sustainably continue to generate profits? I want to pull out one nugget. In the last 8 years, HDB Financial has not done a fresh equity raise even once. So from its loan book size of 35,000 crore to the current loan book size of 1,06,000 crore, it's not done one fresh equity raise other than ESOPs, of course, which is a big thumbs up, right? There you go. So what you want to actually understand is whether this profitability can sustain going forward as well. Again, even in the IPO dilution, it's a small dilution that they are doing with regard to fresh issue. It kind of raises the question that sustainably, our ROE ratio is just significantly strong to take care of growth. And we'll try and dissect some of those angles as part of KYC today. Let's though first off start by understanding what HDB Financial actually does. Let's start from scratch. Let's pull out the RHP. For those who haven't read it, let's pull out the RHP and do a little bit of reading. Well, it was incorporated in 2007. It's a retail-focused NBFC. So while at its core, it's not retail like a Bajaj Finance, but it does lend to individuals and small businesses. And that's why that granularity is what causes it to be called a retail-focused NBFC. And it's the 7th largest retail-focused NBFC in the country. It covers around 1,170 towns and cities. It's spread across 31 states and union territories. So even in terms of the diversity in terms of geography is very, very large, right? Which causes more granularity. It also brings in an element of stability, because no one region impacts the book as a whole. It has 1.92 crore customers. This has gone up from 1.2 crore customers in FY23. So just look at the growth in the customer count, which is getting added in the last 2 years alone, is nearly 60 lakh customers. So 50% of all its customers combined since 2007. 50% of that, or rather 30% of that, 33% of that, it's done in the last 2 years alone. That just goes on to show that the scale is starting to pick up. It has over 1770 branches and has an average ticket size of its loan is around 1.65 lakh. This shows how granular the loan book is. In fact, when I was reading through, the top 20 borrowers comprised less than 1/3% of the cumulative book of the NBFC. That kind of shows how granular it is. Now let's talk a little bit about what's unique with regard to HDB. I've already spoken a few things about what's unique, but let's talk about this, the macro factors that's unique. 80% of the branches are located outside of India's 20 largest cities. Over 70% are located in tier 4 plus towns. I also want to talk about how it's more focused to underserved and underbanked customers. That's the larger focus. And the low to middle income households with minimum or no credit history is what they cater to. In terms of a little bit more on that low to middle income households with no credit history, around 12% of the loans are to people or persons with absolutely no credit history. You want to take note of that number, because that also presents its set of risks, but it also lends to the fact that if they have been doing this for so many years, they've got some formula right, and therefore you want to look and pick as to whether that's a risk worth taking or not. But that's broadly what you should know. Let's talk about the business now. It's obviously into lending. Let's talk about enterprise lending. That constitutes around 40% of the book. Business loans, LAP, gold loan, and salaried personal loan. These are the constituents of enterprise lending that they do. Let's talk about asset financing. Again, around 38% of the book. Tractor, CV, and CE loans is what it caters to. And then there is consumer finance, and there are a whole bunch of consumer finance loans that they give, which contributes around 23% of the book. Asset finance is fully secured, and 73% of the loan book along with it is absolutely fully secured. Of course, in case of a default, there are certain processes which kick in and take time to kind of liquidate assets, but it lends some amount of comfort to the way in which the loan book shapes up. I'm going to take a minute's pause here. Let's look at the loan book mix one more time. These are the other services which or rather the loan book mix share. That's how it's structured, and what you're seeing on your screen is the enterprise lending loan has come off, asset finance has gone up, and consumer finance has gone up. That's how the mix share is. But let's slip into a very short break.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs, and the stock exchanges.
That's huge. That is a biggie. It's out there.
Gold Plus Clear Glass. Far ho ya near, sab kuch dikhe clear.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs, and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live.
Thanks for staying with us. Let's look at the metrics that we look for in an HDB Financial. We start off with the income statement, balance sheet. We look at key metrics individually, which includes yields, margins, ROA, cost to income. We'll also look at the asset quality of the financier. We'll look at shareholding pattern, valuations, and we'll look at risks. This is slightly different because street coverage is not something we have. So again, that is a key component. Let's quickly look at the income statement. You look at the net interest income growth. It's been at roughly 17% odd over the last 2-year CAGR. The operating profit has grown at a 41% CAGR. They're also doing, mind you, they also do back office services for an HDFC bank. So that contributes to the other income line and the other services that they provide. Provisions has in fact gone up in FY25, and that's why you're seeing that CAGR number quite high. Profit is up just about 5% due to the higher credit costs that we've seen. And therefore, any tapering down on the credit cost could well aid profitability if that were to happen, and any increase in the credit cost could cause cyclicality to profitability. This is a risk we've spoken about. We've given this a neutral because of exactly and precisely that reason. Let's now talk about the balance sheet and look at the way in which that one has grown. Last 2-year CAGR has been 24%, 3-year CAGR has been 20%. So decent growth on the balance sheet front. Borrowings is up around 26%. When you're also looking at the capital adequacy, it's very, very healthy. Mind you, you want to note those 2 points that I spoke at the start. The first point being that in the last 8 years, they've not done a single equity raise. Extremely solid. And profitability is basically what is driving growth here. And the second piece, of course, of that is that in the meantime, your gross loan book has gone up from 35,000 crore to 1,06,000 crore. So growth has been extremely strong as well in those years. But a 20% 3-year growth is not bad at all. We'll give this a thumbs up with a 19% capital adequacy. Again, not looking bad. Let's look at the key metrics now very quickly. Yields are at 14%. You see your cost of borrowing is roughly 7.9% for FY25. So again, that is not bad, and it gets advantage with regard to cost of borrowing because it's the subsidiary of an HDFC bank, and that kind of gives it a little bit of leverage in terms of cost of borrowing versus its peers, even within the same risk bracket. When you're looking at margins, they've come off slightly, but that's how the rate cycle has also progressed. With this rate cutting cycle starting, it could well aid margins as well going forward. Look at ROAs. ROAs have come off in this year, and that is because you've seen some bit of credit cost spike which has happened, and therefore that is playing out on the ROA number. But look at how cost to income has evolved as a result. Credit costs increasing, they've tapered down on their cost to income. 49% is where that cost to income currently lies, which is also elevated. But nonetheless, this looks like a decent set. 2+% ROA in a tough cycle is not bad. 3% roughly in a decently okay cycle is again very, very creditable, and therefore we've given this a thumbs up overall. Let's look at asset quality metrics. Your NPA ratios have come off but have bounced back up in FY25. We spoke about this, and your net NPA too has bounced back up. This will see cyclicality on a year-on-year basis, and it will depend on how the business and the credit cycle is evolving, and therefore we've given this a neutral, but it's fairly controlled. Given the kind of borrowing or lending that it does, this is not a bad net NPA ratio to have, which is sub 1%. So they're providing well with regard to their NPAs. Let's talk about shareholding now very quickly. You're looking at promoter holding, which is at 94% currently, expected to fall to 74%. Right? Now the real risk here is if RBI's draft norms are implemented and this promoter holding is mandated to fall to 20%. 2 reasons why this will happen. One is if there is no distinction or distinct lending, which HDB Financial does versus an HDFC bank, it's a very real risk. They've carved out this risk. So you want to keep your eye out on that. The second is, of course, if they continue to hold HDB Financial and don't merge it into the bank. That these two could well translate, and of course if the draft guidelines are made final in its current state, these are key risks with regard to shareholding pattern as well, and hence we've given this a neutral. You want to wait and watch how this one evolves. This is a key risk for every holder of the stock. Vishy joining me as well. Vishy, any thoughts on this piece?
Yeah, so as what you were mentioning earlier, that there are certain risks that are inherent, Harsh, to this kind of business, especially the point that you made about the subsidiary guidelines of the RBI. Now, that is a bit of a roadblock especially as far as HDB Financial is concerned, because HDFC Bank owns the majority stake, currently 94%, post this issue about 72% that they're going to hold in the NBFC. And if the businesses are not materially different, then it becomes a real choke point. But of course, it is incumbent then upon the management of the NBFC to convince the regulator that, yes, they are similar umbrellas, but we are entirely two different entities doing supporting two different types of clientele. Remember that was what is the RBI's major concern, that you don't want the same group to lend to the same entity through multiple lending arms. So that is something that the RBI wants to avoid. And if they're able to convince the RBI that this is how the businesses function, then things might look a little bit better.
Right. So that's with regard to the shareholding pattern, something you should keep an keen eye out on. Let me look at valuations now. It's currently trading at the list price to the book value, or the IPO price to the book value, not the list price. The IPO price to the book value is 3.7 times. But that's not the right way to look at it. You have to look at the book value post the equity infusion, and the book value post the equity infusion is 3.33 times. That is the current book value post equity infusion. This on a 1 year forward basis could well be 3 times, and I'm assuming that last year's profit after tax will continue in FY26 as well. That's a conservative estimate. A lot of analysts on the street are estimating a slightly better 1 year forward price to book, but we've been conservative here. Doesn't look particularly expensive, but doesn't look particularly cheap either, and therefore we've given this a neutral Vishy. And the last piece is with regard to risks. Now, we spoke about at length about how the promoter may be required to substantially reduce ownership to less than 20%. Seasonality, which impacts the business, we've spoken about this. Non-payment or default by customers. A lot of these risks are also highlighted in the RHP. So if you do have the bandwidth, please do read the RHP before you subscribe. But even if not, we've covered the key risks here. So it kind of gives you a good lens. Also, secured loan defaults will likely lead to risks to enforcing collateral, which has its own set of procedures and practices. Offer for sale is 10,000 crore, which is a large chunk of the IPO. Conflict of interest with HDFC Bank, of course, both lend to, or rather are lenders in itself. Trademark and license agreement is present with HDFC Bank. Volatility in interest rates impacts the numbers, and competition, of course, is starting to rise again in some of the pockets where HDB Financial lends to. Last off, I want to also talk about how the street is looking at this. All analysts have an apply on this one. Let's quickly stack up all the ratings, and that gives us overall a 5.5 out of 8 on our KYC ratings. We'll have that on the screen in just a minute. There you go. So that's the rating on KYC. Let's go across to Shripal Doshi. He's joining us, research analyst, NBFCs and SFBs at Equirus Securities. Shripal, great having you. Apologies for the slight delay that we've seen. Let me start off by asking you, how do you look at the risk of HDB Financial having to go through multiple cycles? Because the ROA cyclicality is evident. So how should one view that?
So, good morning, Harsh, and thanks for having me. So with respect to the volatility in the ROA, it's a function of the product mix also, if you look at it from that angle. They have a product portfolio which is across 13 subsegments, right? So while you have highlighted the 3 key categories, but then within that there are 13 products, and those products have gone through turbulent times let's say post-COVID twice. So in FY21-22 was a period wherein those product segments led to higher credit costs, not only for HDB per se, but at system level as well. And then also in FY25, we've seen that trend, let's say in segments like CV, in segments like personal loans, some of the retail loans. So therefore, the volatility in the credit cost leading to volatility in the ROA. However, if you look at it from the diversification point of view, it is still a very, very well diversified franchise, decoupling itself from one particular segment and the turbulence in that particular segment. So while there is volatility, it is the best probably in terms of diversification that a franchise can have to sort of decouple itself from these credit cycles or credit cost cycles.
Vishwanath here. I just wanted to join in this conversation and ask you a couple of questions specifically around the OFS bit. Now, HDFC Bank is going to offload shares worth 10,000 crore. Now, that's the stated goal that the bank has stated. Obviously, that will bring down a shareholding. Do you at any level see it as a material risk that the promoter is offloading a sizable chunk? And out of the 12,500 crore, this is a big part of this entire issue.
So see, this is also with respect to bringing the shareholding to, let's say, below 75%, right? Which is one of the requirements by the SEBI. So it is in sync with that, and I do not see so far any risk of this shareholding coming down to 75% or 74%, being very specific there. So I do not see any risk there because it continues to enjoy the AAA rating on the credit rating side, right? By most of the credit rating agencies. So bringing it down to 74% doesn't really have any impact on the credit rating or on any other operational aspect of the franchise.
Shipal, can they in some way circumvent the RBI regulation? And I'm assuming that this regulation becomes final, can they circumvent it by saying that they're doing a different business, it's a different cohort, a different set of clients that they handle?
So see, they are into different customer target segment actually, while the product portfolio is an overlapping product portfolio, or rather because they're into diversified product segments, right? But the kind of customer segment that HDB caters to is broadly different, or let's say relatively inferior versus where HDFC Bank is sort of positioned. And to your particular question on draft circular and its implication, so see, we'll have to wait and watch how the RBI comes out with the final version of that circular, because if they require the shareholding to sort of get trimmed down to a particular percentage, that could have an implication on how credit rating agencies look at these NBFCs at large. I mean, I would not only keep or contain myself for HDB, but also for some of the other bank-backed NBFCs such as Canfin Homes or let's say Fed Bank Financial Services or PNB Housing. So that will impact all of these guys from where the credit rating agencies look at these NBFCs, and that can have some impact on their cost of fund or their ability to raise funds at a lower rate from some of the banks or some of the financial institutions.
Shipal, one of the points that came out when we were talking to the management as well, this is before the opening of the IPO and as well as last evening, they're a slightly more conservative lender as such in terms of the way their business is structured. If you see the last 3 years of their asset growth, it's about 23% on a CAGR basis. Do you see that as a good sign, or in an industry where high growth is the norm, does that become an impediment at all?
So see, I was looking at the segments that they are into and what is the credit growth opportunity in those cycles for the next, let's say, 3-5 years time period. They are into product categories wherein the growth is anywhere between 15 to 20% CAGR. Be it, let's say, gold loan, be it the business loans that they are into, be it LAP or other categories as well, CV as well, right? And if you look at, so there is an opportunity in the segments that these guys are present into. And to a particular question, how they have done in the last 3-4 years time period, rightly said, the CAGR growth has been 20%, which is relatively conservative. But we should also keep in mind that in the last 4-5 years, we've seen two high credit cost cycles after COVID, like let's say FY21, 22, and also in FY25. So therefore, also optically, the growth CAGR looks little contained at, let's say, closer to 20%. But it is a franchise which delivers or which is very well positioned to capture higher market share in a good credit growth cycle. So when this credit growth cycle improves, we will see growth also revive.
Right. Shripal, how do you look at valuations? Any listing gains you're penciling in? Given the credit risk, just give us that perspective.
So see, with respect to valuations, if you look at on FY26 and FY27, as per based upon our estimates, it should be closer to 2.9x multiple for FY26 book value and closer to 2.5x multiple for FY27 book value. And so basically, we are not penciling in a very strong, let's say, peep of growth. But the PAT growth will be relatively higher, because if you look at in FY25, the credit cost was higher, which will sort of moderate in FY26 and FY27, which will lead to better PAT growth and leading to better book value accretion as well. So that's the sort of multiple that we believe the franchise is coming out at. And if you look at the other companies, let's say other diversified lenders such as Bajaj Finance or even Cholamandalam Investment and Finance, they are trading at a much premium valuation. So whereas from the parentage point of view, all of these guys come from a similar pedigree of parentage or promotership. So there is I would say at current valuation of 2.5x on FY27 book value, it's a fairly valued franchise with a upside possibility if the ROA improves to actually, let's say, 3% sort of a trajectory in FY26 and or even in FY27.
Excellent. Thank you, Shripal, for this. It's great getting perspective from you. Thanks for coming in, speaking with us. Completely out of time, actually, on this edition of KYC. From Vishy, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring.
Hello and welcome to NDTV Profit. You're watching Profit Insights. I'm Hiral Datia. Joining us on the show today is a veteran investor. He's come up with an interesting book which is called, and in fact, it is a young investor's guide to wealth and happiness from here on. It's the Book of Wealth. Mark Mobius, co-founder Mobius Capital Partners, joins us to discuss more. Mark, good afternoon and welcome to the show, and a pleasure to speak to you as always, and always a pleasure to read everything that you write about. First, what has been your motivation to come up with the Book of Wealth? Because you've been writing since quite a few years, and the number of books I think I myself have read, probably a dozen out of the ones you've written. What has been your motivation on this one?
Well, I wanted to reach out to the young people, people who are graduating from high school or middle school and going into college and so forth, to write something that will give them some guidance as to how to build their wealth. And of course, one feature of the book is that I talk about health as well, because I tell people wealth is nothing without health. So you got to have both. And I talk about that in the book as well.
What has been your best learning whilst writing this book? One, from a market's perspective, and two, from a personal life perspective, because I'm sure a lot of exploring that happens as well.
Yeah, well, the key, of course, is continuous learning. Even though I've been to university, I have a PhD and so forth, it means nothing unless you continue to learn and to be interested in other things. And one of the reasons why I travel a great deal is because it gives me an opportunity to learn about what's happening in other parts of the world. So I think that is I would say the key to being wealthy and also having a good life, learning and keeping an open mind.
Right. You mentioned about travel, Mark, and I think from 1999 to 2012, from the number of books that you've written, a couple of them you have Passport to Profit. I think you traveled extensively, if I'm not mistaken. 8 months of travel, globetrotting is where you went, and you actually were able to find the hidden market bargains overseas. From this book as well, any gems that you were able to find and give advice to investors?
Well, in the book, I outlined the different ways that you can invest, in currencies, in gold, in property, etc. I give them a menu of where you can invest. But the conclusion of all this is that equities, in other words, investing in shares of companies is the best, because companies basically are working for you. The managements of companies are working for the investor to grow their wealth. And companies in a diversified portfolio will have a very good return over a long period of time. So that is, I think, the key to having a very good portfolio, being wealthy. Of course, gold is something that I think everyone should have, physical gold. But after that, I would say it would be your own house. In other words, a place to live, to own your own house, and then equities in companies.
Okay. So, when you talk about, what you've mentioned in the book, you've clearly gone ahead and demystified the various financial instruments that probably a young investor can use whilst starting their investment journey. From stocks to bonds, you're talking about alternative assets as well. What would your pecking order be in terms of allotting wealth or allotting your funds right now to create wealth?
Well, I would say, first of all, it should be over 50% in equities, in companies' shares, and then the rest divided into maybe 10% in gold, and then maybe 20% in property, and the rest in other investments such as commodities or in other like platinum. I don't know, you've noticed that recently palladium and platinum are very good investments, similar to gold. But that would be the rough breakdown, I would say, in terms of someone's portfolio.
Okay. let's go back to a little bit of history in terms of all the books that you've written. Specifically, I was just going through Invest for Good as well. I think that was full of a lot of entertaining and informative anecdotes that you gave from your day-to-day experiences as well in the world of sustainable investments. From the current one, any such anecdote that you would want to highlight?
Yes, I think the most important anecdote or the most important lesson is that you've got to look at the people behind the companies in which you're investing. In other words, of course, you look at the balance sheet, you look at the profit and loss statement, but the key is who is running this company, who owns this company, and what is their ethical makeup? In other words, are they going to do well by you as an investor, as a minority investor, or are they going to treat the investor badly and maybe make some mistakes and go against the law or do things that would be not in the interest of the minority investors? So I always tell people, look behind the curtain. Who's running the company? Who is owning the company? And get a good understanding. Just don't look at the financials.
Don't look at the financials alone. That's the key. Mark, let's tie this up to all the books that you've written, the knowledge that you're imparting to young investors, to what's happening in the current markets right now. If you have to look at India as a place, where would it be in pecking order? Because I know you have been absolutely positive in terms of India. In fact, the last time we spoke as well, you did mention you're looking at a new fund where majority of it will be India focused, but you were looking at a couple of approvals to come through. Where are you on it? And then we will discuss how to tie both of these together.
Well, India, of course, is number one in my view. I want to invest a substantial portion of this new fund in India. And of course, the reason for that is that India's got so much things going for it. First of all, young population of 1.2 billion, a government who is digitizing and trying to raise the standards in the country, a more unified country coming together. All these factors are so important and make India really tops in my view. And by the way, one of the things we look at, of course, is economic growth. If you invest in a country like India, which is growing at 6 or 7%, you will know that the companies in that country, in India, for example, would be growing at double that rate. That's usually the case. And you can look at a 7% growth and you probably have 14, 15% earnings growth in the companies, in good companies. So that's what we're looking at. We hope to get approval to invest in India within the next month or so, and then we can begin to really fill the portfolio. Right now, we have 50% in cash, so we're ready and waiting for this opportunity in India.
Sitting on a 50% cash for the new fund, waiting for that opportunity in India to open up, and that's really a strong statement coming in there. But Mark, if you have to look at MSCI India, if I'm looking at data from the 7th of April to now, you have MSCI India Index, which has underperformed global peers. Secondly, if you have to look at inflation in India, that is at a multi-year low. So if you have to tie this up and the role both of this will play for the markets, which will be those pockets where you're seeing value?
Well, first of all, if you look at the growth rate, as I mentioned, it's still very, very good. Some people say it would be 7, it would be 6, but nevertheless, 6 is triple or at least triple that of the developed world. So that's number one. Number two, I believe the Indian rupee will get stronger going forward. And that's an important factor that you have to look at. And then thirdly, I believe that at the end of the day, you're going to see more and more global investors coming into India. As you know, American manufacturers have used China as their main supply source. That will change more towards India going forward. So there's going to be a lot of direct investments, not only portfolio investments, but direct investments in India, which is going to be very important going forward.
So taking the new opportunities into consideration, and I'm sure, I mean, there were a couple of stocks we've spoken about earlier as well, where Mark is invested in, from a Vodafone to Persistent, APL Apollo, Wari Renewables. I know there is some portion you mentioned that you have offloaded, but majority of it is what you're still holding in India. Where are the other pockets? Would you say these are the names where you will probably look at increasing your stake with the new fund, or will you look at other names, and if so, which would they be?
I'm looking at other names, and particularly in computer hardware. I believe that, of course, India is already very preeminent in software. They're exporting software all over the world. So India is doing very well on the software side. But going forward, I believe on the hardware, chips, semiconductors, for example, and general hardware for computers and other electronic equipment will be very important in India. And that's where we want to look more carefully and perhaps invest in some new companies that are involved in that kind of activity.
Mark, would these be from the small cap or the mid cap space?
Probably mid cap. We want to have liquidity. Liquidity is very important when you're running a fund, as you know. So we would probably go to the mid cap. Companies that have, in US dollar terms, 1 million daily turnover or more.
So you're saying tech-driven, hardware-driven IT companies is what your next bet is for the new fund with India. Apart from this, any other sectors that you would be betting big on? Because the opportunity that comes in, a lot of people are talking about renewables. A lot of people are talking about where consumption will be a booster as well. Do they fit your portfolio?
Of course, with 1.2 billion people, India consumer market is going to be growing very rapidly. Already it's growing rapidly. It's going to be growing much more as we go forward, as per capita incomes go up, which they are. So consumer is very, very important. So we will be looking at that sector. As you notice, a company like Nestle has been doing very, very well. And I believe there are many other consumer companies that we'll be looking at.
Mark, would you be looking at a consumer company which is focused on rural India or which is focused on urban India? Where would your bets be?
Probably urban India, because as you know, there's mass migration from the rural areas into the urban areas. So urban consumption is going up faster than rural consumption.
Okay. Apart from this, I don't want to really talk about individual stocks, but Vodafone Idea is one company which has made it to your portfolio. There are 3 companies in the Indian markets which are in the listed space. A lot of things happening with regards to Vodafone, which I'm sure you're aware about. What would your view be with this company right now?
Well, that's a very interesting company, but Jio is also very interesting. So all 3 of these companies are quite interesting going forward. The question is how fast they will be growing and how much debt they have to take on. This is something we have to look at carefully. But definitely Vodafone would be something we would want to look at. It hasn't been doing too well, as you can see, in the past 12 months. But I believe going forward, you'll see better performance in Vodafone.
So, Mark, we've actually tied up what you preach in terms of your books to how young investors should look at from the actual markets. From all the books that you've published so far, which would be your top 3 that you would advise young investors to read?
Well, the Book of Wealth would be number 1. Number 2 would be a book I wrote on inflation. It's called The Inflation Myth and the Wonderful World of Deflation, in which I talk about, how measures of inflation are very misleading, and we have to look very, very carefully at the numbers. In other words, the inflation may not be as much as we believe. One of the things that's very important to remember is that technology has driven down the costs of many, many things. I remember when I was doing my thesis many years ago at MIT, I was typing on a Selectric typewriter. No spell check, no copies, no grammar check, et cetera, et cetera. And nowadays you can do that at half the time, maybe 1/3 the time. So these are the the advances in technology that have driven down the cost of so many things. So that's one of the things I point out in the book. The inflation myth, it is a myth. There is no inflation. There is actually deflation in terms of value, what you're getting for your money.
Mark, very lastly, we would like to thank you for joining us on the show. But when is your next visit to India where we could then see you with us in our studios? When are you going globetrotting to get your next big opportunity?
Well, I hope to be in India in September. I first have to go to Japan and Taiwan and Singapore, and then we'll go to India.
Perfect. So September is when we meet Mark Mobius in person back in India. Thank you so much for joining us, and see you soon, Mark, for talking to us with regards to the books that you've written and the kind of opportunities you're tying for young investors with what's happening in the markets. In fact, Shreyansi, over to you, because this has been an interesting conversation that we've looked at so far. A lot of opportunities from the consumption space. IT hardware is what Mark is betting big on.
Absolutely. IT hardware is what Mark is betting big on. Definitely another book that I'm adding to my to-be-read list as well. And there you had it. Mark Mobius talking about his view coming in as far as sectors were concerned. Speaking of sectors, then let's get your quick check as far as sectors are concerned. You do have the Nifty Finance. That is the one that has hit an all-time high. And it's, in fact, a sea of green coming in across sectors. So when you talk about Nifty Finance, that, of course, is leading gains. Other than that, there's also oil and gas, Nifty Bank for the third straight day. That is also doing quite well for itself. Metals also shining, energy, rural, defense, consumption, auto, all of these sectors, in fact, are in the green. So that's the kind of picture that you're seeing emerge as far as sectors are concerned. Tell you what, let's also take a look at some of the sectors that are on the back foot then, because that's realty, media, pharma, as well as PSU Bank making it to that list. IT also slightly on the back foot, so that largely is what you're seeing emerge as far as sectors are concerned. But tell you what, let's also take a look at some of the top stocks from within the Nifty 50 pack that are doing quite well. Since this morning, you have Jio Financial Services that has added its name to that list. Bajaj Finance, Shriram Finance, Axis Bank, as well as Adani Ports and Eternal and HDFC Bank as well, doing quite well for themselves from within the Nifty 50 pack. Let's also take a look at the top gainers from within this pack. Dr. Reddy's Labs, not doing all that well. Hero Motocorp, that's also on the back foot, as is Sun Pharma, SBI, Eicher Motors, as well as M&M. So that largely is the kind of picture that you have coming in for some of those stocks as well. But tell you what, let's also get some more news and updates in a strong message, in fact, to market infrastructure institutions. You have SEBI that has imposed a 25 lakh rupee penalty coming in on the BSE for multiple regulatory lapses. They've talked about how there's a hindrance of fair access to markets. Charu, in fact, is standing by with an update on that. But tell you what, let's also take a look at what they've talked about, because they've talked about the period that is looked into, which is between Feb 2021 to September 2022. So quite old in terms of the hindrance that they've talked about. So that largely is the setup that you're seeing emerge. Of course, there's also Nykaa and Nestle that we will be discussing a little bit later. Let's also take a look at some of those counters as well. But before we do that, let's go across to Charu and get a sense of what this regulation looks like. What is the SEBI really saying?
So, the market regulator Securities and Exchange Board of India yesterday came out with an order against the oldest Indian boards, that is the Bombay Stock Exchange, and imposed a fine of rupees 25 lakh. Now, to understand it, we need to understand that the basic tenets or the basic principles followed by, the regulator in terms of regulating a market is that everybody should get fair access to the market. So, what has happened here is that a lot of paying clients of the exchange in 6 out of 10 cases got information regarding disclosures and several price-sensitive information before the regular public. Also, about in 98 out of 100 cases, the regulator saw that the exchange's internal staff got information about the disclosures before the regular public. Now, this makes the situation a little dicey, and a lot of gaps and lapses come across, because you see, regular public is not getting to know about some disclosures or some listed company related information that is essential to them in their investing journey, but other paying clients or other internal staff members are getting to know about it before them, and that is why the regulator came out with a penalty. Other things that the regulator flagged is that the system was set up in a way that brokers could also take advantage of it. And while BSE mentioned to the regulator that they did not directly make any profits from this entire scenario, the regulators saw that being a first level regulator in terms of regulating the markets and exchange should do better in handling such gaps and lapses.
So that's the take coming in as far as BSE then is concerned. That is the fine coming in, 25 lakh fine coming in on BSE. So SEBI really cracking a whip there. But moving on, let's take a look at Nykaa. That one is on the back foot at this point in time. But tell you what, let's take a look at what the investor presentation then had, because the company in fact has mentioned about their ambitious plans of growing at mid 20% levels. So those are some of the levels that you're looking at. They also have plans to expand to 500 stores by financial year 30. So that's also something that you're penciling in terms of their expansion roadmap. And they also have a whole host of updates coming in. In fact, Mahima is standing by with that entire list.
Right, so as you rightly mentioned, I think the key standout for me was that they said that the Nykaa fashion business will achieve a break-even in terms of their EBITDA by FY26. Last when we spoke to the management, the calculation for us came at around FY27 ending when they'll achieve break-even. But this is a big move where they've come and announced and said that FY26 end is when they'll achieve break-even in terms of EBITDA. Plus, they've also said that they aim to grow at mid 20% levels. In terms of their store expansion, they've said that by FY30, they're going to double their stores to around 500 odd stores. Their ambition is to grow organic portfolio at a 30% CAGR to rupees 6,000 crore in terms of their gross merchandise value. The ambition is to grow 3 to 4x in the next 5 years in the fashion segment. Women's segment will retain the dominance, but men as well as kids to become more prominent. Marketing efficiencies to improve with scale as witnessed in beauty. And overall, they expect mid to high single digits of EBITDA in fashion by FY28 and a 10% EBITDA by FY30. Lastly, they've said that they'll go 3x through geographical expansion as well for the Nykaa superstores as well. So these are the key takeaways from the Nykaa investor presentation.
Well, absolutely, Mahima, let's also take a look at Nestle, because that one is also in focus. Previously, it was buzzing away in trade. Currently, it's given up some of those gains, but let's take a look at their bonus issue announcement coming in, because that's the important one to look at.
Right. So this is Nestle's first ever bonus since almost 2004 now, and that is after the 2004 split in fact. And in terms of how the bonus is taking place, it's a 1:1 bonus. One bonus share for face value of 1 will be issued for every one fully paid up equity share. This will be issued after retained earnings. The estimated date by which the bonus will be credited will be 25th of August. The record date of course is yet to be decided, because it will go through once the board approval comes into picture. But just to give viewers a picture as to how the shareholding will now be different for Nestle. Well, in terms of the number of shares, in terms of authorized capital, that will grow from 100 crores to 200 crores, and in terms of paid up and subscribed capital, that will grow from around 96.4 crores to that 192 crore mark. So this is the overall update as to how Nestle has announced bonus after a very, very long time.
Alright then, so Nestle is the one to look at, but with that, that's all the time that we had on this edition of Markets at 12. Thank you so much for tuning in.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of rupees 77 to rupees 82 per equity share of face value of rupees 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down. Cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, And today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. You're watching Profit Buzzers. I'm Hiral Datia and with me is Puneet Javeri. An interesting day of trade. Strong moves that are coming in terms of markets, and it's interesting why midday these kind of strides that we are watching out for. You have Bank Nifty, which has actually hit record high levels in terms of today's session. Nifty 50 as well, absolutely strong. If you pull up that one on the screens, at near the day's highest levels with gains of 0.7% coming in there. We're above that 25,400 mark. Let's quickly look at the heat map in terms of the sectoral indices, and then we'll look at individual stocks on the benchmark side and then the broader markets. But clearly, oil and gas is the top gainer today, followed by infra, seeing some smart moves. Metal index is also pretty strong. Private banking index on the strong footing. What's lacking behind is real estate, media, pharma, and the PSU Bank and IT index. In fact, IT was one of the sectors which was trading strong over the last couple of days of trade. Today, it's pretty much languishing as we speak. Let's quickly pull up the heat map in terms of Nifty 50 stocks or even the contributors. If you see in terms of the heat map, strong moves again. I think it's a power grid, Geo Financial Services, which is trading absolutely strong. TCS, Trent, HUL are a few of the other names that we are watching out for. Broader markets also absolutely strong, Puneet.
Well, definitely, and we've seen the kind of strong moves coming in the broader markets, and that's largely been holding up the market today. We've seen the benchmark indices also perform very well in trade, and the Nifty Bank also hitting a new high. And we'd spoken this about in the F&O segment as well, that it needs a pivot now that the NBFCs as well as the gold finance companies have been doing very well. Let's quickly look at the BSE 500 as well, look at some key stocks there, because again, it's been a day where we've seen strong reactions coming in on some individual names. Apar Industries, reacting definitely on a note by Motilal Oswal on cables and wires. A very strong up move there. Aegis Logistics is also showing a decent traction, up almost 5%, while something like an Abbott is also up 4%. On the loser side though, Endurance Tech is seeing some correction after a really strong move over the last couple of weeks. It has started to move when the notification came that there's going to be a mandatory anti-lock braking system coming into entry level as well as two-wheelers across the board. Endurance is one of the biggest manufacturers of ABS, so could benefit there as well. But seeing some correction on that, it had a very strong move over the last month or so. So if you can pull up the chart actually of Endurance as well and see how it's done, because we might see a candlestick down today, largely been a positive move. Let's take a month's view also on Endurance. Stock started to move from 1600 odd. There you go, almost 8% up still from those levels as well. But here are largely seen the benchmarks actually being the large news flow today.
Absolutely. Your broader markets are way stronger as compared to your, the mid cap and the small cap indices. But let's look at one stock from the broader markets which is doing absolutely well in trade. Western Carriers, let's pull up that counter on the screens and see what the counter is doing in trade. They've received an order from Jindal Stainless. The order value is around 550 odd crores, 5.5% up move. The stock has cooled off from the day's highest levels. To discuss more about this, Kanishka Setia, Director and CEO at Western Carriers, speaks to NDTV Profit. Kanishka, good afternoon and welcome to the show, and a pleasure to speak to you at NDTV Profit. My first question coming to you is, in terms of the order from Jindal Stainless, 558 crores, what's the execution timeline and what's the kind of revenue recognition profile that you see out of this?
Good afternoon and thank you for having me on your show. It's a pleasure to be with you.
The order execution for the 558 crores is over 3 years timeline, starting from the 1st of July till the 30th of June 2028. It is an order for domestic movement of 3 products: slabs, coils, as well as sheet plate, in specially designed 40 feet open top containers that we've designed for Jindal Stainless. And so this is going to be a pan-India movement, servicing all corners of the country for the next 3 years. So it gives us great visibility, and it gives us an opportunity to create the capex that is required for doing this project in a timely and professional way.
Mr. Sethia, very good afternoon to you. Thanks so much for joining in. It's Puneet this side. In terms of the breakup of this particular order book, in terms of revenue, you mentioned that it'll be till over 3 years by 2028. What is the portion that you're trying to recognize and finish in this particular year as well as the next year? So will it be roughly about 40% over the next 2 years and then the rest, or if you can give any kind of range at least for our viewers?
Sure. So this order starts 1st of July, which is day 1 of Q2. And so we will be able to book revenues of 9 months in this year and 12 and 12 in the subsequent 2 years as well. We expect the orders to sort of build up. As you know, we are a derived industry, sir. So what happens is usually, if and Jindal Stainless, as you know, has been on a stellar growth record of the recent years. So we are hopeful that we should be able to, keep growing on with them, piggybacking on their success and providing the logistics and, supply chain support that they need.
Kanishka, my question is, in terms of the other orders that you've got as well, and if I look at your previous year's revenues, this order comes in almost as 1/3 of your FY25, FY24 revenue profile. Does this mean that this is going to be it? Another 2/3 or a little more is what you plan to clock in? Or how much is the kind of expansion you're looking at in terms of your top line margins and bottom line for FY26 and the subsequent years?
Fair question. So 1/3 of these revenues will get derived every year. So we're looking at anywhere from 180 to 200 crores of revenue, which currently is about 10-12% of, our current turnover. So it's a large order, but it's not 1/3 of what we are currently doing. We also have large orders from other stellar corporates like Vedanta, which gave us almost an 1,100 crore order earlier in this calendar year, I think, which is one of the largest logistics orders in combination with what we've just achieved from Jindal Stainless. So what I want to say is that the work orders that we have, they give us a broad opportunity to actually, run the supply chains in a very efficient way for our customers. These are all long-term work orders spanning 3-4 years in most cases. So we have very good, future outlook. We have very good order books for the next 3 years and 4 years. And so we have enough time and plenty to actually plan our supply chains and our capex around what our customers need. So we are seeing very, very, strong demand from our large corporate customers, and we are planning, our supply chains around that.
Mr. Sethia, just one question on, in terms of last year, because we've seen that the EBITDA margins have also taken a slight hit compared to FY24, while essentially the working capital days have also been increased to about 111 for the year. How do you plan to mitigate both those aspects going into next year? Because even when you came for an IPO, the EBITDA margin used to be stable at around 8% for the year, a couple of years before. So if you can address that aspect, and what should be the expectations over the next year?
Puneet, I want to say that, last year was an exceptional year. We derive a large amount of our revenues from our customers doing EXIM business. And EXIM business had really strong headwinds last year, to put it politely. The supply chain disruptions, not only for us as a country or as a company, but globally was massive. So, the erratic vessel schedules, erratic transshipment port movements, erratic vessel arrivals, that played havoc on the margins, which was basically hit because of the EXIM business. Now, with the prospect of large-scale return of container ships to the Red Sea following the recent ceasefire, and we pray and hope that it holds. This is a great opportunity for us as a company that we are hopeful that this should flood the market with shipping capacity, as global TEU per mile demand would decline by about 6%. Basis what our understanding is. And if this happens and there is large scale return of container ships into the Red Sea and Suez Canal instead of the larger route around Cape of Good Hope in Africa, what it does is it reduces your transit times, as well as it increases the supply of vessels. And so if your transit times reduce and the supply of vessels increases, that should dramatically reduce freight rates for extended trades.
So Kanishka, my question to you is then the kind of decline that you saw in terms of profitability in the third quarter and the fourth quarter, how do you see it improving now, taking into consideration exports will bump up? And what percentage of your revenues are coming in from exports currently? To which regions?
Okay, so if we look at the container numbers for exports, we in FY24 were about 72% of our TEUs, 151,000 odd, came from EXIM numbers, which declined by 12% last year to about 133,000. But what we could do, which we put in a lot of effort, is we grew our domestic business by 32% year on year last year, from about 61,000 odd in FY24 to about 80,000 in FY25. So we are seeing very strong demand from our customers domestically, and fingers crossed. If the geopolitical situation remains stable as it is for the last 2 to 3 days, we are hopeful that the EXIM demand will also take a huge spurt. So that's what we are hoping. We're already getting long-term commitments from large customers, pan-India. Large contracts we've made visible is available. You've seen what we've done over the last year or so in that, and seeing lots of demand. So we've actually, because there's so much demand that we are seeing, we have planned a major capex in this year as well. We did a capex of approximately 70 crores in the last year, and we have an intention of further doing a capex of about 100 crores in this financial as well to take care of the growing demand.
Just one last question from my side, Mr. Sethia. Essentially, what's the kind of, I'm not sure if you give this number, growth outlook for next year? And essentially in terms of diversifying also, because you have already received an order from Vedanta, as you mentioned, now the other one from Jindal as well. The components or the contribution from the metal space is over 50% for you. Are you looking to diversify that, or is it because the growth is coming from there for you, that contribution could stay there and margins could, improve on the factors that you just mentioned?
It's a mix of both, actually. See, a lot of demand for supply chain, complex supply chain, multimodal that we do comes naturally from the metal side. But we as a company have a natural hedge in that we are not sector dependent, we are not metal dependent, nor are we customer dependent. So in metals, we work with aluminium, we work with steel, we work with zinc. And all the metals have a separate cycle. If you track them on the London Metal Exchange on LME, you will find that they go in complete variance. So that's a natural hedge that's built into the business. Over the years, we have actually also grown our business in other sectors. MSME, which was contributing almost zero of our revenues 5 years ago, is about 13-14% of our order book now. Together with industrials, adds up to about 20%. So that's a huge area of growth for us. And we look at the metal space not really growing in our portfolio than where it is, but we don't see it shrinking either. So we're looking at a mix of about 50% from metals, 25% odd from pharma and FMCG, and 25% from PSUs, industrials, as well as MSME. So that's what we're looking at going forward.
Right, a strong run that the stock has seen from the month of May itself as well. But thank you, Kanishka, so much for joining us on the show and sharing your views. And that's the stock, 5.5% up move on the back of the order win that they have announced. But staying with the metal space, because we were talking about the order that has come in from the metal space, you have a Tata Steel that is in focus as well. In fact, they've gone ahead and acquired shares in T Steel Holdings in an unrelated development. They've also got a show cause notice on irregularity in input tax credit. My colleague Vansh joins us to take us through all the details. In fact, Tata Steel was seeing some strong gains, has cooled off slightly. Vansh, over to you.
Right, so the company has infused approximately 1,500 odd crores in Tata Steel Holdings. Tata Steel Holdings is a wholly owned subsidiary of Tata Steel Limited incorporated in Singapore. The company has also received a show cause notice for irregular availing of input tax credit of about 900 odd crores. The notice is served for the period from FY19 to FY21. However, the company has clarified that it does not have any financial or operational impact on the company. Now let's quickly understand the business of Tata Steel Holdings. It includes, the business includes holding of equity shares of indirect overseas subsidiaries for Tata Steel, and Tata Steel routes its investment into overseas subsidiaries through Tata Steel Holdings. Tata Steel has already infused funds worth approximately about 13,000 odd crores in Feb 2025, and the utilization of these funds were used towards repayments of external debt in Tata Steel's offshore subsidiaries and supporting the restructuring of Tata Steel UK Limited. So this is how the picture is shaping up for Tata Steel.
Okay, so that's with regards to Tata Steel. Interesting moves there. In fact, let's get in Raghvendra Kedia, founder at Prosperity Advisors. Raghvendra, good afternoon and welcome to the show, and a pleasure to speak to you as always at NDTV Profit. Two stocks, Tata Steel as well as, apart from Western Carriers was the other one, which is a recent listing. You must have heard what the management had to say in terms of the order win and the growth prospects. How would you look at both these companies?
So let me start with Tata Steel. This particular investment in the holding company or the overseas subsidiary actually comforts the investor as it's more skin in the game, and the company is actually putting their own cash flow liquidity into the overall business growth. So we take that as a positive sign. This tax notice is a point of concern, but Tata Steel and the entire Tata Group companies are known for a very good corporate governance, and there has been pretty much no or minimalistic concerns in terms of tax evasion or any such penalties. So I think with the passage of time, there would be more clarity into this tax notice, and we believe that the company would come out well. We are very upbeat about the overall prospects of Tata Steel. Believe that the Kalinga Nagar Phase 2 project would actually augur very well in the quarters ahead, and this levels of 155, 157 seems good, attractive in terms of accumulating this large cap metal stock. It's a fully integrated company and has presence across India and Europe. So there are two different geographies where there is a hedge in terms of the growth prospects. We believe China stimulus could also augur well. So Tata Steel at current levels, we believe that there could be a 20% upside for levels of around 190 for a 12-month, 1-year investment horizon. So we are bullish on Tata Steel. Western Carriers, moving on to the second stock, the management commentary was upbeat. They have a very wide set of clients, which actually is very comforting in terms of business continuity and less dependence on one particular segment or one particular client. So yes, this order win and overall management commentary is upbeat. We believe that this stock could be a slow and steady mover. We would still evaluate it for the next 2 quarters, considering it's a fresh listing. But overall, we are upbeat, looks good. And any dip in Western Carriers to levels of 105 or 100 would be taken as buying opportunity. So broadly, to sum up, bullish on Tata Steel, bullish on Western Carriers.
Two big bullish calls coming in from Raghvendra, but onto our big brokerage call of the day as well. Citi maintains sell rating on Dr. Reddy's and also cuts the target price to 990. Stocks also reacting very negatively. Let's get in my colleague Varsha to give us more perspective on this. Varsha.
Yeah, thank you for that. So the sell rating is coming from Citi because Citi believes that the street expectations for Dr. Reddy's generic semaglutide, that is, diabetes or weight loss drug, sales in Canada, the street which is expecting is too high, and they are predicting around $70 million of revenue. Now they highlight that the Canadian GLP-1 market is already highly penetrated due to adequate supplies and lower prices, suggesting modest future market growth. Citi outlines several risk factors. One is strong competition from players with proven peptide capabilities, and Dr. Reddy's unproven track record in the peptide segment, that is semaglutide. Innovator, that is Novo Nordisk resistance in market share, and a new competition from Eli Lilly's semaglutide version will also pose some risk to Dr. Reddy's. And Citi models assumes that a Dr. Reddy's generic semaglutide approval will be late in 2025, and significant drag from declining Revlimid sale will also impact growth for the company. And because of that, they believe they've cut their FY27 EPS for company by 5% because of lower PLI expectation, and the estimates are significantly lower than the consensus.
Well, thank you for that, Varsha. But stay with us because there's another counter in the pharma space, SMS Pharma, that's in focus. What are some of the key updates and why is the stock buzzing today?
Because US FDA has concluded inspection at their Telangana facility with zero observation, which is the positive point for the company. The inspection was conducted from June 23rd to 25th, and the Telangana manufacturing capacity has 120 kiloliter for niche small molecule volumes, and this facility was audited 7 times, and this was approved 7 times by US FDA, including the current one. They're targeting 20% revenue growth and 20% EBITDA margin for FY26, and they expect backward integration to grow their top line and margin as well. And lastly, the new capex for 250 crore will also dedicate capacity for their CMO services as well.
Well, thanks for that, Varsha. And definitely, 7th approval from the US FDA, a big boost for SMS Pharma. Raghavendra, I'm not sure if you track SMS Pharma, but your views on DRL as well as SMS Pharma, if you track it?
So, good afternoon, Ayush. Broadly, in terms of Dr. Reddy, we are concerned in terms of, if you see the product pipeline, there seems to be a thick pipeline in terms of the specialty products which the company is about to be launching in the next few quarters. Also, there has been a significant regulatory overhang in terms of US FDA observations. So that is a concern. I believe that DRL at levels of 1250 would be a better stock to be reviewed. But at levels of 1320, the current price, we would actually wait and watch and avoid Dr. Reddy's at this level. Moving on to SMS Pharma, it's kind of a flip story where there are significant positive approvals in terms of US FDA. So that's a positive. The SMS Pharma has a significant export exposure, which actually would augur well if there is a strength in US dollar versus the Indian rupee in terms of the margin expansion. In the last 2 quarters, SMS Pharma has seen revenue growth of around 7-8%, margins expanding to around 39, 38, 40%. That's very good valuation metrics performance in the last 2 quarters. The company has 10 plus APIs in the therapeutic business and a leadership pole position across most of the geographies. So we believe we are a bit on SMS Pharma at current levels, expect a 30% upside from current price and a price target of around 330 for SMS Pharma for a 1-year investment horizons, and Dr. Reddy would be an avoid at current levels.
Okay, so Dr. Reddy's is an avoid at current levels, but let's shift focus to the primary market for a bit. We have multiple IPOs which are ongoing right now. HDB Financial, it's day 2, and if you see in terms of the subscription, QIB around 0.04 times, NI is 1.3, reserve, the shareholder reservation is around 1.09, and employees is around 2.31. So overall subscription is around 0.6 times. Apart from that, you have the other ones which are open is Sambhav Steel as well. Let's pull up that one on the screens. 1.02 times is the overall subscription. You have Globe Civil, which has a 31.1 times oversubscription. Ellen Barry has around 0.96 times. Kalpataru has around 0.81 times, and Indo Gulf at 0.18 times. Multiple of them right now. Raghavendra, any IPOs that you would be betting big on where you have a subscribe rating, or any ones that you would advise investors to avoid?
So Allen Berry and Indo Gulf is avoid as of now unless the subscription level significantly picks up. We would actually refrain from applying. On the positive side, we are a bit on HDB and Sambhav Steel. We would suggest apply for listing gains.
So HDB, a listing gain candidate, is what you should be watching out for. That's the word coming in from Raghvendra. But thank you so much for joining us on the show and sharing the views. In fact, we also spoke to the management of Indo Gulf. Let's quickly listen in as we slip into a short break.
Indo Gulf is into food security, basically into manufacturing and exporting of crop protection and biologicals and nutrients. So with this 200 crores coming up, 65 crores approximately will be for working capital, 34 crores will be for loan repayment, around 12 crores will be the IPO expenses, and we have a capex plan for around 14 crores. Rest is general corporate purpose, and 40 crores is OFS.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Nifty and Sensex trade off highs, but the Nifty Bank and Nifty Finance hit record highs.
An NDTV Profit exclusive, Jayprakash Associates draws significant interest as 6 major players, including Adani and Vedanta, submit bids in the insolvency process.
Nestle India approves a 1:1 bonus share issue. The stock rises 1% on the back of this news. The company says it will expand its presence in urban India.
Nykaa outlines ambitious plans to grow at mid-20 levels and expand to 500 stores by FY30.
Indo Gulf Crop Sciences IPO opens for subscription today. Public issue subscribed 0.18 times so far. Welcome back. You're watching Profit Bazaars on NDTV Profit. It's an interesting day. You have Bank Nifty Puneet, which is hitting record high levels, and that's an interesting aspect. And hence, we now have Krishnan, ASV, Analyst Institutional Equities at HDFC Securities. Krishnan, good afternoon and welcome to the show. And what a day to speak to you and discuss the banking space where you have the Bank Nifty at record high levels. An interesting report you've come up with, which actually talks about the sector which has been structurally broken is now seeing signs of a secular turnaround. If you could help us understand what is your rationale in terms of seeing where PSU banks are from here on versus the private sector banks initially?
Hi. Many thanks for having me on your show. Look, I think what we have indicated is we are seeing early signs of a secular turnaround in PSU banks. This is in terms of three components: the quality of customer franchise, the quality of the loan book, and finally all of this devolves into the quality of earnings. Right? So I think the quality of customer franchise is an ongoing WIP which has been seeing improvement year after year for the last 4 years now. The quality of loan book is already beginning to catch up in terms of a retail heavy mix, and we believe that will sustain. And it's gradually now, filtering into the quality of earnings, where the dependence on non-core is kind of reducing, treasury is kind of catching up as well. So a lot of these things are big reasons as to why we believe the gains made by the PSU banks are structural in nature, non-reversible. And hence, a lot of these are likely to sustain over the next 3 to 5 years.
Krishnan, thanks so much for joining in. It's Puneet this side. A very good afternoon to you. Just taking forward the points on PSU banks, because over the last 2 to 3 years, the earnings growth has been very strong for these post the pandemic. We saw that first happening in the private banks, but then the secular growth has been seen in the PSU banks, and that's leading to the growth projections being lowered in FY26 and 27. So what makes you so bullish on PSU banks and the growth to sustain going forward? You mentioned the three factors, but apart from that, do you expect that the growth could continue going forward as well? And what are some of the key aspects that you will be looking at?
Look, so partly because of where we are in the interest rate cycle, given what the RBI has done, there's a lot more ammunition now in terms of growth stimulants. That's number one. Number two, most of these balance sheets are repaired on a loan to deposit ratio. They are far more comfortable compared to private sector banks. So the growth runway is cleaner for the PSU banks compared to the private banks. So as I said, number one, the macro, there is a tailwind in terms of growth. We are in a low interest rate environment, likely to stay there for a bit longer. And hence we believe that's a growth stimulant. And secondly, the PSU banks are better poised in a sweeter spot compared to the private sector banks. So that's the reason why we believe growth tailwinds accrue largely to the PSU banks. And as I said, there is also an earnings tailwind for them. Given where they came from pre-consolidation, pre-COVID, definitely the bulk of the earnings had come from non-core, from recovery from written off accounts. As I said, it's slowly pilfering into the quality of earnings getting better for PSU banks. We're not there yet, but it's likely to get better. It is getting better and will likely get better over the next 3 years.
Okay. Krishnan, taking into consideration the key factors, let's look at the asset quality, let's look at the net interest margins, and then the third aspect will be in terms of provisions and slippages. If you have to compare these four between the PSU banking space and the private banking space, where would the PSU stand and which would your top picks be then?
So net interest margins, clearly PSU banks have a handicap on both sides, yield as well as cost of funds. The cost of funds is now beginning to converge, I think. So just to put this in numbers as what we carried in our report, earlier this handicap used to be about 60 basis points. Now that's reduced to about 20 basis points on funding costs. on yield on advances, the handicap for PSU banks is something being worked on. As I said, it's only now in the last 3 years that PSU banks have gotten more retail heavy. They are still MCLR dominant portfolio. The fixed rate portfolio is only 10% compared to private banks at 30%. So all these are still WIPs, and as the loan book begins to shift more towards retail, it will begin reflecting on how yields kind of reflate as well. So that handicap is being worked on, but it's a slower move, right? Overall, so NIMs, there is a handicap. On provisioning, both on gross and net slippages, PSU banks are now actually superior to private banks last couple of years. So FY 23, 24, and now 25, PSU banks have actually been superior on gross slippages and net slippages. And hence the call for greater credit costs or higher credit costs is relatively lower. We believe they are well covered. Most of these banks are operating at a PCR of over 75%. A lot of them have a margin of safety which is running into mid-20s. So the provisioning requirement is not going to be onerous, and we are assuming right now that ECL norms are on the back burner. So all of these things essentially mean earnings growth is likely to reflate for the PSU banks a little more healthy compared to the private sector banks. Plus, it is not yet priced in. So these PSU banks are still being perceived as trading bets where these structural gains are not yet being priced in, and hence we believe there is a lot left on the table when it comes to these PSU banks. Our pecking order is State Bank of India amongst the largest ones. The next market cap bucket, we have Bank of Baroda, followed by Indian Bank, and followed by the Bank of Maharashtra.
Krishnan, just a couple of questions on the picks as well, because SBI has largely been one of the picks that's been a consensus buy, to say the least, because there the earnings growth trajectory appears to be the strongest amongst consensus, specifically with the fundraise on the annual as well as the growth prospects. Do you think that could be one of the leading performers within the PSU basket? And also, if you can slip in a word about the two stocks that you've initiated coverage as well, Union Bank and Canara Bank, because the growth again was very strong over the last couple of years in both these banks. So specifically, any particular reason that you can give us also in terms of earnings performance on initiating coverage on these? And firstly, on SBI, and what is your expectations with just in general about ROAs, growth prospects, as well as the fundraise?
So I think generally there has been some skepticism on whether SBI can continue to sustain those ROAs in the down leg of the rate cycle. We believe they can. There are levers available with them, both in terms of net interest margin, where they will hold, as well as the provisioning remaining relatively muted for a while longer. We don't see any near-term accidents for the entire ecosystem, and hence we believe the larger banks are likely to remain immune. So that's on SBI. We still believe ROAs will likely sustain. Of course, there is because we are in the down leg of the cycle, there was anticipation that the asset yields will reflate or will deflate faster. We believe the banks led by SBI have been very proactive on the deposit repricing as well, which we will now see other PSU banks follow in this ALM cycle. So SBI, we are bullish, and that's the reason why the recapitalization is a very good trigger, is a growth catalyst for SBI. But overall, we still believe the system is not unlikely to grow beyond, say, 13 to 14%, and hence SBI will not be an outlier in that.
Krishnan, I would just interrupt because you're talking about SBI. You mentioned about growth capital. They're looking at a QIP, 25,000 odd crores in totality is what SBI has announced they will be raising. Now, you talk about SBI, they're generating profits for around almost 18 to 20,000 odd crores on a quarterly basis. They have sufficient capital, and I think a month back in one of the conferences that we attended, they clearly said that they don't need growth capital, right? So what kind of growth is SBI then estimating, taking into consideration the 25,000 crore fundraise and the infusion that they're vouching for?
So one part is, internal accruals remaining strong. Obviously, that goes without saying, even in the case of State Bank of India. The other is growth capital for, corporate capex, right? Our base case hypothesis is that corporate capex is generally likely to bypass the entire banking system, because most of these corporates are AAA, deleveraged, and have the ability to raise money through bonds, rather than through bank loans. And hence we believe corporate capex is likely to generally bypass the entire banking system. Having said that, when it does pick up, I think SBI will be a key beneficiary, will be a key participant. There is no way SBI can remain undercapitalized when the capex cycle does pick up, and hence we believe this is good growth capital to have for the next 3 years. Right? It's not necessarily building in the dry powder only for FY26, but over the next 3 to 5 years, I think SBI will need this capital. So it's good to raise capital when it's available.
Right, so that's with regards to where SBI goes. But thank you, Krishnan, so much for joining us on the show and giving your views. An interesting report that HDFC has come up with and clearly tells you the growth story with the PSU banking space. But moving on, the Mumbai Urban Transport Project is reportedly planning to splurge 30,000 crore rupees on buying train sets. Anushi has the details of which companies could benefit from this. Anushi, over to you.
It's a big story that we are looking at in terms of the order size, and considering that FY25 and 24 was muted in terms of whether the railway sector was concerned on order inflows. So FY26 presents an interesting opportunity here. Now, what exactly does this Mumbai Urban Transport Project entail? It entails 5th and 6th line between Virar and Borivali, 4th line between Kalyan Badlapur and Kalyan Asagaon, and this includes procurement of more than 200 train sets with about 2,856 air-conditioned one-day metro coaches also that we are seeing. Now, what's new about this rolling stock order that we are seeing? 238 trains are being procured in form of Vande Bharat train sets, and this includes a maintenance periods of 35 years. So if you look at the expected timelines of the tender for these 30,000 crore of size that we are looking at, it is expected to be released by August 25 with final bids to be submitted by March 26 next year, and tender will be awarded to the lowest bidder by September 26 of next year. So once the bidding process and the order process would translate, coaches are then expected to roll out from second half of 2028. Now, key contenders that we are looking at for these 30,000 crore of order, first one is on the list is BEML. Titagarh Rail is also another stock that we can keep out on our radar for the same. So these are two in the listed space that we are seeing, while CAF and Stadler are some of the other key players involved in this. But other stocks in focus also includes the likes of BHEL and Siemens, which would be responsible for the propulsion system that we are looking at. So FY26 is an interesting opportunity that we are seeing in terms of the order size is considered. It's a big order win that we are considering, and managements also of other railway companies have remained optimistic in terms of where the revenue growth trajectory is concerned as compared to FY24 and 25. So that's the update that we are looking from the railway sector.
Thank you, Anushi, for that. In fact, you have Texmaco Rail also, which is in focus on the back of a 535 crore order win. And this is going to be an interesting one because it's got a provision for 1,040 additional wagons over the next 5 years. Stock up 4.5%. In fact, let's welcome in Osho Krishnan from Angel One to discuss more. Osho, good afternoon and welcome to the show. Railway stocks, Texmaco, as well as the other beneficiaries that Anushi just spoke about as well. Where would they be on your list in terms of pecking order? BEML, Titagarh, as well as the Stadler.
Very good afternoon, Hiral, and thank you for inviting me at the show. Well, yes, no doubt we are witnessing a very strong momentum in the railway pack. So, Titagarh and Texmaco Rail, both the counters have started gaining or have seen a decent recovery from the lower zone. So, firstly, for Texmaco, after the prolonged period of consolidation, the counter have finally started gaining positive traction and is hovering just above the 200-day simple moving average. So I'm expecting that with the momentum in this counter, it is expected to continue its upsurge towards the zone of 225 to 30 in the short-term period. So there is a high potential for the counter, approximately 40 points from the current market price, that one can expect a decent momentum in Texmaco Rail. And again, Titagarh also has started gaining decent traction from the lower end. But on the higher end, it is still hovering below the 200-day simple moving average. So once it reaches the zone of 1,000, then we can see some kind of conviction returning back to the counter. And then one can expect a target of nearly 1,350 to 1,400 from short to medium term time frame.
Got that, Osho. But you know, we're putting the spotlight on something like in the diagnostic space actually right now. We are joined by Varsha to tell us about what could be some of the key aspects to look at and a position of advantage versus the online players for the legacy players. Varsha, what are some of the key aspects here?
Yeah, thank you for that. You know, the key highlight of this story is that online players are actually shifting their strategy. What they're doing is they're pulling back the expenses and discounts, and because of because of pulling back the expenses and discounts, their gross margins have increased. Now, e-diagnostic players have cut back their costs over the past 2 years, and this has improved. They have seen improvement in the gross margin in 2024, driven by lower discounting. Even marketing spends by the online players have reduced from 30 to 60% year on year in 2024, and reduction in selling and distribution expenses have also remained in check. Now, if you see that there has been a sharp cuts in marketing and discretionary spends when it comes to Tata, MG, Healthians and Redcliffe Lab, which shows improvement in gross margins in 2024. Let's see the financial analysis of e-diagnostic player, wherein Tata, MG, if you see in 2023, their gross margin was 27%, which jumped to 34%, while for Healthians the gross margins have jumped from 67 to 76%, and Redcliffe have seen a gross margin of around 70% from 60% last year. Now, the key focus area over here is the discounting has been reduced and your marketing spends have been reduced for even for Tata, MG, for Healthians. If you see, SG&A expenses have reduced from 52% to 31% in 2024, which has led to improved in gross margins. For Redcliffe Labs, if you see, the gross margin which we are seeing improvement in gross margins led by decreased your discounting, decreased marketing expenses and decreased in selling and general administrative expenses. Now, if you see, because of this cost control and marketing expenses reduction, they've seen reduction in their volume growth, or rather I would say they've seen reduction in the revenue when it comes to FY24 in comparison to FY23. But this slowdown in growth is favorable for companies like Metropolis and Dr. Lal and Vijaya Diagnostics. Now, if you see the organized players are actually benefiting from this calmer landscape. If you see, the established diagnostic chains have maintained their prices, signaling a more stable market. They're seeing less pressure from online players, and this should help to increase their volume growth, and they remain strong because of their trusted brand and pan-India presence overall. Lastly, if I want to talk about the brokerage views, we are seeing more upside potential of around 16% in Dr. Path Labs, which is followed by Metropolis and Thyrocare overall.
Well, thanks so much for that, Varsha. So definitely a very deep analysis that Varsha has done on the online players, specifically improving their margins, but the revenue growth and slowdown, and that's the advantage for the legacy players. Osho, let me come to you first. And actually, let me come to you on all these diagnostic player and stocks. We've seen some positive moves on something like a Metropolis, Vijaya Diagnostics, among others. What are some of the key top picks for you from the charts which you see that the positive momentum can continue?
See, overall, the healthcare space is looking very lucrative. Majority of the counters have seen a very decent traction in the recent period, but on the discussions of Vijaya Diagnostic or Lal Path Labs, I expect that decent traction can be seen in Lal Path Labs because it is hovering around the cluster of moving averages, and there has been some kind of consolidation in the recent period. But conviction lies once it crosses the zone of 2900, which is the long-term moving average, then one can look for buying opportunity in this counter. But from the same space, there are many counters which are looking very positive to me. For example, Fortis has given a fresh breakout, so that can be seen as a buying opportunity. Max Health has also given a very fresh breakout, so that is also a very positive setup, and one can look for buying opportunities. But looking on the diagnostic players, then these counters have some kind of consolidation, and once they surpass the resistance zone, then one should look for buying momentum in Metropolis and Dr. Lal Path Labs.
Metropolis and Dr. Lal Path Labs, two topics coming in from the diagnostic space. But as Varsha is with us, she is here to decode for us what has kept the fertilizer companies under pressure, because China has gone ahead and halted supplies to India for the past 2 months. And this is a peak time with regards to where Kharif sowing goes. Varsha, tell us, how is this impacting fertilizer companies, and is there a way around?
Yeah, thank you for that. So as you know, all the fertilizer companies are actually under pressure because China has halted the specialty fertilizer shipment to India for 2 months. Now consignments of water soluble, slow release and micronutrient fertilizers are being stuck. These are vital for India's fruit, vegetable and horticulture crops. Now why this is important, because India imports almost 80% of its specialty fertilizers from China, and there's no official ban as such, but China uses inspection and procedural delays. Now how this is going to impact on India? Now fertilizer disruption could impact crop yields from June to December planting season. India typically imports almost 150,000 to 160,000 of tons during this period, and the domestic production of these specialty fertilizers are limited. All top fertilizer companies, you have Deepak Fertilizers, you have Paradeep Phosphates and Nagarjuna Fertilizer Company operate in this specialty fertilizer segment. Now what is India's response and outlook for that? Now Indian companies are now considering local manufacturing, but this will of course take time because we are heavily import dependent. Now India is exploring alternative sources like Jordan and Europe, and however logistic delays with new sources remains a concern, and the Indian government has not yet made an official statement on the fertilizer halt as such, but we are seeing pressure on the overall sector as such.
Right, so that's what the fertilizer companies. Osho, anything that makes to your list either from a sell perspective or a buy perspective?
See, overall, the fertilizer space has seen a very strong traction in the last 2 months. So I would say that majority of the counters have seen a very robust momentum in the last 2 months, and there is still potential in many of the counters. No doubt the news can impact the momentum of these counters because there is a kind of a stagnation or time-wise corrective phase that these counters can enter into. But still the technical setup for majority of the counters are still very positive. For example, coming to Deepak Fertilizers, then this counter has been hovering above the short-term moving average. So any dip towards the zone of 1500 or 1450 should be auguring well to accumulate the counter. Same goes with the Paradeep phosphate counter. This counter has also seen a very drastic surge from 80 to 180 kind of a zone. So any dip towards the zone of 140, 130 can be auguring very well for the buyer. So overall, the trend is positive. Some kind of profit booking or blips can be seen as a buying opportunity in the space.
Got that, Osho. But let's also take a look at some of the key volume buzzers of the hour. We've seen some really strong moves coming in on stocks like KNR Constructions. Gabriel India is also up and about in trade. And for KNR, it's very interesting because the results were very poor for the company in Q4, but they won a 4,800 crore order yesterday. Stock was up 10%. And while it's come off from the highs, a positive move there. Gabriel India also at almost 8 times its 30-day average. This stock as well done very well for its investors as an auto ancillary company. It has 8 buy calls and largely operating, in the sunroof as well as space. So definitely another one. And the third one I want to talk about is Apar Industries. The wires and cable stock have seen a very strong re-rating as well. But Hiral on Texmaco as well as Tube Investment, what's the update?
Right, Texmaco and Tube Investment, I think these are more of volume buzzers that we're talking about, right? So I think if Osho is still with us, I think we should take a quick view from Osho as well on all of these counters because strong volume update, return potential as well. If you're just seeing on the Texmaco rail is pretty strong. Osho, anything that makes it to your list?
See, from all the counters that just has been discussed right now, Apar Industry is looking very positive to me because there has been a consolidation breakout. The counter have seen a decent consolidation around a 200-day simple moving average. And from there onwards, it has seen a very positive traction in today's trading session. So I'm expecting that there is still potential for the counter to test the zone of 94 to 9500 in the short-term duration. So this counter looks very positive on the volume front. Now coming to Texmaco, then already I have discussed that this counter is hovering above 200-day simple moving average. And there is potential for the counter to test the zone of nearly 220, approximately 40 points from the current market price. So one can look for buying opportunity in this counter as well. Plus, Gabriel India is having a very strong technical setup. There has been formation of higher highs, higher lows on the daily and weekly time frame chart. And 100-day exponential moving average have seen very strong support to this counter. So Gabriel, as of now, has seen a very strong movement. So if someone is already holding a position, then it is advisable to hold. else one should wait for some kind of cool off in the counter towards the zone of 620 to 610. That will be an apt zone to re-enter the counter for higher targets of nearly 740 to 80 in the short-term duration.
Osho, we're going to do a quick rapid fire round, quick answers. 3 stocks, Wheels India, where Wheels India has bought shares of Axle India. That stock is buzzing in trade, now cooled off. Dilip Buildcon has completed 4 lanes of Bangalore-Chennai Expressway. That stock is seeing gains of 3.5%. And a Jio Financial Services, where the company has invested 190 odd crores in Jio Payments Bank. That stock is up 2.5%. Your quick view on these 3.
Firstly, for Jio Finance, this counter is looking very positive. One should look for buying movement. Nearly 325 to 30 is the target for Jio Financial in the short-term duration. Dilip Buildcon again is looking positive. One can look for buying opportunity in this counter. On the lower end, the support lies around the zone of 490. On the higher end, I'm expecting very immediate target of 545 to 50. Once it surpasses the zone, then we can see further movement of 40 points in this counter.
Osho, just 3 to 4 more stocks, if you can give your view on Vodafone also looking, there is news for the telecom major is looking to seek almost $2.9 billion in loans to bolster network. On Ask Automotive as well as enter a new joint venture that will be for, sunroof control, which is sunroof systems for the cars, a very key product as well. As well as Tejas Networks and Own Infra, both have, had an agreement as well as received an order. Any of these stocks, Osho, that you prefer?
See, firstly, for Vodafone in this counter, yes, no doubt it has seen a very drastic movement in the last 4 to 5 trading sessions, but there is still on the higher end. I'm expecting that it has a resistance around the zone of 7.8 to 8 kind of a zone is a very crucial resistance for the counter. Till that time, there can be a further momentum in this counter. So kind of a 0.5 to 0.7 rupees kind of a movement can be seen in this counter. Now coming to Ask Automotive, then this counter has seen a very strong movement and there has been a breakout around the zone of 500. So yes, looking at the recent development in this counter, overall target seems to be around the zone of 545. Trend is very positive. Outlook is bullish in this counter. And for Tejas Network, this counter is still hovering below the 50-day exponential moving average. So I will advise to avoid the counter as of now until it retest or reclaims the zone of 820 on the higher.
Okay, so that's going to be an interesting one to watch out for. But thank you, Osho, so much for joining us on the show. Completely out of time. With that, it's a wrap on this edition of Profit Buzzers from Puneet, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 77 to Rs 82 per equity share of face value of Rs 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Sambhav Steel Tubes Limited now proposes an initial
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. Well, Varsha, if you look at the markets, it's the third consecutive session where we are seeing gains. The Nifty is up more than 180 points in session today.
Yes, absolutely. So in percentage, if I were to talk about it, it's up 0.5%. But let's see what the constituents, pulling up Nifty. You have Adani Ports, you have Jio Financial, you have Bajaj Finance, Shriram Finance, ICICI Bank, and Reliance and HDFC Bank who are the Nifty contributors. Well, on the loser side though, you have SBI, you have Tech Mahindra, you have M&M, you have Dr. Reddy's. Well, there was a Citi note which has maintained a sell on Dr. Reddy's, and that's the reason stock is under pressure. And overall, if you see the Nifty is up 0.5%, but let's pull up sectoral heat map and let's see what sectors are doing. I think barring Nifty IT, media, pharma, realty, everything is green. Nifty Realty is down almost 1.4%. Nifty Pharma is down 0.3%. Nifty Media, if you see, is down almost 1.26%. Nifty IT is down 0.3%. Well, if you see Nifty Bank is up almost 0.4%. Well, let's see what broader markets are doing. So Nifty Mid Cap 150, it's up almost 0.14%. Let's see what the gainers when it comes to Mid Cap 150. You have Tube Investment, you have Abbott, you have Dalmia Bharat, SAIL and Max Health, which are on the gaining side when it comes to Mid Cap 150. On the losing side, though you have FACT. So basically all fertilizer companies are under pressure. We'll speak about that also. You have Endurance, you have Prestige, you have Bharti Hexacom and Mazagon Dock, which are losing when it comes to Mid Cap 150. Let's see what Small Cap 250 is doing. It's down, though almost flat, 0.04% under pressure. On the small cap front, if you see, you have on the gainer side, you have Jay Balaji, you have Apar Industries, you have Aloc Industries and Nuama, which are gaining when it comes to small cap 250. But on the loser side, though, you have Readington, you have Network 18, Sobha, EID Perry, which are losing when it comes to small cap 250. But onto the if you see Somit, Nifty quarterly rejig, we do have some update on that. What's that?
Well, yes, the Nifty quarterly rejig that was announced a while back. Now, flows regarding the same is expected to come in tomorrow in the last half an hour of trade. So, which are the stocks that we need to keep an eye out for based on the based on the amount of flows? Firstly, it's ICICI Bank that is expected to receive the highest amount of inflow around 128 US dollars million US dollars of inflows are expected, which is nearly 1 times its 20-day moving average. NTPC Kotak Mahindra Bank is expected to see inflows of anywhere between 102 to 126 million US dollars. Then there is Bajaj Finance, Bajaj Finserv and HDFC Life, which could see inflows of anywhere between 76 to 91 million US dollars. So this is the top 6 stocks based on the inflow amount. Now based on the outflow amount, the top 6 stocks, firstly it's BL, which is expected to see the highest amount of outflow, around 85 million US dollars of outflow expected. Apart from that, it's M&M, Eternal, which is Zomato, Sun Pharma, which could see an outflow of anywhere between 69 to 81 million US dollars. And lastly, it's HCL Tech and Tech Mahindra, which could see an outflow of anywhere between 66 to 69 million US dollars in the last half an hour of trade. So keep an eye out for these stocks. The Nifty reject was announced a while back. It's just the outflow or inflow amount that is expected to come in, which is the adjustment flow that is expected to come in tomorrow, that is June 27th.
Right. Well, thank you for that view, Somit. But on that, let me also invite Mahesh Oja, who's the research analyst and business development at Hensec Securities. Hello, Mahesh. Welcome to the show. Pleasure to have you. Just wanted to have your view on overall markets, and of course, the Somit was also talking about the Nifty quarterly rejig. Which are the stocks that you would pick?
Good afternoon. Although we have we have talked about earlier, so that Nifty is going to touch a new high. So yesterday it has given some breakout type event, and today also some kind of upside, and we can see some more upside in coming days. That could be near by 25,700 odd level. After that, if closing about the 25,700, we may see Nifty all-time high in the coming months also. So I'm optimistic for a bullish side. Currently, if you're looking from a stock picking, I think HDFC Life could be a good pick from our side. ICICI Bank is also a good pick from our side, which we are recommending time to time. And if you're looking from a Kotak, also looking attractive from price traction. So I think that these could be a good pick from our side, which can be look out.
Another stock that remains in focus is One MobiKwik. The stock's been buzzing on trade. Now, there was a block deal of around 8% equity that happened in trade today in the morning. Post that, we have seen this big run-up that has come in the share prices. Now, the stock was up at as much as 15% on an intraday basis, which is the largest intraday gain that we have seen since March 19, 2025. Now, about the block deal, if you see, it was a private equity fund which has exited completely from the company. 8% stake, around 62.1 lakh shares. This were offered at a price of 225, which was at a discount of nearly 8%. Despite this discount, we have seen this kind of a move when it comes to One MobiKwik in the share prices. Now, the potential reason behind this move could be the fact that post the lock-in period had opened in One MobiKwik, there was a big overhang of a stake sale coming in, and with the stake sale now getting over, the overhang moves out from MobiKwik, and that could be one of the bigger reason why the stock has moved. Apart from that, if you look at the share price performance of the stock, it has been continuously falling from the listing time. For the first few sessions, we did see a big move from One MobiKwik, but from its all-time high, if you look at the share prices, it is down more than 60%. So cheap valuation could also be one of the reason. Apart from that, the IPO process which are now getting implemented could also drive growth going forward for the company. So broadly, because of these reasons, overhang going away, cheap valuations and growth that could come in going forward on the back of the fact that the IPO proceeds are getting deployed could be the reason why the share prices are running up in trade today. Mahesh, coming to you on this stock, One MobiKwik, have you tracked this counter? The stock is down nearly 60% from its all-time high. Do you see it as a good time for any retail investor to entry?
I think if any downside, retail can enter with a target of a 320, 330 zone. From pricing event, it's very difficult to judge the upside potential, but yes, some kind of a potential that we can see on MobiKwik also, that could be a 320, 330 zone. So from the shorter term perspective, yes, they can enter if any downside or on these level, 320, 330 level could become.
Thank you so much, Mahesh, for that view. Well, let's pull up Dr. Reddy's. Let's see what that counter is doing. It's down almost 1.6%. Now, Citi has maintained its sell when it comes to the counter. Now, Citi believes that the street expectations for Dr. Reddy's generic semaglutide, that is your GLP-1 or anti-obesity drug in Canada, is too high, and they're predicting around $70 million, which is significantly lower than street's estimation of $150 to $300 million of revenue. They highlight that the Canadian GLP-1 market is already highly penetrated, and they're suggesting a modest future market growth. Citi has outlined several risk factors over here. So one is that strong competition from players with proven peptide capabilities, and Dr. Reddy's do not have that track record when it comes to peptide segment. Also, new competition from Eli Lilly's, that is a global pharma company. The competition from their semaglutide or tirapeptide, again the GLP-1 products, will be launched in 2025, which will give tough competition to Dr. Reddy's also. Citi's model assumed that Dr. Reddy's generic semaglutide approval will be late in 2025, and there's a significant drag that Citi is expecting from the decline Revlimid, that is cancer drug sales. So overall, these are the risks highlighted by the Citi, and that's the reason they've maintained sell on the counter. Well, Mahesh, what are your views when it comes to Dr. Reddy's? Because Citi has clearly highlighted few of the points, when it comes to semaglutide competition and the cancer drug, the revenue potential going down from the cancer drug. Your view on the counter?
I think we have earlier also talked about the Dr. Reddy. If you see the last result, there is no growth from a domestic perspective as well as international perspective. We are closely seeing only acquisition. Due to acquisition, we have seen some kind of upside. But apart from that, we have not seen growth in numbers. So from that perspective, I'm not much optimistic for upside. So we have already bearish on Dr. Reddy, but not like that Citi, that their target is below than 1,000. But yes, I think 1150, 1,200 level could become on Dr. Reddy's side.
Thank you for that view. Well, the other company which is in focus and is doing well in trade today is SMS Pharma. The stock is up almost 5%. Now, what's the reason? Because US FDA has concluded inspection at their Hyderabad, that is Telangana facility, and the inspection have been conducted with zero Form 483 observation, which is a positive when it comes to any pharma company. Inspection was conducted from June 23rd to 25th, and the Telangana manufacturing capacity, if you see, is at 120 kiloliters for niche small volume molecules, and the Telangana facility was 7 times approved by US FDA, including the recent one. They are also targeting 20% of revenue growth and 20% of EBITDA margin for FY26, and they are expecting benefits of backward integration to drive top line and also drive the margin expansion. The new capex plan of rupees 250 crore over the next 18 months will expand their existing and the new products, and the new capex will dedicate capacity for CMO, that is their contract manufacturing services. Well, Mahesh, are you tracking SMS Pharma? Because clearly a good outlook that the company has given, and also zero observation from their Telangana facility.
Yes, definitely. That is the very good for any company in pharma space. So I'm not tracking closely, but yes, something is positive for the company, and I think a stock has a potential of some kind of upside that could be a 280, 300 level at least. So this is the positive thing, and also management guided is a good guidance. So I think some kind of upside could be come in the stocks for near term. 285, 300 level could become.
Well, next up, the Mumbai Urban Transport Project is reportedly planning to splurge around 30,000 crore rupees on buying train sets. Anushi has details of which companies could benefit from this.
Railway sector remains in focus now, and again, now this is on a 30,000 crore of an order opportunity, is why we are seeing some of these railway counters in focus. Now, what is happening for FY26 is in contrast to what happened in FY25. Now, if you look at FY24 to 25 picture, the order inflows were on the muted side, but FY26 presents an exciting opportunity with order inflow of around 30,000 crore. So this is a strong outlook that we are seeing in comparison with almost a muted sort of a a picture in FY24 to 25. Now Mumbai over here presents a 30,000 crore of an opportunity. And this is why the Mumbai Urban Transport Project. Now, what exactly does this project of Phase 3 entail? It includes 5th and 6th line between Virar and Borivali, 4th line between Kalyan Badlapur and Kalyan Asagaon. And this pertains to procurement of more than 200 train sets with about 2,856 air-conditioned one-day metro coaches. Now, what's new about this rolling stock order that we are seeing is that these 238 trains being procured in form of Vande Bharat train sets and includes maintenance of around 35 years. If you look at the expected timelines for this big set of order that we are looking at, the expected tender will be released in August 25 of this year. Final bids and tenders will be placed in March 2026, while tender award to the lowest bidder is expected by September of 26, and coaches would then be rolled out starting H2 of FY28. So key contenders, or rather the key stocks in focus over here include the BEML and Titagarh Rail in the listed space that we are seeing for India. While other stocks in focus also includes BHEL and Siemens India in terms of where the propulsion systems are concerned. Now, in terms of the outlook forward for the rail companies, now shortage of wheel sets had impacted the wagon production in FY25. So that is expected to normalize from mid-June onwards. Along with that, large tenders are expected in the second half of FY26 post the absence of significant orders as specified earlier, and management is also optimistic of several of these companies on regaining revenue growth momentum, but margin recovery would remain on the slower side. So this is the overall picture that we are building for the railway sector.
Right. Mahesh, coming to you on this, what would be a top pick among BML, Titagarh or Texmaco Rail?
I think Titagarh could be a better placed from a valuation perspective. I think Titagarh have a upside potential up to 1,200 odd level. And if any order positive for Titagarh, then we can see some more upside. So from my perspective, Titagarh could be a good pick.
Right, thank you for that view. Well, moving on, for the next 4 to 5 years, starting in few months, we may see softer LNG prices with a new normal price forecasted to be under $10 is what Director Marketing of Gail, Sanjay Kumar, said in an exclusive conversation with us earlier today. To listen in.
Spot market of LNG has very limited volume, more than, not more now. We are actually looking at the period when the LNG capacity of about 20% would be added in next 1 or 2 years all across the world. Now this, the demand does not come up immediately. So the balancing would happen in maybe few years. So till then, for next 4 or 5 years, starting after a few months, we may be looking at softer LNG prices. The new normal that I foresee will be less than $10 of LNG prices across the market. By the way, the crude oil the Brent has also, the new normal for Brent, maybe we may be looking at $65 or $60 up to $70. So if we look at the standard LNG long-term prices of say 13% of Brent, those prices are also indicating towards the same number.
Right, Mahesh, any view on Gail? Do you track this counter?
Yeah, fundamentally a very strong counter, but upside is potential kept. From upside potential, I think 220 could be kept from medium to short term. So I think if anyone want to buy, they can buy on these level, but upside potential, keep in mind that could be a 220 for a near term.
Right. Shifting focus to Nykaa, the company is holding the analyst meet today and they have come out with the investor presentation. What are the key takeaways coming in? What are the key what are the ambitious growth plans of the company going forward? Let's get in Mahima with all the details.
Right, so as you rightly mentioned, I think the key standout for me was that they said that the Nykaa fashion business will achieve a break-even in terms of their EBITDA by FY26. Last when we spoke to the management, the calculation for us came at around FY27 ending when they'll achieve break-even. But this is a big move where they've come and announced and said that FY26 end is when they'll achieve break-even in terms of EBITDA. Plus, they've also said that they aim to grow at mid 20% levels. In terms of Their store expansion, they've said that by FY30, they're going to double their stores to around 500 odd stores. Their ambition is to grow organic portfolio at a 30% CAGR to rupees 6,000 crore in terms of their gross merchandise value. The ambition is to grow 3 to 4x in the next 5 years in the fashion segment. Women's segment will retain the dominance, but men as well as kids to become more prominent. Marketing efficiencies to improve with scale as witnessed in beauty. And overall, they expect mid to high single digits of EBITDA in fashion by FY28 and a 10% EBITDA by FY30. Lastly, they've said that they'll go 3x through geographical expansion as well for the Nykaa superstores as well. So these are the key takeaways from the Nykaa investor presentation.
Right. Mahesh, how are you looking at Nykaa as a stock? It hasn't done much of an action of late. Would it be a good point to enter this counter?
I think stock has a limited potential for upside, but yes, these are the points which are the factor in company's presentation that looks attractive. I think stock could go in near term 225, 230 zone, but upside potential of 250, 260 level could be kept for a 6 to 9 month. If any positive result coming on the side, then we can see some more upside, but from current view, 250, 260 could be upside kept.
Right. Thank you so much for that view. Well, Indo Gulf Crop Sciences IPO has been subscribed by 0.18 times on day 1. Take a look at the breakup of subscription on your screens for that. And also, we caught up with the Managing Director Sanjay Agrawal about why they have gone public. To listen in.
Indo Gulf is into food security, basically into manufacturing and exporting of crop protection and biologicals and nutrients. So with this 200 crores coming up, 65 crores approximately will be for working capital, 34 crores will be for loan repayment, around 12 crores will be the IPO expenses. And we have a capex planned for around 14 crores. Rest is general corporate purpose, and 40 crores is OFS.
Well, Indo Gulf Crop Sciences have certain kind of growth plans. But Mahesh, how are you looking this IPO? Have you studied this? What are your views?
I think we have a neutral view on the Indo Gulf because in the peer companies, if you're looking, we are not looking for a much more upside potential in Indo Gulf. So we have neutral view on the same.
Right. Thank you so much, Prashant, thank you so much, Mahesh, for joining this conversation. It was a pleasure to have you. Well, moving on, Defense Minister Rajnath Singh has taken a firm stand at the Shanghai Cooperation Organization by refusing to sign a joint statement that would have diluted India's position on critical issues, particularly concerning terrorism and regional security. During the meeting, Rajnath Singh explicitly condemned the use of terrorism as a state policy tool. My colleague from NDTV, Shiv Arur, has all the details.
This is the strongest possible message that the defense minister has sent out in the presence of the other defense ministers of the Shanghai Cooperation Organization, which includes the Chinese, the Russian, and especially the Pakistani defense minister there, by refusing to sign a document where an attempt was made by the SCO to remove any mention of Pahalgam and to add Balochistan is a huge move by India. Remember, as a member of the Shanghai Cooperation Organization, anti-terror, counter-terror, condemnation of terrorist acts is one of the principal resolutions and motivations of this entire setup. And for them to try and remove Pahalgam and add Balochistan is a very big slight. So Rajnath Singh refusing to sign that document is a huge deal. But in the presence of the Chinese and Pakistani defense ministers, to propound the theory that has been set in stone after Operation Sindoor, that acts of terror are seen as acts of war, is a huge message that India has sent out. Remember, India has just completed a large diplomatic outreach to the rest of the world regarding Operation Sindoor, trying to convince the world in many ways that Pakistan-sponsored terror continues to be the biggest global national security threat. And therefore, what Rajnath Singh has basically done at the SCO is action that can be considered extreme. There is a huge call about why India is even part of the Shanghai Cooperation Organization if the organization itself, which is headed by China, is looking to actually remove any mention of Pahalgam. The relationship and the nexus between China and Pakistan is a very well-known one, but this kind of brazen attempt to dilute terror against India is being seen very seriously.
Well, you know, one sector which is under pressure is fertilizer. Let's see why that sector is under pressure. Because lots of companies you see Deepak Fertilizers, Paradeep Phosphates, Pact, all these companies are actually under pressure. Now, the news is that China has halted specialty fertilizer shipments to India for 2 months. Consignments of water-soluble, slow-release and micronutrient fertilizers are stuck. Now, these are vital when it comes to India's fruit, vegetable and horticulture crops. And India, now why this is important and why all the stocks are under pressure? Because India imports about 80% of its specialty fertilizers from China, and there's no official ban, but China uses inspection and procedural delays. Now, how this is going to impact India? Now, fertilizer disruption could impact crop yields in the June to December planting season, and India typically imports 150,000 to 160,000 tons during this period. Domestic production of these fertilizers is limited, and all top fertilizer companies, you have Deepak Fertilizers, Paradeep Phosphates and Nagarjuna Fertilizer Company operate in these segments. Now, what is the India response and what's the outlook going ahead? So, Indian companies are now considering local manufacturing, and India is exploring alternative sources like Jordan and Europe. However, logistic delays with new sources remain a concern, and the Indian government has not yet made an official statement on the fertilizer halt. But viewers, this is all the time that we have on this edition of Profit Top Trades. Stay tuned to NDTV Profit.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so
Thanks for tuning in to India Market Close, and you know it's a pattern that we are now getting familiar with. The markets may start off in whichever way, but they build up strength. Look at the Nifty 50, a robust 1%, 25,500. The intraday would be very interesting to see here, simply because this is a day and we are trading at the high point of the day, wherein banks and IT are not outperforming the Nifty. So if you pull up the Nifty IT intraday, and if you pull up the Nifty banking intraday, you will see Nifty IT at the high point, yes, but it is flat. Banks 0.72%, and therefore the Nifty is doing its own thing without the two of the heaviest sectors participating. That's quite something really. The market breadth should come up on your screen next, and we'll get the mid cap and the small cap indices too. This is okay. Not as great. So much unlike what we've seen in the last couple of days, today mid caps are underperforming the large caps, and even the small cap index is extremely flat. So let's focus on the winners on the Nifty 50 today. Let's get the heat map up on the screen, and NBFCs right up there. Shriram Finance, Jio Finance, Bajaj Finance, and JioFin and Bajaj Finance were at the high point from through the beginning. It is Shriram Finance which has made this very good intraday move. Adani Ports, Eternal, Axis Bank, Reliance is participating in a big way. We have HDFC Bank about 1.66% higher too. Adani Enterprises and some of the metal names are doing well. What's not doing well? Dr. Reddy's and Tech Mahindra. Can we get the weightages or the point contribution to the Nifty just to show you? I think RIL and HDFC Bank would be there. Right there, HDFC Bank and RIL, but Bharti Airtel too contributing here. And this plus some of the others is the reason why the Nifty is outperforming the Bank Nifty and the Nifty IT in the session today. Plus not too many losers. I think that also in some sense helping the index behave well today. Broader markets, Mahima, are a bit quiet than what we are usually used to. But you don't complain when the Nifty is knocking on the doors of 25,500.
Almost, yeah. Yes, absolutely. And and we can make that out from the advanced decline ratio that we've seen. It's almost 1:1. So it's the pain is actually on the broader end of the spectrum. The counters like Jai Balaji, Apar Industries that are doing well, but in terms of Lloyd Engineering, it's up 8%, but some counters that are not doing well. There's Infibeam Avenues, which is down almost 16.8%. There's Factor, which is down 6% Endurance Tech down by about 5%. Sagar Chem, HLE, Glasgow, DCX Systems all down by about 4 to 3%. But counters that are doing well and keeping the broader end of the spectrum in check include counters like Lloyd Metals. Let's pull up that counter and see what it's doing in trade today. Jai Balaji up almost 11%. A lot of these counters doing well in trade today. Let's also pull up the overall sectoral heat map and see how sectors are faring in trade today and see what sectors are stealing the show for sure in the markets. There you go. There's Nifty Infra, which is up 1.5%. Oil and gas doing well today now that the crude prices have stabled, up 1.5%. Nifty Metal up 1.4%. Nifty Finance up 1.3% as well. But Nifty Realty lagging. Nifty Realty is always in convergence to where the markets are. It's down by about 1.3%. Media down 1.15%. So the profit booking seen there. Nifty Pharma down by about 0.09%. So that's with regards to where the sectors stand. But yes, speaking about the overall over the total market and the BSE 500, if you can pull up that. Like I was saying, there's Balaji that's doing well. There's Apar Industries that's up 8%, Aloc Industries up 5%, Tube Invest up 5% as well. Dalmia Bharat, Abort, Nesco as well as Awas Finances all seeing gains of about 3% odd. But that, let's also welcome in our guest for the day, Kush Bora, founder of kushbora.com, joining us now. Kush, good afternoon to you. Especially keeping the expiry in mind, what are you seeing? What are the levels that you are seeing on the Nifty 50 as well as the Bank Nifty?
Hi, Mahima. I think the expiry trade is done and dusted. Ever since the Nifty took out 25,350, I think that move was very surprising. We had a call condition around 25,300, then shifted to 25,400, and now 25,500 is staring as the highest OI contributor on the call side. Thankfully, even the put OI kept shifting higher, so that built that confidence. I think, as I said in the opening line, the expiry move is done and dusted. Even the PCR for Nifty right now stands at 1.34, which is suggesting that it's already in a bit of an overheated territory. Risk-reward ratio from now on might not really be favorable for a long trade, but that's only for the here and now and the today. I think from a medium-term perspective, the index is shaping up beautifully. There was this resistance that we spoke about a lot of times, before this breakout at 25,250. That has been taken out with a gusto. I think this shifts the support levels to the higher side. Now that resistance of 25,250 will act as a support. So you should consider long positions on decline. But if you have a position long, you should continue to hold. I think the action will now shift to the mid and the small cap space, which is a little muted today. But if you recall our conversations about 15 sessions ago, which is these were overheated territories and had to see some profit booking. They did, and now they're back to their winning ways. Although because it's the monthly expiry, perhaps Nifty is the star of the show today. But I think there is a lot of action that is that will be seen in the coming days in the mid and the small cap space. So if you've missed it out on the last occasion, the last 2 months or so, the focus should now shift to the mid and the small cap space.
And what about the Bank Nifty, Kush?
Well, Bank Nifty, I still remain very constructive on, especially because, as we've been talking, HDFC Bank, ICICI Bank were at support zones and they've rebounded from there today also, as Neeraj was pointing out. They are some of the top contributors for the Bank Nifty. I think on the upside, 57,700, 58,500 are the next level to watch for, and 56,000 will now act as a support. The reason for that is while HDFC and ICICI have started doing their own thing and have started to move up, the PSU bank kicker that has come in is very encouraging. So as long as they hold ground, continue to even gain some ground on short covering moves, HDFC, ICICI, and even SBI turning a corner will actually take the Bank Nifty higher. So yes, you might see some consolidation because it's just close to the high point, all-time high points. But on the whole, the structure looks very bullish. If I were to create longs, I would still look at Bank Nifty for creating fresh longs. Any 300-400 points decline should be taken as an opportunity to go long on the Bank Nifty. So yes, a Bank Nifty also 57,700, 58,500 are the next levels to watch for on the Bank Nifty.
Kush, good afternoon. What about the ideas for this afternoon? I presume that they would be in the mid cap and the small cap space.
A little mix, a little here, a little there.
Okay.
You can't ignore the large cap category as well. And since I missed out, hi Neeraj. HDFC Life, the stock continues to do very, very well. Even today on the expiry day, you're seeing the stock notch up gains. But this 800 mark, just because it's the expiry, is acting as a bit of a resistance. The overall trend in the sector, in fact, is rather encouraging. So some of the other names also doing well, but I've picked HDFC Life. 830 is the target, 780 is where you place the stop loss. Along with this, amongst the rate sensitives, the realty sector also doing well. And one name that stands out, at least for this week, has been Marathon Next Gen Realty. Very good moves on this one. Had a golden crossover 2 sessions ago. Volume action in the early part of this week was just staggering. So Marathon Next Gen for a positional bet of and targets of 660 and 685 with a stop loss around the 610 mark. Becomes a buy call.
The NBFCs, you're giving Marathon as well as HDFC Life, but the other NBFCs, Geofin, Bajaj Finance, Shyam Finance, they are really rip and roaring today. Is there more upside here, Kush?
So Bajaj Finance, I will be a little skeptical on, because we've seen it rise and then perhaps will correct a little. Similarly for Shriram Finance, we've had this one move up, but when you look at the 710 zone, becomes a bit of a resistance. But if you're willing to sort of overlook that, and by that I mean the time frame, if you're willing to give it slightly longer time frame, then yes, Shriram Finance makes the cut in my list. What I like more is the move on Jio. It had a stellar run, then an equally stellar downtick, but now it's taken out all resistances. It's moving higher. I think there is a significant upside to be had on Jio after the correction that it had witnessed. So for levels of 345, even 370 on the upside, with a stop loss around the 280 mark, there is a good chance that the momentum that started in Jio could continue. So I would pick Jio, Shriram Finance, and then Bajaj Finance in that order among the three. But yes, the likes of AB Capital, LTF, these are some of the names that you have to keep on your on your list.
Okay. Kush, anything on Brainbees that you're seeing? The stock is seeing a significant amount of spike today. Let's pull up that. It's up almost 13% as we speak. And it's been gaining throughout the day. Look at that chart. And this has been after, n number of sessions where it has seen a significant amount of pressure as well. What is your reading with respect to where charts are concerned for this?
In fact, not just today, Mahima. If I dial the clock back early June, there were about 2-3 sessions that I can see that had a big uptick on the back of very strong volumes, and on the way down that it slipped from those 425 odd levels. That was because of market volatility and on the back of very thin volume. So there is a very clear accumulation, on this stock around the 340, 370 zone. It's very close to that level even now. I think there is some accumulation that's happening. Maybe once we have the institutional holding data, we might get some more insights into this. But overall, it's looking like it's turning a corner. It's finding buyers at lower levels. So if I had a position, I would continue to hold. If I didn't, I wouldn't mind building one, because it's taken on the 20-day moving average today, the 50-day moving average today, along with the good volumes that you spoke of. On the way up, 410 and about 445 are the levels to look at, and the 20-day moving average, 50-day moving average rather, near 360. Which is also a support zone, should act as your stop loss.
Got it. Kush, stay on. The next conversation promises to be an interesting one. A recent and rather somber study by the National Housing Board showed it would take at least 109 years, even for the top 5% of the richest individuals in Mumbai, to talk about real estate per se. Imagine a flat in Mumbai costing 3 crore rupees, a price tag out of reach for many. But what if you could own a piece of that property or even a stake in an entire building without the burden of managing it? I mean, in a simple way, that is where real estate investment trust or REITs come in, right? These trusts pool money from investors to buy and manage, or just manage, large-scale real estate spaces, from office towers to shopping malls, and even maybe in select cases, residential complexes. By investing in a REIT, you can earn a share of the rental income without dealing with the tenants, maintenance, or having to fork out the whole amount yourself, becoming a landlord without the headaches. So how can you leverage the power of a REIT? Should you or should you not diversify your portfolio with REITs? To answer these questions, I'm joined by Sharik Merchant. He's fund manager at White Oak Capital Mutual Fund and looks at this pocket very, very closely. Sharik, good having you. Thank you so much for taking time out. This is Neeraj here. Good afternoon.
Hi, Neeraj.
This was our simplistic version of talking about REITs. I would love for you to tell us, why is it that you guys at White Oak study REITs so closely? What is the investment case of REITs for institutional investors or retail investors?
Sure. So, Neeraj, I think you put it very beautifully when you started, giving an investor access to a piece of real estate, which typically a ticket size would be restrictive. What REITs provide investors is that you get access to the highest quality of grade A real estate by buying units of that real estate. Now, what is not always appreciated as well is that when you're looking at equities, let's say a company that is a developer, what that developer does is it buys land, it constructs the real estate, and if it's, let's say, commercial real estate, it will It will let it out and then enjoy the rentals. So it comes with a completely different level of risk profile because there are several nuances and challenges associated with going through the entire cycle in developing real estate besides the time itself. What a REIT does is that it takes on developed real estate. 80% of a REIT portfolio minimum is mandated by the regulation to be already developed and rent generating. So the risk profile, because it is largely let out real estate, it reduces an investor's risk profile and therefore enables someone to access high quality, professionally managed grade A real estate at a significantly lower level of risk. Now, this does not necessarily only mean commercial real estate. When we are talking about REITs, it also includes asset classes like malls, which have a completely different tenant profile. And the drivers for, say, commercial real estate versus mall real estate can be very different. So from an investor's point of view, it gives you access to different levels or different types of income generating streams at different levels of risk profiles. And so when, like you said, where does it fit into an investor's portfolio? Where it sits is somewhere between debt and equity, where we think of returns closer to equity-like, but typically lower than equity, but at risk profiles that are significantly lower than equity. So your risk-adjusted returns tend to be fairly healthy. So that's why, as an asset class, we really like REITs, and I think they're at a very, very nascent stage today. They're only going to grow meaningfully from here.
Hi, Sharik, hi, Mahima also joining in. Just want to understand as to what is your expectations as to how REIT markets will evolve in the next 3 to 5 odd years, and considering if a person wants to go ahead and invest in a REIT today, how much of a percentage in terms of his or her total portfolio should be REIT per se? Because we always say, right, that do not put all your eggs in one basket. What's your reading there?
Got it. So from a growth point of view, maybe I'll point you to a few statements that large infrastructure players like Blackstone or Brookfield have recently made. Their commitments in India, which are in the tune of $50 billion each, they want to double this portfolio over the next few years. These go into infrastructure assets, they'll go into InvITs, they'll go into REITs. And at some point, these assets will come into the market to public platforms, allowing smaller investors and other funds to be able to invest in them. The size of the assets today is roughly 1 lakh crores for REITs, slightly higher for InvITs. Over the next few years, we think that this sector will grow multifold in size as more and more assets can be REITified or can also come into InvIT structures. And there was a recent study that said that the pool of assets that are today available that can come into InvIT structures are close to 20 lakh crores. So that is the kind of potential that you're seeing of this sector over the next few years.
And that, sorry, you continue.
Yeah, and in terms of where this sits in an investor's portfolio, you're very right, or cannot put all eggs in one basket. This becomes a very effective tool to diversify portfolios. The traditional mindset has been to look at investments through an equity lens or a debt lens. But with REITs coming in, what this does is that it is giving you a completely different profile of income and risk assets that can add to your portfolio. Remember, till now, this asset class was just not available. Because you now have access to this asset class, you can think of this very differently in terms of how you want to allocate. There are again nuances to this. I don't think you should think of all REITs or all InvITs in one basket. They also within them come with very different levels of risk and return profiles. So within REITs and within InvITs, you have the ability to diversify.
Sharik, what within this landscape? I mean, because there are different kinds of REITs, right? Some manage malls, some manage commercial real estate, right? At some point of time, we'll have warehousing REITs as well. I'm pretty certain of it, if not already. So what, to your mind, which are the better ones for an investor to look at when they are looking at REITs? And what's the average return that one should anticipate? I mean, there are some people talking about 9% being good, but at a point of time, when the markets are a bit lower, even 12% was available as a yield, right? So can you fill us all of these gaps with?
Yeah, so like I said, there will be different risk and return profiles which you have to keep in mind. When you're thinking about commercial REITs, the underlying is commercial assets where your drivers will be how commercial real estate picks up in India. Essentially, how GCCs, which are the largest takers of grade A real estate in India, how GCCs grow in the country. When it comes to mall REITs, you're effectively taking a call on discretionary consumption in India growing. And as long as you believe that discretionary consumption in India will continue to grow, mall REITs become a very interesting play. Also remember that there is very limited supply of high quality retail space in India. If as a brand who wants to expand, there is limited high streets, you need to go to malls. Where will you get top quality space? So the ability of malls to charge greater rentals is only growing. Similarly, even for commercial real estate, you will see that there is a very wide divergence between grade A spaces and grade B spaces. REITs, because they are professionally managed, they have the ability to invest in capex within existing buildings. They uplift the quality of the building and therefore start to command premium rents.
Sharik, so here's my question. If somebody buys in into a REIT, any REIT structure which they might be comfortable with, let's assume after analysis, at a yield of maybe 10%, 11%, what have you, would you reckon over a period of 5, 7, 10 years, you earn that yield of 10, 11% plus the upgradation in the prices of property, and therefore a CAGR return of maybe 13, 15, 17%? I don't know what the number is. I'm just throwing numbers at you, but that kind of return could be possible?
Let me give you some perspective here. So today, for REITs, yields tend to be in the 6 to 7% ballpark, but remember they are also very tax efficient. But what is underappreciated is the growth element. Typically in India, a lot of you may be aware, rentals escalate at 15% every 3 years. So these are contractual rental escalations. Over and above that, you have other levers like increasing occupancy, mark to market on the rentals, new assets that are coming into the REIT, either through M&A or where they have land available and they are constructing on that land. So these become growth drivers for REITs. So when you put all of it together, which is a combination of the yield that you're getting today, plus the growth that is associated with them, I would believe that a low to mid-teen number is where most REITs would sit. Or to put it in different words, to create a benchmark relative to equity, I would suggest that it would be marginally lower than what equity returns would be.
Shai, just want to get a sense of how these are tax efficient, because if I'm not wrong, there are three sources of income through which REITs generate income. That's rental, capital gains, as well as dividend income, and all three of them are taxed differently, if I'm not wrong. So how are they tax efficient? Just wanted to understand that.
Right. So I'll explain all three of those components. When it comes to equity dividend payouts, dividends are taxed at your maximum marginal rate. So you're paying full tax on that dividend. In the case of REITs, the dividend component of the payout is fully exempt to the taxpayer. The second component is the interest component, which is fully taxable, comparable to dividends of equity. And the third component is a component called return of capital. Now, in return of capital, what is done is that the payout that is received by you is reduced from your cost of acquisition. And then at the point at which you sell the REIT unit, you will pay capital gains on that amount. So you defer your tax liability and you reduce it at a lower rate, because capital gains in India are charged at a lower rate than your maximum marginal rate of tax. So net, the overall REIT investment tends to become more tax efficient than typical equities.
Got it. Sharik, lovely talking to you. Thanks for giving us this, what some people might call a primer, but it's always good to revisit what REITs exactly do, because for a lot of people, this subject is not as well discovered. So thank you so much for giving us a lowdown on this.
Yeah, thank you for having me.
Now, viewers, remember, I can't ask Sharik about this, but because he's on the buy side, but the names of the companies which offer this REIT structure, and there are 3 or 4. So there is Embassy Office Parks REITs, that is one. There is Mindspace Business Parks REIT. There is Nexus Select Trust, and there is Brookfield India. And the returns thus far, I mean, I guess this is what this is since listing. Okay, yeah, since listing. Is this XIRR? No. It has to be since listing. 24% XIRR would be quite strong, I would suspect. So must be since listing. But okay. Okay, we need to hit a break maybe. Actually, no, we'll take a break, but just before that break, Kush Bora is with us. Kush, since we're on this topic, there's a 3 or 4 listed ones. Do they come up in the charts at all as a steady gainer, the 3 or 4 names that I spoke about?
Yeah, to be completely honest, not that I track them very closely, but the one that's standing out, from the names that you've mentioned is Mindspace Business Park REITs. A very steady up move, very linear kind of an up move. Of course, some volatility here and there, but on the whole, if you see, this has been one of the more steady ones. So, I mean, if someone wants to consider, that this is one perhaps that, you could put on your list. Also, it's seen some cooling off in the last 2 weeks. So that this dip also might act like a healthy, entry point. The other ones that you mentioned have also given a good gains, as that table was suggesting, but have had their fair share of volatility. So if I were to pick, then I would actually look at the Mindspace Business Park REIT, because of the sheer nature of the stability of the upward that is.
Okay, we need to slip into a quick break. Kush, stay on. So much more to talk about. Back with Heard on the Street and then more stock idea.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of rupees 77 to rupees 82 per equity share of face value of rupees 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Days high for a clutch of things, including the Nifty 25512 and led by heavyweights. HDFC Bank is participating all right. In the points contribution, it was anyways number one. Now I think it's done even better, 1.85% higher. This is turning out to be a terrific afternoon of trade, and much like the last couple of days, it builds up as things move up. Now, what's being heard on the street? Does HDFC Bank or Reliance or ICICI Bank feature there? Does Bharti feature, or is there a completely different set of stocks? Let's get in Somit to talk about all the chatter. This Somit, it's very interesting because Bank Nifty is not the top contributor today.
Right.
But NBFCs and HDFC Bank are right up there in the percentage gains or the points. Anything on these first?
Bajaj Finance is one of the top gainers, and maybe that could be the reason why financial index is one of the top contributors and not the banking names.
Yeah.
Both finance and FinServ both are gaining up.
And JioFin is up and Shriram Finance is up 3%.
Right.
Yeah. But anything on HDFC Bank, by the way? Anything?
No, just normal flows that are
normal
coming
flows.
in. Yeah.
Okay, fine. What's on the chatted loose menu today?
Completely different set of stocks. Firstly, it's UPL. Now, it's one of the top losers in FNO if you look at. Now, dealers are indicating that there's a buzz on the street that there could be some potential write-offs related to its Brazil subsidiary, and that's the reason why the stock has been declining in trade. At one point of time, it was down as much as 3%. Second stock, again, one of the top FNO losers, that was Colgate. Dealers are indicating that there's a rumor on the street that the Q1 could be much weaker than what the street was anticipating, and that's the reason the stock has been declining. But dealers are also saying that at these lower levels, there are a few large HNIs that have been accumulating this counter. So keep an eye out for Colgate. There could be a reversal is what dealers are indicating going forward. Tata Steel is one stock. The stock has gained on the back of fact that Citi recently upgraded China's GDP forecast, and that's the reason why all metal stocks have been gaining. Tata Steel also is up around 1.5% in trade, but dealers are indicating that there are sell flows at higher levels, given the fact that there is some expectation of steel price cut that could come in anytime soon. For Aditya Birla Sun Life AMC, dealers are indicating that there are buy flows on institutional desks. Both FI and DIs have been accumulating this counter at lower levels. The AUM growth for Aditya Birla Sun Life AMC is expected to be much better than its peers, and that is one of the reasons here. And lastly, Syrma SGS, the buzz on the street is that the company might announce an important acquisition anytime soon. So keep an eye out for Syrma as well in trade.
Okay, interesting set of names, Somit. Thanks. And some stocks on which you got to be careful as well. So bear that in mind. By the way, what are since you spoke about flows in HDFC Bank, etc., there is also this Nifty quarterly rejig, right? What are flows going to suggest?
So the Nifty quarterly rejig was announced sometime while back, but the flows regarding those changes are expected to come in tomorrow in trade, most likely in the last half an hour. Few stocks that I'll mention based on the highest inflow is ICICI Bank. Inflows of around $128 million is expected to come in, followed by NTPC around $126 million of inflow. Then there is Kotak Mahindra Bank, Bajaj Finance, Bajaj Finserv, HDFC Life. these stocks could see inflow of anywhere between 75 to 91 million US dollars. So keep an eye out for these stocks. These are the top 6 stocks based on the inflows. The top 6 stocks based on outflow, first on the list is Bharat Electronics. 85 million US dollars of outflows is expected, followed by M&M, 81 million US dollars. Eternal, that is Zomato, Sun Pharma, Tech Mahindra and HCL Tech are expected to see an outflow of anywhere between 66 to 69 million US dollars. These are top 6 based on top 6 stocks based out of outflow. There are many other stocks, but keep an eye out for these stocks because the inflow and outflow amount is much higher than what other stocks are showing.
Very interesting. But on a day when maybe there is an expectation of an outflow, Eternal seems to be doing well. So that is actually zooming in trade. So on the expected inflows or otherwise, Bajaj Finance, etc. Okay, but Eternal is an interesting one. Okay, Sumit, thanks for that. Chakri Lokpriya joins in as well, and it would be lovely to get him in because he's got his great eye on NBFCs and banks as well. Remember, Kush is already constructive on the non-lending one, which is HDFC Life, but some of the lending names are doing really well. So focus on that for a bit. Chakri, to you first, and then Kush will take in a technical view maybe on HDFC Bank. But Chakri, to you first.
Good afternoon.
Big zooming
Thanks for
here.
having me.
No, the pleasure is ours. What do you do with the financials?
So what we do is basically, I think, buy more of Shriram Finance, Geo Financials, MMM Financials. We are in an interest rate cycle which RBI has helped you by cutting rates 100 points, pushed in liquidity, cut down the norms. So now all these are, and as a result of all this, cost of lending for these NBFCs will also come down a little bit. And so now all the incentive is there for the bank to lend, creating an environment to buy. To borrow by the corporate lenders and as well as consumers. So even home loans have come down, interest rates that is. So both corporate and consumer lending should pick up at this point in the cycle.
Chakri, hi, Mahima also joining in. Somit was mentioning about Colgate, and what he was saying is that Q1 is expected to be lower in terms of volume as well as top line growth as to what the street was expecting. I remember after the Q4 numbers, there were a lot of brokerages that had upgraded the counter, also had anti-consensus buy on Colgate. Your view with respect to this counter?
Usually whenever the monsoon is good, they'll say, why don't you go and buy some more Colgate, but I would stay away because there hasn't been much of a product innovation, and how many times more in a day would you brush? So there is no volume growth also. So against that backdrop, they have to get only new customers, and that pace has been very slow. So I think, with the valuations up there, we'll stay away from Colgate.
Anything on the real estate side of things, because we always have seen that if the market is going up, there's real estate which is always lagging, the Nifty Realty especially. Anything in that space that you're liking, Chakri?
But the environment is right for real estate as a sector, simply because, interest rates have come. The same reasons that we discussed for NBFCs. When interest rates come down, EMIs come down for the borrowers. Both existing borrowers and new borrowers. So both of them benefit, and that creates an incentive to go out and think of purchasing an apartment, across price points. And so this pipeline for, name it Prestige, Shobha, DLF. You saw DLF selling out, such a big amount in just a matter of days. That is real demand. So I think the environment for them and the valuations are all right, despite running up. So those are the names I would buy.
If we can pull up the Nifty Realty chart once again, there's only one gainer today, that is Phoenix Mills. Otherwise, all of the other counters are seeing pressure today. Sobha down 3%, Prestige, Brigade, as well as Macrotech, all seeing pressure down by about 2%. Kush, anything on Wockhardt? Wockhardt is also seeing profit bookings today. It's down by about almost 4%. What are the charts indicating, and what's the support and resistance that you're seeing?
So very interesting moves on this one. I mean, it's not listed in the F&O space, so hasn't really got much to do with the expiry that's playing out. But even before today, you see after the stock hit that 1850 mark, it's been under a gradual profit booking mode. In fact, the volumes on the way down also, select days have been rather high. So I think this is perhaps that extended round of profit booking. Almost on an immediate basis, a support for this one comes in at 1600 around figure. At that, So if it does halt, the downfall around those levels, then it might just pause and then make a bump up again. But if not, then the lower levels of about 1450 could also be tested. So yes, it went up also rather sharply, seeing some profit booking. 1600 is the key level to watch for on the downside.
Okay, so that's with regards to where charts are concerned for Walkhard. Now, the Mumbai Urban Transport Project is reportedly planning to splurge 30,000 crore rupees on buying train sets. Anushi has details of which companies could actually benefit from this. Anushi, what are you picking up?
Railway sector remains in focus now, and again, now this is on a 30,000 crore of an order opportunity, is why we are seeing some of these railway counters in focus. Now, what is happening for FY26 is in contrast to what happened in FY25. Now, if you look at FY24 to 25 picture, the order inflows were on the muted side, but FY26 presents an exciting opportunity with order inflow of around 30,000 crore. So this is a strong outlook that we are seeing in comparison with almost a muted sort of a picture in FY24 to 25. Now, Mumbai over here presents a 30,000 crore of an opportunity. And this is why the Mumbai Urban Transport Project. Now, what exactly does this project of Phase 3 entail? It includes 5th and 6th line between Virar and Borivali, 4th line between Kalyan Badlapur and Kalyan Asagaon. And this pertains to procurement of more than 200 train sets with about 2,856 air-conditioned one-day metro coaches. Now, what's new about this rolling stock order that we are seeing is that these 238 trains being procured in form of Vande Bharat train sets and includes maintenance of around 35 years. If you look at the expected timelines for this big set of order that we are looking at, the expected tender will be released in August 25 of this year. Final bids and tenders will be placed in March 2026, while tender award to the lowest bidder is expected by September of 26, and coaches would then be rolled out starting H2 of FY28. So key contenders, or rather the key stocks in focus over here include the BEML and Titagarh Rail in the listed space that we are seeing for India. And other stocks in focus also includes BHEL and Siemens India in terms of where the propulsion systems are concerned. Now, in terms of the outlook forward for the rail companies, now shortage of wheel sets had impacted the wagon production in FY25. So that is expected to normalize from mid-June onwards. Along with that, large tenders are expected in the second half of FY26 post the absence of significant orders as specified earlier. And management is also optimistic of several of these companies on regaining revenue growth momentum, but margin recovery would remain on the slower side. So this is the overall picture that we are building for the railway sector.
Right, Anushi, thank you so much for giving us all those details. Chakri, I'll come to you on this one. What she was indicating was that in FY25 there was muted order inflows, but FY26 is where order inflows have picked up for a lot of these railway counters. Anything in specific that you're liking in this space where valuations are looking attractive to you?
The space is looking good, and Titagarh Wagons, for instance, valuations are still okay. The companies, look at the company's order book. And no other company, as in other sectors, wouldn't have that kind of visibility for next 5 years in terms of revenue. And the company trades at about 30 odd times for a revenue EPS growth of north of 38 times. And the company is expanding right from metro to Vande Bharat to export and ancillary services, which are higher margin. So these kind of opportunities for the railway sector did not exist about 3, 4, 5 years ago. So now they have actually become a growth sector. So I would buy, I think there's sufficient upside in, for instance, at Titagarh Wagon or Bharat Earth Movers. They make the earth moving equipment very necessary for a part of this railway line. Plus, they are also used in infra. So that's another name which looks also very good.
Okay. Kush Bora, come in on these. Also come in on what is happening with HDFC Bank. Would you go out and buy it at these levels?
So, Neeraj, I think, about a week or two ago when we were discussing that, I'm more confident on Bank Nifty versus the Nifty. I think the confidence came from the fact that HDFC Bank, even ICICI Bank for that matter, were at strong support zones and due for a rebound. Crossing 2000 is a very, very healthy sign for this one. So as Chakri also mentioned, I would say buy more. Not a bad idea to keep accumulating this, especially if you get a dip towards the 1975, 1980 mark. This is from a trading perspective. But if you have, you should continue to hold. I think, this is a multi-year breakout that HDFC Bank is giving. So this move is very likely here to stay. If I had a position, I would hold on, and the next key level to watch for would be 2100, 2175, zones. So yes, continue holding on to HDFC Bank. You could actually look at adding ICICI Bank. It's still some distance away from the recent highs that it made around the 1465 mark. So there could be a catch-up play that might come in. Now, as far as the railway names go, yes, Titagarh Wagon is shaping up rather well. The resistance comes in at 1000, which is also quite a distance away. So if you wanted to play, then you should look at Titagarh. Texmaco, JSW, they've made good moves. At least Texmaco has, but it's giving up gains. So I would be a little watchful from a near-term perspective, but Titagarh is setting up beautifully. And the two stocks that were mentioned in that report, BHEL and Siemens, incidentally, I like both of them. They've had a good run, and they've actually weathered the storm of volatility that was there over the last 2 weeks, and are again looking to move up. So Titagarh, from the railway particularly, CDFC Bank, a buy or a hold, and keep an eye out for BHEL and Siemens. Both are poised for a big up move in the coming months.
Okay, so that's the view with regards to where these railway counters stand. All right, now shares of One MobiKwik Systems are in the spotlight today, surging as much as 15%. Let's pull up the chart and see. It's cooled off from its day's highs, of course, but trading 9% higher as we speak. And this is after a large institutional investor exited the company through a block deal. We have Harsh joining in with more details on this.
Yeah, large block on this one. Thanks for that, Mahima. Large block on this one. What we're seeing is likely a full exit by an investor. But let's talk a little bit about what possibly has transpired since the morning. 8% shares have changed hands since the morning. So we've seen a large block. Volumes are at 59 times 30-day average, and it's hit a 2-week high as well. At the very top, in fact, it's the biggest intraday gain at the very top. I did mention that in the last 3 months. So 15% is what it was gaining. 281 was the day's high. It was up 15% intraday at the very top. Now let's talk about the investor which was supposed to exit. The offer size was around 62.1 lakh shares, which comprises an 8% stake. In terms of who the investor was, Net1 Applied Tech Netherlands, which is a Netherlands based private equity, or rather a private equity having invested via Netherlands, has offloaded its entire stake of 8%. So it's a full exit. It's a cleanup trade, and which is why you're seeing the reaction that you're seeing. The floor price was set at 225, likely done at that price or higher, and we'll obviously have to wait and watch as to how much was sold and who are the buyers. That will obviously come later today evening, and we'll get that perspective. But one more thing that you need to be mindful about. Stock is trading below the IPO price, and therefore valuations not particularly expensive in relative terms to the IPO. 1 month returns have been flat. 6 month, the stock is down 58%. All-time high to the current point, 61% lower. And from the all-time low, the stock is up 19%. So maybe some bit of that also playing on investor minds.
Yeah, but up 19% after the 9% up move today. So in some sense, there is more. It's disappointed investors more than it's rewarded investors. So keep that in mind. But Harsh, thank you so much for that whole piece around One MobiKwik Systems. This and many others, which are the unique financial services plays, if you will. And unique as in it's not mainstream financial play, but doing a few interesting things. Chakri Lokpriya, from a swath of these companies, is there something that stood out for you?
Geo Financials is doing lots of new things, right? It's the things which the regular banking industry hasn't done with success.
Chakri, sorry, are you saying JM Financial or you say Geo Financial?
Geo Financials.
Okay, please continue. Yes.
Yeah. So whether it's digital banking, insurance, UPI payments, the whole space, this is for the new India, the emerging India. Now that class of the middle class of investor Indians are, the number is expanding. And, here's a company which is all focused on that. It's still in its early stages. But I think we would give credit for the fact that they've created such a big platform on where there holds huge potential.
Okay, so that's the view with regards to where these companies stand. Now, Kush, anything that you're seeing on HLE glass coat? It's down by about 3.6% today. Trying to pull that up. If you can pull up the chart for 1 week as well for this counter and see how it's done. It's down about 3.6%. Till we try to pull that up, Kush, what's your view with regards to where charts are concerned for this counter?
Not a bad move, Mahima. It's down about 3.5%, but in the last 4 sessions, it had a good run from 418, 419 odd levels, all up all the way up until 480. So it did make that smart up move, and negative divergences were setting up. In fact, if you dial the clock a little, March this stock was languishing near the 200 to 20 mark. So more than 100% gains already in the last 4 or 5 months. So some cooling off, par for the course. If this in fact continues, and the stock does dip to the 425 to about 435 zone again, then it will be a good entry point for anyone who's missed out on the rally last time around. So I think this is just regular profit booking more than anything else. Volumes also aren't really something to write home about, which is a good sign. So on the way down, the volume hasn't really perked up as much. So you could well continue to hold if you have a holding. For fresh entries, look to 425, 435 zone as a fresh entry point.
Okay, so that's with regards to where HLE glass coat is concerned. The other counter that's been buzzing since yesterday is KNR Construction. Chakri, it was buzzing yesterday because of the huge order win, 4,000 plus crore order win for this particular counter. Today also, if you can pull up the counter, okay, it's cooled off from its day's heights. It's down almost 1% as we speak. So some profit booking seen there. But when I was seeing the volumes as well, it's almost 12 times its 30-day average today. And the Bloomberg consensus estimates, when I was checking that, there were around 6 odd buys and 7 odd sells for this counter, and the return potential was also in negative. But what's your view with regards to KNR Construction?
KNR Constructions and the construction companies in general, their growth rate has come down due to various reasons. Both awarding of contracts has come down, the margins in the business has come down, and well-known problems of land acquisition and the cost of acquisition has gone up. I think, these are some of the problems which require a robust government intervention to clear it all up, including as an adjacent, if you look at NHAI road construction numbers have come down quite a lot in the last 1, 2, 3 years. So I think that needs to change, and they need a lot more order wins for the stock and this whole sector space to move up.
Okay, okay, so that's with regards to where KNR Construction is concerned. Now, the outlook for the Indian cement sector is turning positive, with Nuvama expecting a pickup in demand and improving pricing power for companies. Let's bring in Puneet to give us more perspective on this and a complete breakdown as to what Nuvama is saying.
Well, thank you for that. So it's definitely been a very active space, the cement one, because post the price increases in April as well as May, it's a heartening sign that the prices have largely actually remained stable in June, which is actually a weak period for the cement companies going into Q2 as well. Nuvama has also mentioned that the sustainability of the prices will be a key monitorable going forward, but they feel like the demand is likely to pick up in FY26, which will be aided by the traction in capex after a very weak FY25 which was impacted because of elections amongst other reasons. What's also interesting is the capex from the central government. Now in FY23 as well as 24, we saw 20% growth in each of those respective years, which actually fell to 11% in FY25. Now, at the start of FY26, it's actually started in a very healthy manner. In April, the capex was up 61% on a YOY basis, and that's just for the month of April. So we could expect the demand momentum going forward. When you look at the capex for this year by the government, it's roughly about 11 lakh crores, 11.2 lakh crores, and the number of 61% YOY growth in April signifies that within the first month itself, we've actually done a capex of 1.6 lakh crore, which will benefit the cement majors as well. The other aspect is the state government capex, and that's also actually picked up 8% on a YOY basis in the month of April, so another key positive there as well. Finally, in terms of what's the outlook and which cement sector stocks should you have on your radar, Nomura had a very interesting note on 5th of June, and the key aspect that they mentioned is they're bullish on the long-term tailwinds of the sector and have preferred large caps compared to the medium-term mid-cap players. They see a higher volume growth of 7% CAGR, which is much higher than the 4% CAGR which we saw in the past decade. So all signals pointing to growth. They prefer Ambuja, Ultratech as well as Shree Cement and Ramco Cement as one of the top picks. But in terms of Bloomberg consensus also, we saw stocks like Ultratech, which have 81% buy calls from analysts, and both ACC and Ambuja have more than 70% buy calls. So all signals translating to growth, and the stocks reacting on news flows as well as pricing largely being stable in the month of June.
Okay, thank you so much, Puneet, for breaking that down for us. Chakri, the interesting part in that note was government capex picking up, and at almost 61% YY basis. Because of this, of course, cement space is what they're mentioning will see growth going ahead. But do you think that following that, paints will also see some boost?
Absolutely, yes. And I think ACC, Ambuja, Ultratech are extremely well placed in this whole. Now, even after the 7% growth, we have to recognize that it only matches kind of the GDP growth number. GDP grows at about 6-7%. So, which is still way below the growth rates that the cement sector used to grow if you rewind back sufficiently in the past. For various reasons, it's slowed down, infrastructure spending, and that is clearly with the interest rate cuts and liquidity, etc., that RBI has done is going to receive a boost. And the valuations are very, very reasonable, whether it's ACC, Ambuja, or Ultratech. And clearly, these are the companies which have the pricing power and would be buyers.
And anything in the paint space that you're liking, Chakri?
Paint space, I think I'll continue to stay away. They're good trades, but so whenever we find a trade, we will. But otherwise, I'll stay away.
Stay away from paints. And Kush, your view with respect to where charts are concerned for the cement space, anything that you're liking there?
So Ultratech's a very clear winner on this one, no two ways about it. So from fundamental and technical lens, Ultratech stands out. And yes, on the way up, you are looking at about 12,300, 12,700 as the next legs, of the up move. 11,600, the 50 DMA is the support zone. Add to that, Ramco Cement, it had a wild move today, moved all the way up until 298 and then has corrected significantly. The volumes are very high on this one. So yes, Ultratech and Ramco, and a short covering candidate, I would have Ambuja Cement. It has been under pressure for some time, but for the last 4 sessions, it's seen a big up move and holding above some of the key averages, 20, 200, 50 day moving average, all of those stronger in the last 2 sessions. So as a short covering and a catch-up play, I think Ambuja must also be on your radar. So Ultratech, Ramco, and Ambuja, 3 stocks to watch for.
A lot of high flyers, by the way. And keep in mind as we hit that break that Bikaji Foods is picking up. Nuvama is at the day's highs. SAIL has inched up too. So 4.5%. I wonder if SAIL is a late mover. Yes, it is. 4% higher now. So doing very well. And Brainbees, Jai Balaji, Apar top the list on the Nifty 500. The broader markets may be quiet, but individual stocks are on a rampage. We take a break. Up next, more news and updates. Kushbura, take a moment to thank you for joining in today. Really appreciate your time. We'll get you some top buy today, sell tomorrow ideas and fresh technical views as well. Stay tuned.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of rupees 77 to rupees 82 per equity share of face value of rupees 10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
Back with India market close right here on NDTV Profit, 1.17% higher and strong. It is looking to be a very strong market, and if you're a Nifty trader on the long side, you wouldn't have any complaints whatsoever. European markets are starting off okay. DAX is up about 0.8%. Not starting off, they're behaving okay, is the point I'm trying to make. So keep that in mind. And the US futures are also ticked higher as the S&P 500 is nearing new records. So no complaints whatsoever across the world markets. Rajesh Palvia, SVP Technical and Derivatives Research at Axis Johnson in that light. Rajesh, you couldn't have chosen a better time to join in because the markets are rip and roaring. Are you initiating fresh longs via plain vanilla futures or via options?
Good afternoon, Neeraj. Good afternoon, everyone. So yes, markets are roaring, and we are comfortably above 25,500. That's the level where we were keeping eye. So now looking at the index move, especially in expiry trade day, I think if we close about 25,500, I think this really may extend to 25,800 also. Bank Nifty is at all-time high trajectory. So possible target for Bank Nifty, we may see towards 57,500, 600 zone comfortably in next 1 or 2 trading session itself. So both indices are looking positive only. For Nifty. Yes, we are playing with the option. Now we are buying 25,600 call option of 3rd July. That is on our buying side buy side trade on the index. Because the kind of short covering which we are witnessing at this juncture is clearly giving us confidence that 25,800 we may achieve in short span of time. So we are buying 25,500 600 call option, which is now trading at around 170 odd level. So this call option one can buy for upside target of 260 or 270 kind of level. On the downside, stop loss should be placed at around 125 rupees.
Okay. Your picks for the day, Rajesh?
So 2 stock ideas. First one is Eternal, a very strong breakout after a brief consolidation, and stock managed to give breakout of previous swing high. Looking at the formation which we are seeing on the daily chart, it's a rounding bottom formation is taking place, and looking at the structure, we believe that now this stock has potential to move towards 300 kind of level also. But for trading point of view, one can buy this stock for target of 280. At this juncture, keep stop loss of 260 to buy Eternal. The second stock is from the metal space, that is Hindalco. A very strong rally in most of the metal stocks, especially in last 1 hour of trade. The way Hindalco managed to give breakout on a weekly as well as on the daily chart, it clearly indicates that now this stock can cross 700 level also, and positionally 730, 740 would be the target. But for trading point of view, 7151 can project as a target for trading. Keep stop loss towards 678 to buy Hindalco.
Eternal and Hindalco are the two picks that Rajesh has given today. Can we try to pull up Eternal's 1 week chart and see, because it's been slowly and steadily rising. Let's pull up that. It's up 2.8% as we speak right now. But on a 1 month and also at its day's high right now, there you go. That's the 1 month chart, and that's the 1 week chart, and that's the kind of moves that we've seen on Eternal. Of course, there is one overhang on the chart, that is your FIs might see some selling there because of the company caping the FI inflow in the counter, but we'll have to wait and watch out for that. But strong moves on Eternal for sure. Now it's time for our bull and bear segment. Ask Automotive is the stock in focus today, especially on the back of a joint venture with Germany's TD Holding. While bulls expect the JV and government's ABS mandate to be huge growth driver, bears are skeptical about timelines. Puneet is here joining us and breaking that down for us. Puneet, what are you picking up?
Well, thank you for that. So definitely stock is reacting to positive news flows of a new joint venture that's largely with Germany's TD Holdings. This will be focusing on high electronics, high value vehicle electronics specifically, as well as interior system, and that's the premium margin product which Ask Automotive is going into. That's the first bull case for us. While they've not given timelines, generally the JVs in the previous timelines will have taken a little while to scale up to meaningful growth. But nonetheless, it's a positive news flow. Another product intervention that the company has done where they were absent. It's important to know that this is company's fifth joint venture over the last 12 to 18 months and incorporating some of those positive aspects. And over the last 3 years as well, the company has been looking to enter new growth areas and agencies which have been absent largely in the past. So tie-ups as well as product innovations is definitely something that's visible now. The second one is, of course, the mandatory ABS ruling. Now, this came on on June 20th, where media reports are speculating that from April of 2026, we could see anti-lock braking system coming in across two-wheelers. Now, just to give some context, roughly India sells about almost 1.5 to 1.75 crores two-wheelers in 1 year. Almost 80% of that is entry-level bikes. So this could be a huge product boost, and companies like Endurance as well as Ask Automotive already have existing anti-lock braking system products. So it could be a huge product benefit for an already developed product. So the other players might need to do tech tie-ups as well. So it could take some time. The effect, although coming in April, will only have effects in FY27. And finally, in terms of valuation, stock is not cheap by any means. That's 28 times FY27 price to earnings. But the growth that the company has been showing has been much higher than the industry. So investors could give it that premium. But we have seen the niche auto players like Gabriel as well as something like a Subaru's get that higher P rating, the P re-rating essentially. So it has lacked peers in that aspect, but definitely mandatory ABS as well as a new joint venture could propel a next level of growth for Ask Automotive.
Okay. Thank you so much, Puneet, for giving us all those details on Ask Automotive. Chakri, I was just trying to pull the P that it's currently trading at, and the 12 months trailing P here is showing me around 40 times, and FY27 forward P also at 28 times, which is not looking cheap, as Puneet rightly mentioned. What's your view with regards to where Ask Automotive stands?
These companies are all fast-growing companies, and so if you look forward, and so at 28 times, and if you look 1 year forward, it look even more reasonable. And because there are new joint ventures which are coming on board, and these joint ventures will take time and short amount of time because electronics will translate into revenue soon. So I would not look at the valuation, and valuations are okay in the context of growth.
Okay, Rajesh, on the charts, Ask Automotive, last 1 month, it's seen gains of about 80-odd%. What are the supports and resistance that you're seeing?
So fresh breakout on this stock, and looking at the breakout, I think if it continues to trade above 505, there is a possibility that we may see further higher level towards 535 to 540 in the continuation of this up move. So at this juncture, those who have already bought can trail stop loss towards 500 level, hold the position for upside target of 540.
Okay, so that's the view with regards to where charts are concerned for Ask Automotive. Now, let's shift focus to the IT space. Citi has come out with a report on Tech Mahindra, maintaining a sell call while highlighting macro uncertainties that may impact revenue trajectory. My colleague Puneet is still with us, breaking that down for us. Puneet, what are you picking up?
Well, thank you for that, Mahima. So definitely it's a sell rating on Tech Mahindra, and that's largely penciling in the weaker macro environment going on for the IT sector. Now, they've said that while the management remains very focused on 15% EBIT margins by FY27, it could be something to watch out for, because for FY25, they reported EBIT margins of 9.7%. So it's a steep growth that's anticipated in the 2 years where the macro uncertainty has seemed to be risen. So that will be one of the key things to watch out for. The other key aspect is that the revenue trajectory has seen some impact according to Citi. They've said that it could have more impact on discretionary spends as well going forward, which could put the revenue targets in picture as well. Finally, they've said that valuations at 28 times currently, FY26, as well as 23 times for next year also looks to be largely penciling in a lot of growth that's expected to come. So it seems to be priced in according to Surinder Goyal of Citi, and hence maintaining a sell on Tech Mahindra. Within the IT space, they only have Hexaware as a buy call. So that's another interesting point. But for Tech Mahindra, largely penciling in the growth that's expected to come over the next 8 quarters.
Okay, thank you, Puneet, for breaking that down for us. Chakri, any view on Tech Mahindra and any counters that right now you're liking in the IT space? I'm sure that a lot of analysts have come out and said that they are staying away from this space. But anything in the mid-cap space maybe that you're liking?
Even in the front cap, in the front line, whether it's an HCL Tech, I think we are okay with the stock. We understand that, discretionary spends, IT spends are still weak, will remain weak at least for the next quarter or two. But valuations are kind of corrected. Now, the same story applies to Persistent, mid-cap, but of course, a far more expensive stock, valuation-wise, but also growing much faster. And Tech Mahindra, we'd stay away for the reasons which Puneet just explained. And, this is not going to translate into revenue anytime soon, which is a further drag.
Now, what is also buzzing for the last couple of days is MCX. Now, likely the UBS note, which led to this excitement. They've given a target of 10,000, but more importantly, they are saying that the monthly MOM numbers or QOQ numbers might look very strong as well. Viewers remember the note from yesterday. It was amongst the top brokerage pieces that we highlighted here on the channel. And that stock is doing really well, 8835 now. Rajesh, if you went long on this one earlier, yesterday or last week or etc., would you take money off the table, or are the charts looking strong for more?
Charts are still showing strength, and the way stock has moved up despite of this much of rally in very short span of time, still buying interest is there. Clearly, open interest is intact in this counter. I think maybe stock can extend its gain towards 9,000 plus level in the continuation of this up move. So I think hold the position would be the strategy. Trailing of stop loss towards 8650 would be the right strategy to ride this rally. It's uncharted territory for the stock, and the way the fresh renewed buying interest has been emerged in this counter, especially in last couple of days, that clearly shows that possible target beyond 9,000, 9,200 we may see in the short period of time itself.
Well, Chakri, what do you do with some of these? I mean, exchange names, right? NSE in the unlisted space, but the valuations that MCX is trading at, BSE is trading at, would you invest afresh into them?
Yeah, NSE, I guess the valuation is still at a discount to the BSE. But, coming to MCX, basically, the world has now come to a very volatile situation in terms of commodities. Commodity demand is high, but there is a huge amount of uncertainty given the tariffs. And therefore, that leads to volatility, which is good for an exchange. And so against this backdrop, clearly that I would be a buyer of MCX.
Okay, so that's the view with regards to where these exchanges are concerned. Let's pull up the Nifty Bank because it's trading at its all-time high, and this is after 13 sessions is what I'm understanding. It's up 1% as we speak. So I think now it's echoing the returns of Nifty 50 as well. Can we pull up that and see where Nifty 50 is trading at? And Nifty Bank hits a fresh record high, and it's up third day in a row as well. There you go, almost in line with where the Nifty 50 is. Let's also pull up the constituents, in fact, on the Bank Nifty and see what are the counters that are pulling up the entire counter. There you go. There's HDFC, of course, the heavyweight. There's Axis Bank, there's AU Small Finance Bank and ICICI Bank, all up in green. The only counters that are kind of languishing is SBI, IDFC First and Fed Bank, but good moves in terms of where the Nifty Bank is concerned. Now, other counter which is in focus today is Nykaa. The stock is not doing much though. Let's pull up the counter and see where it is trading at its day's high point, up 1.17%. But this is after its investor presentation came in today, and of course, the investor day meet was also held today. I think the clear standout point for me from the presentation was that they've now come out and said and have given a timeline for the fashion business to see a break even in terms of their EBITDA, and they've said that they will achieve break even EBITDA by FY26. What they've also said is that they're aiming to grow at mid 20% levels every year by FY30. They plan to expand to 500 stores, almost double their stores by FY30. The ambition is to also grow their organic portfolio at 30% CAGR to 6,000 crore in terms of their gross merchandise value. Plus, the ambition is also to grow by 3 to 4 times in terms of their Nykaa fashion business. Women's segment is there to retain its dominance, but men and kids wear will also become prominent going ahead. Plus, marketing efficiencies will improve with scale going forward, which has already happened for beauty, and now the same thing will happen for the fashion business as well. Like I said, they're expecting break even by FY26, and beyond that, by FY28, they're expecting a mid to high single digit EBITDA, and by FY30, the target is to reach 10% of EBITDA margins. Lastly, they've also said that they'll grow 3 times through geographic expansion for Nykaa Superstore as well. So that's with regards to where key takeaways are concerned for Nykaa. Chakri, your view on Nykaa, how are you liking the business? I mean, are you interested in the business at all? And if yes, do you think that the kind of growth that they have kind of laid down for FY30, is that growth achievable for them?
Nykaa is in a space where the growth of, online affordable fashion is seeing a very upswing, across men and women's wear. In India and outside India, and that will continue, and more so in an aspirational class in India is expanding very fast. So against that backdrop, I think some of their near-term targets growth they will hit, but for 2030, whether they can sustain that level of growth is a bit difficult for me to see from here.
Okay, and Rajesh, on the charts, Nykaa, how is it looking?
Looking at the short-term behavior of the stock, stock is in recovery track, and now stock is poised for giving breakout of its previous swing high, which was formed around 208 kind of level. So I think any move about 208 would attract furthermore buying interest in this counter. Strength is clearly visible as stock is trading about to all its near-term, short-term moving averages. So I think a possible target towards 220, 225 we may see for Nykaa in the continuation of this up move. So those who have already bought the stock can hold the position. Near-term breakout is suggesting that we may see 225 target. Keep stop loss towards 202 to hold the position.
Okay, so that's with regards to the charts for Nykaa. Now, fertilizer firms are under pressure as China has halted supplies to India for the past 2 months. With sowing season round the corner, this is turning out to be a big dampener. Varsha has more details with regards to this. Varsha, what are you picking up?
Yeah, absolutely. So you see, all the fertilizers are under pressure. Even the sector is under pressure because, as you rightly said, that China has halted specialty fertilizer shipments to India for 2 months. Now, the consignment of water-soluble, slow-release and micronutrient fertilizers are stuck. Now, why this is important? Because these are vital for India's fruit, vegetable, and horticulture crops. And India imports 80% of the specialty fertilizers from China. Though there is no official ban, but China has used inspection and procedural delays as an excuse. Now, how this is going to impact on India, because the fertilizer disruption could impact crop yields in the June to December planting season, and India typically imports 150,000 to 160,000 of tons during this period. Domestic production of these fertilizers as of now is limited. All top fertilizer companies, you take name of Deepak Fertilizers, Paradeep Phosphates, or Nagarjuna Fertilizer Company, all these companies operate in this segment. How is India's response and what's the outlook ahead? So Indian companies are now considering local manufacturing, but of course it's going to take time because we are heavily import reliant. India is exploring alternative sources like Jordan and Europe. However, logistical delays with new sources remain a concern. And lastly, if you see, Indian government till now has not yet made an official statement on the fertilizer halt, but because of this, the halt in the specialty fertilizers will of course impact the yields, which is a negative for farmers and the overall sector as well.
Okay, Varsha, thank you so much for that. Chakri, quickly, your take on these fertilizer companies?
I would stay away because there's too much uncertainty. There's a political angle, there's a government subsidy angle, the earnings are not good. So I'll stay away from the sector.
Okay, thank you for that answer, Chakri. Rajesh, quickly, your picks for the day. What would you go ahead and buy?
For BTST point of view, I think Titan is looking very promising. Cup and handle formation breakout is there on the daily chart. Looking at the breakout, we believe that Titan may extend its gain. Possible target towards 3750, 3780 we may see for BTST point of view. So Titan is buy with stop loss of 3640.
Okay, Titan it is, and keep an eye out for Titan. I wonder if it's the jewelry angle or it's the retail angle out here, because some of the retail stocks have done very, very well too. Remember, Trent is a case in point. As the last few days has not had too bad. Today may be quiet, but otherwise has been okay. Speaking of what to buy and where to put money in a conversation with Nilesh Shah, founder of Envision Capital, who explained his outlook on both the defense as well as the IT sector. While he sees defense as a long-term bet, he feels IT is poised for some hurdles going ahead. Let's listen to a snippet of that conversation.
Defense rally, one could basically argue that it's done with because there's been a sharp up move. So to that extent, and yet, yes, there's been the start of order inflows, but it's not yet as much to basically warrant the valuations in the very short term. A lot of stocks are already beginning to trade between 50 to 100 times trailing earnings. So to that extent, and then there's been a sharp up move of between 50% to 100% from the lows that we saw in February, March. So probably in the very short term, it seems to be done. But clearly, I would think of defense being more a decadal story. I think the whole need to kind of spend on defense and then to kind of back that up with a huge bout of indigenization, which means to procure locally from domestic firms. I think that's basically a very, very long-term growth driver for our defense and aerospace companies.
Is that a rally you managed to catch, Nilesh? Because, we speak to people and some, managed to get it in time and some didn't.
Honestly, it's always dil mange more. You never have enough when things go well. And like as George Soros says, when you get it right, you better get it right big time. So honestly, yes, not to the extent one would have wanted.
Okay. Nilesh, the other question is, when Nandan Nilekani says that it is amongst the most challenging times for the business, you stand up and take notice, right? What did you make of what Nandan is saying? What did you make of your own conversations with maybe your portfolio companies or global companies and your readings? I mean, how does Indian IT fare over the next 12, 18, 24 months in such a fast changing landscape?
I would tend to agree with Nandan's views in terms of what he thinks about what's really happening in the global business landscape or the global economic landscape. The global economic landscape stands truly challenged, and somebody like Nandan, who's essentially looked at the era from the 1990s onwards, where we basically began that era by saying the world is truly flat. Okay, from that, now getting into that, there is now increasingly deglobalization. Countries are behaving in terms of silos. So I probably think his statement is more in the backdrop of that no longer is it now easy to conduct trade on a global basis. Number one. Number two is, I think, purely from a technology point of view. And I would probably say that most businesses which are more world facing or global facing, I think I have to kind of deal with lower growth, slower growth, especially in a relative context where the domestic economy seems to be doing a lot better than the global GDP. And two is, we have pockets like capex, infra, defense, railways, domestic consumption, premiumization, all of those as businesses are growing in double digits versus global businesses growing in low single digit. And that creates a headwind for the larger Indian IT companies. I think the larger Indian companies have been growing in single digits for maybe the last decade or so, especially when the world was a lot more benign place, versus that the next decade doesn't seem to be as benign as what the last decade has been. So to that extent, I think for the larger IT companies, they truly have a challenge in terms of sustaining growth. And second is essentially the whole wave of AI, which is coming in, which is driving the world towards more automation and all of those kind of things. And that can make it even more challenging for the bigger IT companies. And therefore, within the world of IT, probably the smaller IT companies, which are more focused, more niche, are becoming specialists in AI implementation. They probably will do a lot better versus their peers, versus their larger peers.
Okay, so that was Nilesh talking about how large IT firms could face challenges in the near-term future. Rajesh, some volume buzzers that I'm seeing, right now, and this has been the case throughout the day. Something like a Gabriel India, how is that faring on charts?
So there was some profit taking at a higher level, but still the way stock is now comfortably holding about 20-day moving average. So I think the way stock has shown buying interest since last couple of days, breakout is there on near-term chart. So 650 is the key level to watch for. If it continues to trade above 650, then we may see another round of rally in this counter. Possible up move can be there towards 690, even 700 level.
Power Industries? Apar Industries is the counter, Rajesh. Okay. It's trading 5 times its 30 days average volumes.
Yeah. So there is a breakout of last 5-week consolidation range, and looking at the breakout, the next target for the stock towards 8900 we may see in the short-term perspective. At this juncture, yes, one can initiate buy also, and those who are already holding can hold the position. Stop loss should be placed at around 8500. Possible really 8900 would be there.
Nifty Metal is the clear gainer in terms of sectoral picture. It's up 2.24%. Can we pull up the constituents on the Nifty Metal and see what's buzzing there exactly, and see what counters are kind of leading to that gain? There's only one counter in the red. There's Hindustan Copper doing well, SAIL doing well, Vedanta also doing well in trade today. Chakri, anything in the metal space that you're bullish on?
Hindustan Copper, copper is huge demand worldwide, huge shortage, and the volumes will just continue to go up. So, and other than that, I think Tata Steel, for all its problems, still looks okay.
Okay, and the Nifty Oil and Gas is also up and about in trade today, up 2%. Let's also try to pull constituents on the Nifty Oil and Gas and see what are the kind of moves that we're seeing. It's up almost 2% at its day's high point. Let's try to pull up.
Reliance, right?
Yeah, it has to be Reliance. Let's pull up that. And there you go. A lot of counters buzzing there. All of these counters seeing good gains. Rajesh, anything on the charts that you are seeing, especially for Reliance? What's the kind of support and resistance you're seeing there?
So very strong rally in Reliance, and the way stock is now almost approaching to 1500 level, I think this momentum may extend further. 1540, 1560 would be the next target at this juncture. 1470 should be your stop loss to carry the position for Reliance. And from the same pocket, I think Hind Petro is also giving a breakout. So this stock also can be looked at for near-term trading perspective. 440, 450 would be the next target. Stop loss is placed at around 410.
Actually, pretty interesting that HP, BP, IOC are all doing so well. Chakri, there's a trade happening when people are going into standalone refiners, moving out of OMCs. That's obviously reversed now. But at these valuations, do OMCs make sense fundamentally? And which one out of the three?
I'd rather buy a Reliance Industries for its refining business because of so much uncertainty with the HP, BP sales.
Okay, Chakri and Rajesh, thank you so much for joining us and giving us all those insights on NDTV Profit. With that, let's see as to what levels we are closing the markets at today. Let's pull up the Nifty 50 at its day's high point for sure, closing at 25,543, highest levels of the day, up 1.18%. The Nifty Bank also closing 1% higher at those 57,000 levels. The Sensex also trading 1.2% higher. Let's try to pull up the advanced decline ratio, because that chart will be an interesting one to watch out for. There you go. The chart has been an interesting one today, but the broader end of the spectrum is where the pain is right now. Let's pull up the mid cap 150 and 250 to see that. There you go. The mid cap 150 still, of course, closing at day's high point, up 0.5%. The small cap 250 is also closing around 0.25% higher. So that's with regards to where these benchmarks and broader markets are concerned. But let's also pull up the Nifty 50 heat map and see what counters did well today. Shriram Finance, Jio Finance, Bajaj Finance. All these NBFCs doing well in trade today, closing almost 3% higher for all of these three counters. There's Bharti Airtel, Tata Steel, Eternal closing 2.5% higher. Hindalco also, Bajaj Finserv, NTPC all closing about 2% higher. A lot of these counters seeing gains of about 2%. Something that's not done well, Dr. Reddy is down by about 1.5%, and Tech Mahindra on the back of the City Note down by about 1%, followed by Wipro as well as M&M and Hero Motor Corp. Let's also pull up the sectoral heat map quickly and see what sectors have done. Nifty Metal, the top gainer, up 2%, followed by Nifty Oil and Gas, Nifty Infra, Nifty Finance, and something that's not done well is Nifty Realty. Always the one that's moving against the market moves, down by about 1%, followed by Nifty Media, where profit booking was seen, and Nifty IT slightly lower, down by about 0.2%. Let's also pull up the BSE 500 and quickly take a look at how overall the counters have fared. Infibeam closing 16% lower, Endurance 5% lower, HLE Glasscoat 3% lower, and followed by EID Parry, Coromandel. EID Parry seeing profit bookings today, in fact. Coromandel International Network 18 seeing cuts of about 3%, but counters that have done well and in fact seen well. Apar Industries up 8.5%, Tube Investment up 5%, Hindustan Copper, Abbott India, Dalmia Bharat, Bikaji Foods as well as Godfrey Phillips seeing gains of about 4%. But what has actually aided this kind of market rally? Let's take a look as to what the reasons are. Nifty trades above the 25,500 mark, gaining more than around 1% for the day, gains of around 1.13%. Nifty and Sensex gain for the third consecutive day in a row. Benchmark indices outperformed broader market indices. Overall, Shriram Finance and Jio Financial Services are the top gainers, seeing gains of about 3% each. Nifty Metal becomes the top gaining sector for the day for sure. Hindustan Copper and SAIL are the top gainers on the Nifty Metal today. Nifty companies added around 2.3 lakh crore in the market cap overall in today's gain. Let's also take a look at as to what are the cues to watch out for in trade post market hours. Let's try to pull that up and see as to what are the things that you will most certainly watch out for. There you go. There's US GDP growth rate that will come in, that data will come in, US unemployment claims, Japan unemployment rate, as well as Nifty reject flows. That's something to keep your eye out on the counters that will see these flows. In terms of corporate action, counters that will be trading ex-dividend, there's Allied Blenders, RPG Life, Giant Agro, as well as Bajaj Finserv to keep your eye out on. In terms of some more names in terms of trading ex-dividend. There's Bajaj Holdings, Maha Scooters, Care Rating as well as Cipla. Lastly, in terms of shares that will see exit in terms of lock-in tomorrow, there's Ventive Hospitality, which will see lock-in of about 12% in terms of exit. Dam Capital 38%, that's a significant one, 38% there. And Chancellor Lighting about 58%. This one is most certainly the biggest one to see exit in terms of lock-in. But with that, we're completely out of time on this edition of India Market Close. But do stay tuned to NDTV Profit for more news and updates on the other side.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight to the show, viewers. Bulls roared on Dalal Street with the Nifty topping 25,550 levels and the Sensex adding 1,000 points. Markets managed to scale a 9-month peak in today's session. Nifty up 2.8% in June series. NSE adds 4.2 lakh crore in the market cap today. On the other hand, NSE large caps adds 2.98 lakh crore rupees in the market cap. Now it was a good day for banks. Heavyweight HDFC Bank shares hit a record high of 2008 rupee a piece. HDFC Bank shares have now extended gains for the third straight session. This comes as its subsidiary HDB Financial Services see decent investor interest for its 12,500 IPO. Meanwhile, all sectors barring defense, realty and IT end in the green. Metal, finance and FMCG lead the gains. Autos were also in the fast lane today. The second day of HDB Financial Services, 12,500 crore rupees initial public offering has seen the portion reserved for non-institutional investors being fully subscribed. The overall issue has also been subscribed 75% so far, with the portion earmarked for retail investors seeing a subscription of close to 53%. The portion reserved for existing employees of HDB Financial has received 2.68 times subscription. State Bank of India is set to raise 25,000 crore rupees through QIP, its first equity fundraise in 7 years, to bolster its Tier 1 capital, currently at 12.11%. SBI, with a market cap of 7.14 lakh crore rupees, has appointed Citi, HSBC, ICICI Securities, Kotak Capital, Morgan Stanley and SBI Capital as book runners. Meanwhile, Union Bank of India plans to raise 6,000 crore rupees split equally between equity and bonds, including 2,000 crore rupees in 81 bonds and 1,000 crore rupees in Tier 2 bonds. With a capital to risk assets ratio of 18%, Union Bank actually aims to strengthen its 1.1 lakh crore rupee market cap. Citi maintains a sell rating. They've also cut the target price to 990 rupees from 1,040. Now, the brokerage cites an adequately penetrated Canadian GLP-1 market. Citi also projects $750 to $780 million EBITDA drag from declining GREV limit sales and reduced PLI incentives. Despite challenges, Citi adds Dr. Reddy's to its Pan-Asia focused list, noting its strategic positioning. Citi actually continues to recommend selling Tech Mahindra shares, setting a target price of 1,430 rupees. The company stays focused on reaching a 15% profit margin by FY27. However, revenue growth slows due to global uncertainty and lower extra spending by the clients. Valuation remains high, with future gains already expected in the stock price. Nestle India's board approves its first ever bonus share issue after 1996 in a 1:1 ratio. Shareholders will get one free share for every share they own, with shares credited by or before August 25, 2025. Now, 25th or 2025. Now, the bonus shares will come from the company's retained earnings. Share capital will also double post-issue, and the record date is yet to be announced. The bonus plan needs shareholder approval as well. Nykaa aims for mid-20% revenue growth, targeting 500 stores by FY30. Its organic portfolio is set to grow at a 30% CAGR, reaching 6,000 crore GMV. Nykaa Fashion eyes 3 to 4 times growth in 5 years, with women's segment leading. While men's and kids segments gain traction, marketing efficiencies will improve, mirroring beauty's success. Fashion is expected to break even by FY26, achieve mid to high single-digit EBITDA by FY28, and hit 10% EBITDA margin by FY30. Unilever, through its promoter Hindustan Unilever Limited, is set to sell a 61.9%, that is equal to 62% approximately, stake in the Quality Walls to Magnum Holdco, marking a significant shift in India's ice cream market. Magnum has signed a share purchase agreement with Unilever, with Quality Walls intellectual property set to transfer to the company. Now, this move will allow Quality Walls to leverage Magnum's brand and innovation expertise. Following the acquisition, Magnum Holdco plans to launch an open offer for Quality Walls public shareholders, complying with SEBI regulations. China has paused sending key fertilizers to India for 2 months. Now, these fertilizers help grow fruits, vegetables and other crops. With sowing season starting soon, Indian farmers may face problems. India depends on China for 80% of these special fertilizers. Local production is low, and finding new suppliers like Jordan and Europe takes time. The Indian government has not made an official comment yet. India's railway sector expects a strong FY26 after slow orders in FY24 to 25. The Mumbai Urban Transport Project Phase 3 brings a 30,000 crore order opportunity. It actually includes new train lines and over 200 Vande Metro train sets. The tender process, to begin by August 2025 with final orders by September 2026. Coach deliveries will start in the second half of FY28. Key bidders include BEML, Titagarh, CAF and Stodler. Texmaco Rail and Engineering has secured a major international order worth 535 crore rupees from Cameroon-based Camelco SA. Now, the contract includes manufacture and supply of 560 open top wagons valued at 282 crore rupees along with a 20-year long-term maintenance agreement worth 253 crore rupees. The wagon supply will be executed in 2 phases over the next 24 months. Also, the deal includes a provision for an extra 1,040 wagons and their maintenance over the next 5 years, potentially expanding the contract scope and value. Lloyds Metals gets environmental clearance to raise its iron ore mining capacity to 55 million tons per year. This makes it the biggest iron ore mine in India. The move will boost raw material supply for steel makers and help reduce costs. The company will start with 26 MTPA of hematite ore and later include 45 metric tons of banded hematite quartzite. Now, a beneficiation plant is also being planned to improve ore quality. Dilip Bilkon announces the completion of the 4-lane Bangalore-Chennai Expressway sector in Andhra Pradesh. The project is now fit for commercial operation as of May 9. This major infrastructure development was executed at a bid cost of 1,060 crore rupees. The new expressway is actually expected to significantly improve connectivity and reduce travel time between Bengaluru and Chennai, boosting trade and commerce in the region. Tire maker CEAT announces plans to raise up to 500 crore rupees through unsecured non-convertible debentures with a tenure not exceeding 5 years. These funds will be used for capital expenditure, refinancing high-cost debt and working capital needs. This issuance adds to the existing 250 crore rupees in the NCDs already raised. Additionally, CEAT will also infuse 400 crore rupees into its wholly owned subsidiary Sri Lankan CEAT OHT Lanka to support its acquisition of the Camso brands of highway tire business. Now, the company's board also approves a credit facility of up to 1,000 crore rupees for business purposes. Ask Automotive joins hands with Germany's TD Holding GmbH, entering into a joint venture to manufacture, market and sell sunroof control cables and helix cables for passenger vehicles. The Indian auto components maker will hold a 49% stake in the JV, committing an investment of 2.45 crore rupees with an initial infusion of 49 lakhs at incorporation. TD Holding GmbH will hold the remaining 51% stake. Canfin Homes has received board approval to raise 10,000 crore rupees through debt instruments, including bonds and non-convertible debentures, both onshore and offshore. Also, the company plans to raise 1,000 crore rupees via qualified institutional placement or rights issue, subject to shareholder approval at the upcoming AGM. For the financial year 2025, Canfin Homes reported revenues of 3,878 crore rupees with healthy margins of 28%. Western Carriers India has secured a significant 558 crore rupees logistics contract from Jindal Stainless Limited. The 3-year agreement covers the dispatch of slabs, coils and sheet plates in DSO containers to multiple destinations across India. This prestigious mandate reinforces Western Carriers' expertise in managing large-scale mission-critical logistics operations for the manufacturing and metal sector. JSW Steel has filed a review petition in the Supreme Court challenging the May 2nd, 2025 order that rejected its resolution plan for Bhushan Power and Steel Limited and directed the company's liquidation. The Supreme Court had ruled that JSW Steel's acquisition violated key provisions of the Insolvency and Bankruptcy Code, now citing procedural lapses and delays. Following the judgment, the court stayed liquidation proceedings on May 26, pending the review petitions filed by JSW Steel and several lenders. The Supreme Court is set to reconsider the case after its summer recess, reopening on July 14th. Co-founders of PB Fintech, Yashish Daya and Aloc Bansal, have announced plans to sell a combined 1.1% stake in the company. The shares will be sold at 1,800 rupees per share, representing a 2.2% discount to the current market price, valuing the transactions at approximately 912 crore rupees. As of March 31st, the co-founders together held a 5.7% stake in PB Fintech. This partial stake sale is seen as a strategic move by the founders and is likely to provide liquidity while maintaining a significant holding in the company. MobiKwik shares jump after a major investor sells off their 8% stake in a block deal, sparking strong market interest. The discounted sale pushes the stock to a 2-week high, with volume soaring. Despite the buzz, the stock continues to trade well below its past highs, and it also becomes the stock of the day. Before we get you a snapshot of some key NDTV Profit exclusive, let's revisit some important commentary from earlier today. Mark Mobius, co-founder of Mobius Capital Partners, offers a fresh take on portfolio allocation. He advises investing 50% in equities to tap into long-term growth, while suggesting 10% exposure to gold as a hedge against market volatility. He also recommends 20% in property, reflecting confidence in real estate's steady value. Defense is the sector to watch, says Nilesh Shah of Envision Capital, calling it a decadal story. He remains bullish on both defense and railways for the long haul, even if near-term rallies may falter. Shah suggests buying defense on dips, while cautioning that large IT firms could also struggle to maintain growth going forward. SEBI fines BSE 25 lakh rupees for sharing key market data early with its own team and some paid clients. This happened in 98 out of 100 cases studied. SEBI also finds BSE failed to properly monitor client code changes and broker error accounts. These gaps could let brokers misuse the system to favor certain clients. BSE claims it made no profit and has fixed the issues, but SEBI disagrees and calls the lapses serious. The NSE is nearing its long-awaited IPO, with SEBI no objection certificate expected within 2 months. Following NSE's 1,400 crore rupees settlement offer to resolve pending cases, sources tell NDTV Profit that NSE aims to file its draft red herring prospectus by December, targeting a potential listing in FY27. Now, the settlement, one of India's largest, addresses allegations of unfair trading advantages. With legal hurdles clearing, investor excitement is growing. SEBI's approval hinges on final reviews, paving the way for what could be India's biggest public issue, with NSE's market cap nearing 5.7 lakh crore rupees. Aditya Birla Capital's money management arm was hit by a cyber attack, leading to the unauthorized sale of digital gold worth nearly 2 crore rupees from over 400 customer accounts. The company says all affected holdings were quickly restored and fund transfers were frozen to prevent further damage. An investigation is underway, and the firm is working with cyber insurance partners, law enforcement to trace those behind the attack and strengthen security. Jaiprakash Associates, the flagship of the Jaypee Group, has received financial bids from 6 potential buyers, including the Adani Group, Vedanta, Dalmia Group, Jindal Steel and Power, PNC Intratech, and Suraksha Asset Reconstruction. The company owes over 57,000 crore rupees to lenders like the SBI, PNB, ICICI Bank, IDBI Bank, and the National Asset Reconstruction Company. Sources to NDTV Profit say that if the offers aren't strong enough, creditors may sell the assets separately to recover dues. SMS Pharmaceuticals Telangana facility clears its 7th SFDA inspection. The plant, with a 120 kiloliter capacity for niche small volume molecules, strengthens its compliance track record. The company is targeting 20% revenue and EBITDA growth by FY26, backed by backward integration and 250 crore capex plan over 18 months. Now, part of the expansion will also support contract manufacturing operations. Infosys co-founder and chairman Nandan M. Nilekani described the current global climate as a time of uncertainty, unlike any witnessed in the recent times. The remarks reflect turbulent mix of geopolitical tensions, economic volatility, rapid AI disruption, and shifting trade dynamics that are challenging industries across the board. The Indian cement sector is setting up for a strong rebound. Prices stayed stable across regions in June, a positive signal, says Nuvama, which expects demand to pick up in FY26 on the back of rising capex. Nomura stays bullish too, and pointing to long-term volume growth and cost efficiencies. Large-cap names like Ultratech, Ambuja, and ACC remain the top brokerage picks. India's UPI digital payment system is gaining global recognition, with the International Monetary Fund, or the IMF, strongly praising its success. A new paper from the IMF says that UPI has completely changed how people pay digitally in India. It points out that UPI's ability to work across different apps makes it easier for users and helps more people adopt digital payments. The IMF also suggests that other countries wanting to move away from cash should follow India's full approach. Defense Minister Rajnath Singh refused to sign the Shanghai Cooperation Organization joint statement after attempts to remove references to the Pahalgam terror attack while including Balochistan incidents. Addressing the summit, the defense minister strongly condemned cross-border terrorism, criticizing nations using it as state policy and providing safe havens. He urged SCO to address these double standards and has reaffirmed India's zero tolerance for terrorism. In a significant development regarding the Air India flight AI-171 crash, investigators have successfully downloaded data from the aircraft's black boxes. The government confirmed that data from both the cockpit voice recorder and flight data recorder has been retrieved. A multidisciplinary team from the Aircraft Accident Investigation Bureau is now analyzing this data. This marks a major step in understanding the final moments of the flight and determining the cause of the tragic incident. For the first time ever, Maharashtra's state electricity tariffs are set to be reduced. The Maharashtra Electricity Regulatory Commission has approved the state power company's MSEDCL's proposal to cut rates. Chief Minister Devendra Fadnavis announced on X that tariffs will drop by 10% in the first year, with total 26% reduction planned over 5 years. However, these cuts will not apply to tariffs charged by private power providers. 2 people have been killed and 11 are missing after an 18-seater bus plunged into the Alaknanda River in Rudraprayag district. The accident occurred in the Goldir area, where the bus reportedly lost control. 7 people have been injured. Rescue teams, including the SDRF police and the local authorities, are currently on site conducting search and rescue operations. The Dragon spacecraft, carrying Group Captain Shubhanshu Shukla and 3 others, is set to dock with the International Space Station around 4:30 p.m. IST after a 28-hour journey. Shukla has now become only the 2nd Indian to travel to space. He lifted off on Wednesday as part of Axiom 4 mission. The crew will spend the next 2 weeks on the ISS conducting scientific research and participating in the outreach activities. Former US President US President Trump has taken aim at New York mayoral candidate Zoran Mamdani, calling him a 100% communist lunatic after his win in the Democratic primary. In a post on Truth Social, Trump claimed that Democrats have crossed the line by supporting Mamdani. He also mocked the candidate's appearance and voice. Mamdani is now set to contest the mayoral race in November. If elected, he would become New York's first Indian American Muslim mayor. 12 people were killed and around 20 others injured after gunmen opened fire at the street celebration in Mexico's Guanajuato state. The attack happened during a St. John the Baptist festival where people were dancing and drinking in the street. President called the attack tragic and said that an investigation is also underway. US President Donald Trump has said that US and Iran might sign an agreement on Tehran's nuclear program when both sides meet for talks next week. However, he added that such a deal may not be necessary. This comes after Trump announced a ceasefire between Israel and Iran, saying that the conflict was effectively over. He also claimed Iran is unlikely to pursue nuclear weapons, but the US would still seek assurances during the upcoming talks. And in some other news, it's Prada that is being called a chappal chor. Yes, you heard that right. They are being accused of cultural theft after selling Kolhapuri chappals for over 1 lakh rupees, causing outrage over cultural appropriation. Well, with that, viewers, it's a wrap on Market Express. But please stay tuned to NDTV Profit as Sanjana Chauhan will be bringing you Profit 360 just after this short break.
Sambhav Steel Tubes Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of ₹77 to ₹82 per equity share of face value of ₹10 each. Offer opens on Wednesday, June 25th, 2025. Offer closes on Friday, June 27th, 2025. For risk involved and other details, please refer to the red herring prospectus dated June 19th, 2025, which is available on the website of the company, the SEBI, the BRLMs and the stock exchanges.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio.
Nifty trades above the 25,500 mark, gaining more than 1% of the day. Benchmark indices outperform broader market indices. Nifty Metal becomes the top gaining sector, gaining more than 2% for the day. In a significant breakthrough, the Aircraft Accident Investigation Bureau successfully recovers the crash protection module and the memory module from the Air India wreckage. Investigators have now downloaded all critical data, bringing the probe into the tragic air crash one step closer to conclusion. The SpaceX spacecraft carrying Shukla and 3 crewmates continues its journey towards the International Space Station. Reflecting on the liftoff, Shukla said, "What a ride it was." Sending a stern message to India's neighbors, Defence Minister Rajnath Singh refuses to sign a joint statement at the Shanghai Cooperation Organization meet because it did not mention the Pahalgam terror attack and did not reflect India's strong position on terror. India's largest lender, SBI, is set to raise up to 25,000 crore through a qualified institutional placement, marking its first equity sale since 2017. An NDTV Profit exclusive, Jayprakash Associates draws significant interest as 6 major players, including Adani and Vedanta, submit bids in the insolvency process. Aditya Birla Capital's digital arm suffers a major cyber attack on June 9th when a hacker breached its ABCD app and illegally sold digital gold worth approximately 1.95 crore from 435 customer accounts. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. Along the next half an hour, we're going to bring you the latest on markets as well as national and international news. So let's dive right into it and have a look at how the markets have fared today. The market continued its upward momentum with the Nifty crossing the 25,500 mark and gaining over 1% in a strong display of investor confidence. Now, this marks the third consecutive day of gains for both the Nifty and Sensex, underscoring a sustained bullish trend. Let's go over to Puneet for more.
Well, it was a stellar session for trading today with the Nifty 50 ending more than 25,500, and it's been a level that's evaded us for a long time, but we've finally broken through very meaningfully above the 25,200 level, ending at 25,529. It's up 1.13% today. Now, the Nifty and the Sensex has gained for the third consecutive day, and the bullish momentum has followed through as well. While the broader market indices have also been outperformed today by the benchmarks, we've seen stocks like Shriram Finance and Jio Financial being the top Nifty gainers today. We've also seen the Nifty Metal being the leading sector in terms of gains today, and that's happening more than 2% of gains seen on the Nifty Metal. Within the Nifty Metal though, we've seen stocks such as Hindustan Copper as well as SAIL being one of the biggest gainers there as well. When you look at some of the other sectors, the Nifty Bank as well as Nifty Financial and the Nifty Oil and Gas, these three sectoral indices were gaining the highest after Nifty Metal as well. We've also seen roughly about 2.3 lakh crore in terms of market cap being added by the Nifty companies itself. So the benchmarks definitely leading the way today. 39 out of the 50 Nifty stocks ended in the green, resultant of the strong outperformance of the benchmark indices. When you look at the other broader spectrum of the market as well, roughly 68 stocks have hit a 52-week high on the NSE today. We've also seen 76 stocks hit an upper circuit on the National Stock Exchange. Finally, we've seen, in terms of Nifty Bank, that is another one that's hit a record high, and we also spoke to, brokerages like HDFC who are bullish on PSU banks, and that momentum seems to have finally come in the banking stocks as well. We've seen NBFCs as well as gold finance stocks outperform, but finally some positive momentum on the banks as well. So overall, a really strong session for the market. It'll be important that the July series gets started in a very positive way with the expiry ending for June today.
Meanwhile, Nilesh Shah, founder of Envision Capital, remains optimistic about the long-term prospects of the defence and railway sectors, highlighting their potential for sustained growth over the next decade. However, he cautions that the recent surge in defence stocks may take a breather in the near term. Shah believes that the sector's fundamentals support a multi-year growth story, making it attractive for patient investors. Let's listen in for his detailed perspective.
Well, for the very short term, the defense rally, one could basically argue that it's done with because there's been a sharp up move. So to that extent, and yet, yes, there's been the start of order inflows, but it's not yet as much to basically warrant the valuations in the very short term. A lot of stocks are already beginning to trade between 50 to 100 times trailing earnings. So to that extent, and then there's been a sharp up move of between whatever 50% to 100% from the lows that we saw in February, March. So probably in the very short term, it seems to be done. But clearly, I would think of defense being more a decadal story. I think the whole need to kind of spend on defense and then to kind of back that up with a huge bout of indigenization, which means to procure locally from domestic firms. I think that's basically a very, very long-term growth driver for our defense and aerospace companies. So I would probably think that it's become now, yes, for the very short term, you could say it's done. But I believe defense is now becoming more a buy on dips kind of a sector.
A major breakthrough in the Air India Ahmedabad crash investigation. The government has announced that data from both black boxes of AI-171, the cockpit voice recorder and the flight data recorder have been successfully recovered and downloaded. The black boxes, which were retrieved from the crash site under tight security and transported to the AAIB lab in Delhi, contain the crucial crash protection module and memory modules. Data extraction was completed by June 25th and analysis is now underway to reconstruct the sequence of events and identify contributing factors behind the tragedy. Now, this marks a significant step forward in the probe with experts from the Aircraft Accident Investigation Bureau and the US National Transportation Safety Board leading the efforts. Joining us now with more details is my colleague and NDTV's executive editor Vishnu Som, who closely tracks the aviation sector. Vishnu, over to you.
There are two black boxes in this aircraft. Each black box has two components, the cockpit voice recorder and the flight data recorder. Data from the cockpit voice recorders, both of them, and the flight data recorders, both of them, were recovered from the crash site. The black boxes were brought from Ahmedabad to Delhi by an Indian Air Force aircraft with full security on the 24th of June, 2025. The front black box arrived at the Accident Investigation Board's laboratory, Delhi, at 2 p.m. on the 24th of June, so a couple of days back. The rear black box, one was positioned, remember, the black box in the front of the aircraft, one at the rear section of the tail section of the aircraft, that was brought also on the 24th of June. The current status and data extraction status is that on the evening of the 24th of June, the team led by the Director General Accident Investigation Board, along with technical members of the National Transport Safety Board, which is the American investigator, the American regulator, they began the data extraction process. The crash protection module from the front black box was safely retrieved. Like, that is the crucial part of the black box. It is inside that data actually exists. The memory module was successfully accessed. Data has been downloaded, and this is the big breaking news. Data has been downloaded of the black boxes in this crash. The analysis of the cockpit voice recorder and the flight data recorder is underway. These efforts aim to reconstruct the sequence of events leading to the accident and identify contributing factors to enhance aviation safety and prevent future occurrence. All actions have been taken in full compliance with domestic laws and international obligations in a time-bound manner. Now, I was inquiring through my sources on when a preliminary report would be out. As I understand it, a preliminary report into this crash needs to take place within a period of 1 month. That time period hasn't happened, but with the recovery of this data successfully, and given the fact that at least one of the black boxes was very badly damaged, given the fact that we have recovered the data, the process of reconstruction can start. And I think in a finite period of time, there would be a report, a preliminary one, which can actually give people around the world, not just in India, that basic explanation, what went wrong.
Thanks so much for that, Vishnu, and we'll continue to track this story as we wait for that data to actually be retrieved and take us one step closer to the conclusion. Moving on to what's happening in space, Indian astronaut Shubhanshu Shukla is on the verge of making history as he prepares to become the first Indian to step aboard the International Space Station. The SpaceX Dragon spacecraft, launched by the Falcon 9 rocket, is currently en route to dock with the ISS's Harmony module. All systems are functioning flawlessly, with docking expected in approximately 20 minutes. Serving as the pilot for the Axiom 4 mission, Shukla sent a heartfelt message back home. Namaskar from space, and he expressed deep gratitude to everyone who supported him, especially his family, describing this achievement as a shared milestone in India's remarkable space journey. Let's listen in for all of the updates.
Namaskar from space. I'm thrilled to be here with my fellow astronauts, as Peggy said, 1 veteran and 3 rookies, and wow, what a ride it was. Frankly, when I was sitting in the capsule in Grace yesterday on the launch pad, my only thought in my mind was that let's just go. After 30 days of quarantine, it was a feeling that I just wanted to go. Excitement and all was, probably far away. It was just the feeling that let's just leave here. But when the ride started, it was something like you getting pushed back into the seat. It was an amazing ride. And then suddenly, nothing. Everything silenced, and you were just floating. You unbuckle, and you were just floating in the silence of vacuum. It was an amazing feeling. I wanted to take this opportunity to thank everyone who has been a part of this. I understand that this is not a personal accomplishment. It is a collective achievement of each and every one of you who has been a part of this journey.
That's right, 20 minutes more, and we hope to see this historic landing. Moving on to what's happening in China. In a very decisive move at the Shanghai Cooperation Organization Summit, Defense Minister Rajnath Singh refused to endorse the joint statement, citing its failure to mention the recent Pahalgam terror attack that claimed 26 innocent lives. The draft statement also included references to Balochistan, indirectly accusing India of fomenting unrest, an allegation New Delhi strongly rejects. Let's go now across to Shiv Aroor, Senior Managing Editor of NDTV, for more insights on this developing story.
This is the strongest possible message that the defense minister has sent out in the presence of the other defense ministers of the Shanghai Cooperation Organization, which includes the Chinese, the Russian, and especially the Pakistani defense minister there, by refusing to sign a document where an attempt was made by the SCO to remove any mention of Pahalgam and to add Balochistan is a huge move by India. Remember, as a member of the Shanghai Cooperation Organization, anti-terror, counter-terror, condemnation of terrorist acts is one of the principal resolutions and motivations of this entire setup. And for them to try and remove Pahalgam and add Balochistan is a very big slight. So Rajnath Singh refusing to sign that document is a huge deal. But in the presence of the Chinese and Pakistani defense ministers, to propound the theory that has been set in stone after Operation Sindoor, that acts of terror are seen as acts of war, is a huge message that India has sent out. Remember, India has just completed a large diplomatic outreach to the rest of the world regarding Operation Sindoor, trying to convince the world in many ways that Pakistan-sponsored terror continues to be the biggest global national security threat. And therefore, what Rajnath Singh has basically done at the SCO is action that can be considered extreme. There is a huge call about why India is even part of the Shanghai Cooperation Organization if the organization itself, which is headed by China, is looking to actually remove any mention of Pahalgam. The relationship and the nexus between China and Pakistan is a very well-known one, but this kind of brazen attempt to dilute terror against India is being seen very seriously.
Moving on to an NDTV Profit exclusive, Jaiprakash Associates has drawn significant interest as 6 major players, including Adani and Vedanta, have submitted bids in the ongoing insolvency process. My colleague Vishwanath, who broke the story, joining us now with more details.
So Jaiprakash Associates has found 6 financial bidders who are interested in buying the company. These include Adani Group, Dalmia Bharat, Vedanta, Jindal Steel and Power, PNC Infratech, as well as Suraksha Asset Reconstruction Company. Going ahead, of course, this is going to be an interesting case considering that these bidders are showing this much interest, but going ahead, the lenders are going to review these bids in the next couple of days. They will then decide whether to go ahead with this entire process or not. Remember that for Jayprakash Associates, there is an entire ruling that has come in which allows the lenders to split the separate assets of this company and sell it to individual bidders if they intend to do so. The assets within Jayprakash Associates includes cement assets, power, real estate, hospitality. So all of these different segments could be broken up and then sold to potential bidders if lenders need it. So if they find that the current bids are too low, they're prepared to do this. That is what sources are telling NDTV Profit.
Vishwanath, also tell us the background. How did Jayprakash Associates land in this situation in the first place?
Yeah, as far as Jayprakash Associates is concerned, it's been a long pending case. If you know that back in 2017, actually August of 2017, the RBI had come at that point in time with 2 lists of companies which are deeply distressed, and lenders had to initiate insolvency proceedings against them. Jayprakash Associates was part of that second list of accounts which the RBI had shortlisted. Since then, it's been nearly 8 years. Since then, lenders have been trying to initiate insolvency proceedings, but there have been multiple judicial delays that have taken place in this case. Finally, last year, the insolvency proceedings did start in Jayprakash Associates. The creditors committee is going to review these bids that have come in. And of course, we need to see how exactly the resolution of one of the longest lasting insolvency proceedings goes on. Remember, 57,000 crore worth of dues are owed to lenders.
Thanks so much for that, Vishwanath. We'll continue tracking that story and bring you all of the developments. Moving on, India's largest lender, SBI, is set to raise 25,000 crore through a qualified institutional placement. That's its first equity fundraising in 8 years and the largest QIP share sale ever in India. SBI has appointed 6 leading investment banks, including HSBC, Citi, Kotak, Morgan Stanley, ICICI Securities, and SBI Capital Markets to manage the issue. Meanwhile, the Union Bank of India is also gearing up to raise 6,000 crore through a mix of equity and bonds to support its capital requirements. For more on both these major fundraisers, let's go over to Harsh Saita.
Well, yes. The big one is obviously SBI. It's the first equity raise they're doing in 7 years, and that's why. And it's a large raise as well. 25,000 crore, no means small. But of course, in relative terms, when you're looking at SBI's book size of 50 lakh crore nearly, it's obviously small in relative terms. But nonetheless, it's a large raise. When you're looking at the tier 1 capital of SBI at the end of Q4 FY25, it stands at around 12.11%, which is largely in line with the threshold. So this is a little bit to do with shoring up of tier 1. But when we had received commentary at the end of Q4, the management had suggested that they would do a raise as and when they see growth kicking in. And
right, Harsh, sorry to cut you off, but we quickly need to cut over to these live visuals coming in on the Axiom 4 mission that has in fact docked at the International Space Station. These are the live visuals coming in as we speak. Remember, SpaceX's Axiom mission carrying ISRO astronaut Shubhanshu Shukla has docked at the International Space Station this evening. The AX-4 crew has successfully lifted off on June 25th, space on board SpaceX's Dragon aircraft after nearly a month of delays and postponements. And aboard the spacecraft, along with Shukla, our mission specialists from Hungary, from United States, and Peggy Whitson of the United States, who is a former NASA astronaut who now works for Axiom Space. Let's remember, Shubhanshu Shukla, who is the mission pilot, is India's second astronaut going into space. Big moment for India. 4 decades after Wing Commander Rakesh Sharma made history in 1984, the 39-year-old fighter pilot was chosen by ISRO as the prime astronaut for this historic flight.
Fill that space with air to make sure that pressure is equal with the atmospheric pressures on Dragon and the International Space Station, also putting away some hardware in the process, including the docking across. And Airs will use a small valve on the station's hatch to slowly introduce that air into the vestibule. And flight controllers here in Houston will continue to monitor the pressure and temperature readings inside and verify that everything is A-OK and leak-free before we get ready to open up the hatches. From that capture moment, which again was 5:31 a.m. Central, 6:31 a.m. Eastern over the North Atlantic. It takes roughly about 2 hours to get everything pressurized and checked out before we open up the hatches and welcome in Axiom Mission 4 to the International Space Station.
Also, visuals that we see that are coming in of Shubhanshu Shukla's family, that is Asha Shukla, his mother. Let's remember, we had in fact seen these very heartening shots of her before the Axiom 4 spacecraft headed to the International Space Station with her son, Group Captain Shubhanshu Shukla. But now his parents, his loved ones, and all of India really awaiting the docking at the International Space Station. This is the SpaceX's Axiom 4 mission carrying ISRO astronaut Shubhanshu Shukla that has docked at the International Space Station. This is the SpaceX Crew Dragon capsule that rode atop Falcon 9 rocket, docked autonomously to the space-facing port of the ISS's Harmony module this evening. And it is carrying India's Shubhanshu Shukla along with 3 other private astronauts from Poland, the United States and Hungary, and has in fact docked at the International Space Station.
Ladies and gentlemen, it's time to keep your mobile phones ready with the flashlight.
Right, any moment now, as you heard from the announcer there, along with Shubhanshu Shukla's family and loved ones, to keep your mobile phones ready as SpaceX's Axiom 4 mission carrying ISRO astronaut Shubhanshu Shukla has docked at the International Space Station this evening. The AX-4 crew successfully lifted off on June 25th, if you remember, into space on board SpaceX's Dragon aircraft after nearly a month of delays and postponements. Now, aboard the spacecraft, along with Shukla, are mission specialists from Hungary, from United States, and from Poland, including Peggy Whitson, a former NASA astronaut who now works for the company Axiom Space, which organizes these private space flights along with other things. Now, Shukla, who is the mission pilot, is India's second astronaut going into space, 4 decades, if you remember, after Wing Commander Rakesh Sharma made history back in 1984. Shubhanshu Shukla is a 39-year-old fighter pilot and was chosen by ISRO as the prime astronaut for this historic flight. Okay, and as we all wait with bated breath for this moment, let's quickly also play out for you the message that Shubhanshu Shukla sent India and really the world just moments ago.
Namaskar from space. I'm thrilled to be here with my fellow astronauts, as Peggy said, 1 veteran and 3 rookies, and wow, what a ride it was. Frankly, when I was sitting in the capsule in Grace yesterday on the launch pad, my only thought in my mind was that let's just go. After 30 days of quarantine, it was a feeling that I just wanted to go. You know, excitement and all was, probably far away. It was just the feeling that let's just leave here. But when the ride started, it was something like you getting pushed back into the seat. It was an amazing ride. And then suddenly, nothing. Everything silenced, and you were just floating. You unbuckle, and you were just floating in the silence of vacuum. It was an amazing feeling. I wanted to take this opportunity to thank everyone who has been a part of this. I understand that this is not a personal accomplishment. It is a collective achievement of each and every one of you who has been a part of this journey.
That's right, you heard from Shubhanshu Shukla, accompanied with the other astronauts from United States, from Hungary and Poland, just a few hours ago aboard the Axiom Mission 4 that was carrying all of these astronauts and is now docking at the International Space Station. What you're also seeing on screen are his family that have been waiting with bated breath for Shubhanshu Shukla to return as the Falcon 9 with Axiom 4 crew lifted off earlier.
Station copies.
Dragon copy.
Communications there on the big loop between the teams here in Houston and up to the International Space Station as they troubleshoot some communications, and the big loop that you have been hearing that have connected everyone here inside of Mission Control Houston and the International Space Station Flight Control Room, those aboard the space station and inside the SpaceX Dragon Grace spacecraft, and the teams in Hawthorne, California, those 4 parties, that's the big loop. They will troubleshoot those communications for about 5 minutes and then recheck. But you heard just prior to that NASA astronauts Anne McClain and Nicole Ayers have begun the hatch opening procedures, in which the large hatch at the Node 2 Zenith, that's the space-facing side of the Harmony module, has been opened, and that will allow for them to begin the hatch opening procedures and pressurize the vestibule, which is what, in addition to the comms checks, we will monitor as Ayers will use these.
That's right. This is as Axiom 4 has in fact docked at the International Space Station. We need to slip into a short break right now, but we'll keep you posted on this and lots of other news on the other side of this very short break.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outcome
...2014 में 26 मई
मुझे पहली बार देश के प्रधानमंत्री के रूप में शपथ लेने का अवसर मिला और तब भारत की इकोनॉमी दुनिया में 11 नंबर पर थे। हमने कोरोना से लड़ाई लड़ी, हमने पड़ोसियों से भी मुसीबतें झेली, हमने प्राकृतिक आपदा भी झेली। इन सब के बावजूद भी इतने कम समय में हम 11 नंबर की इकोनॉमी से 4 नंबर की इकोनॉमी पहुंच गए, क्योंकि हमारा एक लक्ष्य है। हम विकास चाहते हैं, हम प्रगति चाहते हैं। भारत माता की, भारत माता की।
Prime Minister Narendra Modi outlining India's incredible journey towards becoming a global economic powerhouse at the event to celebrate 20 years of Gujarat urban growth story in Gandhinagar recently.
3 नंबर पर ले जाने के लिए।
And what a remarkable story of sustained economic development and growing it has been amidst all odds. It's brought the Indian economy to the global center stage. Under PM Modi's leadership, the Indian economy has taken giant strides in the global economic landscape since 2014. Driven by a series of bold and visionary reforms and ambitious policies to make India Atmanirbhar across different sectors, from manufacturing to defense, India has emerged as the fastest growing economy among major economies in the post-COVID world, especially at a time when the global economic order has been reset with geopolitical uncertainties following the Russia-Ukraine war and now the conflict in the Middle East.
The Indian economy presents a picture of strength, stability and opportunity. First, strength comes from the strong balance sheets of the 5 major sectors: corporates, banks, households, government and the external sector. Second, there is stability on all 3 fronts: price, financial and political, providing policy and economic certainty in this dynamically evolving global economic order. Third, the Indian economy offers immense opportunities to investors, both domestic and foreign, through 3 Ds. Demography. We have a high proportion of the working age population which is growing. It is becoming more literate, it's becoming more educated, more skilled, urbanized. Then there is the third D, the second D, the digitalization. We have very advanced and sophisticated public digital infrastructure. And domestic demand is the third D, which we are talking about over here, which is very important given the trends of deglobalization. This 5x3x3 matrix of fundamentals provides the necessary core strength to cushion the Indian economy against global spillovers and propel it to grow at a faster pace.
The matrix of fundamentals as outlined by the RBI governor is all set to push the Indian economy further up in the global economic order. The RBI has projected that despite the risks of protracted geopolitical tensions and global trade-related uncertainties, India's real GDP growth for 2025 to 2026 is projected at 6.5%. The highest expected growth rate among all the major economies of the world. The government's think tank, Niti Aayog, has assessed that this period of high economic growth will continue over the next 2 to 3 years. Leading economist and a member of the Niti Aayog, Dr. Arvind Virmani says, this sustained high economic growth will make India the 3rd largest economy in the world by 2028.
By when do you think India can become the 3rd largest economy in the world?
So, 3rd largest economy, my projection suggests that either in 27 or 28, 2027, 28. So, overtaking Japan during 2025 and overtaking Germany, which is now the third largest, by 27 or 28, definitely by 2028.
Arvind Virwani is confident that India has the potential to catch up even with China, currently the second largest global economy after the United States, if India can sustain a high GDP growth rate in the next 2.5 decades.
If we grow by in a sustained manner at around 6.3% for the next 22-25 years, we will have virtually closed the gap with China by the turn of the century, which is 2050.
In a world struggling with the slowdown and shocks following tariff-related uncertainties caused by US President Donald Trump, India's economic policies have kept the country insulated. And foremost among these policy initiatives of the Modi government has been the Atmanirbhar Bharat Abhiyan.
भारत जब समृद्ध था, सोने की चिड़िया कहा जाता था, संपन्न था, तब सदा विश्व के कल्याण की राह पर ही चला। वक्त बदल गया, देश गुलामी की जंजीरों में जकड़ गया। हम विकास के लिए तरसते रहे। आज फिर भारत विकास की ओर सफलतापूर्वक कदम बढ़ा रहा है, तब भी विश्व कल्याण की राह पर अटल है। याद करिए, इस शताब्दी की शुरुआत के समय Y2K संकट आया था। भारत के टेक्नोलॉजी एक्सपर्ट्स ने दुनिया को उस संकट से निकाला था। आज हमारे पास साधन है, हमारे पास सामर्थ्य है, हमारे पास दुनिया की सबसे बेहतरीन टैलेंट है। हम बेस्ट प्रोडक्ट्स बनाएंगे, अपनी क्वालिटी और बेहतर करेंगे, सप्लाई चेन को और आधुनिक बनाएंगे। ये हम कर सकते हैं और हम जरूर करेंगे।
It was during the COVID-19 pandemic that PM Modi had given the clarion call for launching the Atmanirbhar Bharat Abhiyan. Addressing the nation on May 12, 2020, PM Modi outlined the 5 pillars of his vision for an Atmanirbhar Bharat. Prime Minister went on to lay out a 20 lakh crore economic package to kickstart the Atmanirbhar Bharat Abhiyan.
कोरोना संकट का सामना करते हुए नए संकल्प के साथ मैं आज एक विशेष आर्थिक पैकेज की घोषणा कर रहा हूं। यह आर्थिक पैकेज आत्मनिर्भर भारत अभियान, आत्मनिर्भर भारत अभियान की अहम कड़ी के तौर पर काम करेगा। साथियों, हाल में सरकार ने कोरोना संकट से जुड़ी जो आर्थिक घोषणाएं की थी, जो रिजर्व बैंक के फैसले थे और आज जिस आर्थिक पैकेज का ऐलान हो रहा है, उसे जोड़ दें तो ये करीब करीब 20 लाख करोड़ रुपए का है। 20 लाख करोड़ रुपए का है। ये पैकेज भारत की जीडीपी का करीब करीब 10% है। इन सबके जरिए देश के विभिन्न वर्गों को आर्थिक व्यवस्था की कड़ियों को 20 लाख करोड़ रुपए का संबल मिलेगा, सपोर्ट मिलेगा। 20 लाख करोड़ रुपए का एक पैकेज 2020 में देश की विकास यात्रा को 20 लाख 2020 में आत्मनिर्भर भारत अभियान को एक नई गति देगा। आत्मनिर्भर भारत के संकल्प को सिद्ध करने के लिए इस पैकेज में लैंड, लेबर, लिक्विडिटी और लॉज सभी पर बल दिया गया है।
Over the next few days after Prime Minister's address to the nation, Finance Minister Nirmala Sitharaman held a series of media interactions to outline government's roadmap to implement Prime Minister's vision of an Atmanirbhar Bharat Abhiyan. She first announced a special relief package for the MSMEs sector, which had faced the brunt of the COVID-19 lockdown.
So Atmanirbhar Bharat is what we are talking about. And you heard the Prime Minister clearly say that this is going to be resting on 5 important pillars. 5 important pillars: the economy, infrastructure, technology-driven systems, demography, and demand. So if these are the 5 pillars on which we are trying to build Atmanirbhar Bharat, the focus obviously will be what can be defined as the factors of production in today's language. Factors of production, all of us know that we've been hearing it: land, labor, capital and enterprise. Today we recast it, say it the same way, but then essentially referring to the very same factors of production, but in this Atmanirbhar Bharat, our focus therefore would be on those factors of production which are land, labor, liquidity and law.
The impact of the ambitious Atmanirbhar Bharat Abhiyan initiative is already visible. NDTV had visited this industrial manufacturing unit of Oriono Pro Solutions Limited within weeks after PM Modi had announced the Atmanirbhar Bharat Abhiyan on May 12, 2020. The factory owner, Sanjeev Sachdev, had then just reopened his factory just a couple of weeks after the COVID-imposed lockdown norms were eased.
On 12th May 2020, Prime Minister Modi had announced a 20 lakh crore relief package during the COVID crisis, and he had said that this is part of the larger strategy to boost Atmanirbhar Bharat Abhiyan. And as part of this initiative, the fiscal support that was given to the MSME units is now producing good results.
5 years later, this MSME unit has grown manifold. Workers working with welding machines at this factory have been specially trained to produce high-end automated products. This laser-guided machine is cutting the iron sheets to manufacture different products for metro rail stations. From design to cutting, bending and fabrication of assembly firmware, most of the processes have been indigenously prepared and produced. Along with the rapid expansion of his automated product manufacturing business, Sanjeev Sachdev has now started exporting them to many countries now.
Sanjeev, in May 2020, Prime Minister had announced a 20 lakh crore package, and he said that this is linked to the larger goal of an Atmanirbhar Bharat. How far has India moved in the last 5 years?
In the last 5 years, we have travelled a distance not less than 30 years. And in another 5 years, we will cross that level to almost 100 years of our development. So, in 10 साल की journey में, in this 10 years of journey, which we are evolving now into a manufacturing sector, I am sure we will cover a distance what we could have done in 100 years.
These high-end automated fare gates have been manufactured for Delhi Metro, Kanpur Metro and Chennai Metro. There is also the automated ticket vending machines manufactured here, which will be installed at metro stations in Delhi, Chennai and Kanpur. These loading and unloading components and welding machines were imported from China, but now they have been locally sourced. The impact of the relief package to MSMEs in 2020 in the form of emergency credit line guarantee scheme is evident from this data. Another significant step to establish India as a global manufacturing hub is the Modi government's production-linked incentive scheme, widely known as PLI scheme. Launched in 2020, the PLI scheme is a strategic leap towards self-reliance. Aligned with the vision of Atmanirbhar Bharat and the larger Make in India initiative. The PLI scheme has strengthened the manufacturing backbone in the country and reduced reliance on imports in industries like electronics, textiles, pharmaceuticals and automobiles. According to the latest data released by the Ministry of Commerce and Industry, under the PLI scheme, actual investment of Rs 1.61 lakh crores has been reported till November 2024. Production or sales of around Rs 14 lakh crore up to fiscal year 2024 to 2025 has been generated. Employment of over 11.5 lakhs have been created. PLI schemes have witnessed exports surpassing Rs 5.31 lakh crore with significant contributions from sectors such as large-scale electronics manufacturing, pharmaceuticals, food processing and telecom products. More than 764 applications have been approved under PLI schemes for 14 key sectors. As the government takes the next big step towards making India a global economic powerhouse, it would require a sustained focus on the optimal utilization of India's demographic dividend, improving the learning outcomes in millions of primary and secondary schools, and the skilling of its manpower across critical sectors. Niti Aayog economist Arvind Virmani says, India will have to capitalize on the opportunity that has arisen following the growing global demand for diversification of resources of manufacturing goods. In this regard, the India-UK Free Trade Agreement finalized on May 2025 is expected to significantly boost India's export sector. According to the commerce industry, India will gain from tariff elimination on about 99% of the tariff lines, covering almost 100% of the trade value, offering huge opportunities for increase in the bilateral trade between India and the UK. India and USA are working expeditiously towards negotiating the first tranche of mutually beneficial multi-sector bilateral trade agreement by the fall of 2025. In-depth negotiations have been held in India and the US since March 2025 in areas such as market access, SPS TBT, digital trade, customs and trade facilitation, and legal framework. Both sides are working towards achieving an expeditious conclusion of an initial tranche of the BTA. Both the countries are also working towards an interim deal ahead of the July 9 deadline, when the pause on Trump's reciprocal tariffs will be lifted. The India-US joint statement issued after Modi-Trump meeting in February 2025 has outlined a bold new goal for bilateral trade, Mission 500, aiming to more than double total bilateral trade to $500 billion by 2030. Clearly, this aggressive outreach is part of the larger goal to make India a developed nation by 2047, a goal that is sacrosanct and a reflection of the national sentiment.
एक तो हमारा लक्ष्य है 2047 हिंदुस्तान विकसित होना ही चाहिए। नो कॉम्प्रोमाइज। आजादी के 100 साल हम ऐसे ही नहीं बिताएंगे। आजादी के 100 साल ऐसे मनाएंगे कि दुनिया में विकसित भारत का झंडा फहरता होगा। अगर 25-30 करोड़ लोग संकल्पबद्ध होकर के 20 साल 25 साल के भीतर अंग्रेजों को यहां से निकाल सकते हैं, तो आने वाले 25 साल में 140 करोड़ लोग विकसित भारत बना भी सकते हैं।
In Delhi, with camera person Rakesh Singh, Himanshu Shekhar, NDTV.
One question can change everything. The big question. Bold, direct, uncompromising. Tough topics, hard-hitting analysis. Conversations that matter. We break it down. Cut through the noise and set the context for you. Hear from top policy makers and thought leaders from the world of business and beyond. The big question really is, are companies using dark patterns to take you for a ride? The big question we're asking today, is the US heading towards a recession? The big question is, are we sacrificing our health at the cost of convenience? The questions you care about, asked and answered. The big question.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or
Hello and welcome to NDTV Profit. You're watching Profit Insights. I'm Hiral Datia. Joining us on the show today is a veteran investor. He's come up with an interesting book which is called, and in fact, it is a young investor's guide to wealth and happiness from here on. It's the Book of Wealth. Mark Mobius, co-founder Mobius Capital Partners, joins us to discuss more. Mark, good afternoon and welcome to the show, and a pleasure to speak to you as always, and always a pleasure to read everything that you write about. First, what has been your motivation to come up with the book of Wealth? Because you've been writing since quite a few years, and the number of books, I think I myself have read probably a dozen out of the ones you've written. What has been your motivation on this one?
Well, I wanted to reach out to the young people, people who are graduating from high school or middle school and going into college and so forth, to write something that will give them some guidance as to how to build their wealth. And of course, one feature of the book is that I talk about health as well, because I tell people wealth is nothing without health. So you got to have both. And I talk about that in the book as well.
What has been your best learning whilst writing this book? One, from a market's perspective, and two, from a personal life perspective, because I'm sure a lot of exploring that happens as well.
Yeah, well, the key, of course, is continuous learning. even though I've been to university, I have a PhD and so forth, it means nothing unless you continue to learn and to be interested in other things. And one of the reasons why I travel a great deal is because it gives me an opportunity to learn about what's happening in other parts of the world. So I think that is I would say the key to being wealthy and also having a good life, learning and keeping an open mind.
Right. You mentioned about travel, Mark, and I think from 1999 to 2012, from the number of books that you've written, a couple of them you have Passport to Profit. I think you traveled extensively, if I'm not mistaken. 8 months of travel, globetrotting is where you went, and you actually were able to find the hidden market bargains overseas. From this book as well, any gems that you were able to find and give advice to investors?
Well, in the book, I outlined the different ways that you can invest, in currencies, in gold, in property, etc. I give them a menu of where you can invest. But the conclusion of all this is that equities, in other words, investing in shares of companies is the best, because companies basically are working for you. The managements of companies are working for the investor to grow their wealth. And companies in a diversified portfolio will have a very good return over a long period of time. So that is, I think, the key to having a very good portfolio, being wealthy. Of course, gold is something that I think everyone should have, physical gold. But after that, I would say it would be your own house, in other words, a place to live, to own your own house, and then equities in companies.
Thank you so much for joining us, and see you soon, Mark, for talking to us with regards to the books that you've written and the kind of opportunities you're tying for young investors with what's happening in the markets.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live. Ask, decide.
Hi, thanks so much for joining in. We're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, when it comes to equities, a long-standing advice that a lot of investment advisors will give you and have given you is that you need to stay the course. And I know that it sounds a little trite to say things like this, where you keep saying, keep your SIPs going, stay invested for the long term. But then often you have the opportunity to talk about data that reinforces this fact. Now, over the last couple of months, you will know that there is a high degree of geopolitical tension that has played out, not just in certain parts of the world, but also in our own backyard. And you had Operation Sindoor pan out. And what I have focused on is that there was a low point for the broader markets in April, in the start of April. And since that point, there's been a very sharp and very stark rebound. So since the low point in April to where we stand right now, the mid-cap index has gained 19.5%. And the small cap index has gained over that. So the point is that if you had stayed invested, you would have made money if you had invested in the broader market funds. And a lot of you will have those SIPs running. But if you haven't, if you pulled out, what should your strategy be? And if you're investing for the first time, what should you bear in mind? Joining me is Mohit Gang, who is a co-founder and chief executive officer of Moneyfront, as well as Vineet Iyer, who is managing director and principal officer at Prodino Wealth. Thank you so much to the both of you for taking the time. First, the question to you, Mohit, before we get into individual schemes, is I want to understand from you what your clients spoke to you about. And of course, I'm pretty sure that you managed to convince them to stay invested. Those people that didn't and those people that pulled out, they wouldn't have had the best experience. Is this a good example, or do you think that it's too short a time frame?
Hi, morning, Alex. Always a pleasure to be speaking with you. Look, I think this is one of the classic textbook cases, and I think it should be made a case study the way last 6 months have panned out in the market. There was every bit of negative news which one could have imagined, every bit of wrong signals in the market where one would be tempted to sell, book profits and cash out, sit on cash, liquidate, and not just investors. I think the best of fund managers, Alex, have taken that call where they've sat on cash, right? Yet, in spite of the geopolitical tensions, in spite of the macros, whatever they have been done, in spite of the US tantrums and multiple myriad things which have happened across us, the markets haven't moved an inch. If you would slept, let's say at the start of the year, and you would be waking up now after whatever 6.5 months, you will realize that the world is where it was in terms of markets. It hasn't moved an inch, right? And even from April 7 lows, which we saw, the markets have rebounded astonishingly well. So anyone who was wanting to take a cash call, was wanting to sit idle, stay out of the markets, have got a bitter lesson, because you don't get those entry points in the market, Alex. You definitely get exit points at bad news and bad geopolitical events. But the rebound is so sharp. It's always a fast V-shaped recovery which we have seen in the market, and so sharp that most of us actually can't enter back in the markets. And that's a very, very classic telling example of why investors should just stay put and avoid all the noise and clutter around the levels. And just to answer the last part, yes, our clients have all stayed put this course, and we have made sure that none of them, at least because of geopolitical reasons or the uncertainty in the market, are liquidating. If they were to liquidate, then it will always be basis their goals and asset allocation.
Vineet, coming to you, just because it has occurred in the past and just because we see similar scenarios play out repeatedly doesn't mean that the next crash will be the same or the next experience will be the same. I think this is a hard lesson for a lot of people to learn. But having said that, people still tend to keep cash, saying, I want to deploy at these levels, and they miss out, as we've pointed out. What do you advise your clients to do? Are you advising them to remain fully invested at any given point of time?
Yeah, thanks, Alex, for having me here. It's always good to be on your show. So we follow a premise of financial planning, where anything which is more than 5 years away as a goal, we recommend them to invest in the long-term equity strategy, which has, of course, allocation to mid, small, as well as the other categories. And we also tactically ensure that the mid and the small cap category does not have more than 15-20% allocation individually. So we ensure that whenever the goals are getting near, we are moving out of equity and then ensuring that those money is available in safer assets. So in case of any kind of events which is going to impact the market negatively, those things does not impact the value. And the classic example we saw was in 2020, where all of a sudden COVID came in from nowhere and the market crashed massively. The second massive crash that we saw in the last 25 years after the global financial crisis. So even then, clients were not panicked, who knew that the money that they need after 5 years, those are invested into equity. Anything which is short term is sitting safe in a hybrid fund or maybe a debt fund. So this time around also, in fact, there were a little bit of curiosity in terms of what are the things or what are the opportunities that are available, so that if people have cash, they can deploy. That's an interesting shift that I'm seeing. Plus, what we are also looking at is if people have lump sum, we are deploying that in stages over the 6 to 12 months with through the SWP SIP route. And we are kind of averaging out the purchase with a time horizon at least 3 to ideally 5 years.
I assume that you are using STP, the systematic transfer plan route and SIP route, correct? Because you said SWP, that's why I'm just wondering.
Yeah. So we work a little differently. Rather than having, say, 5 different schemes and then putting money from debt to equity through those 5 debt funds, we have one debt fund, and then we set up a systematic withdrawal plan. And that systematic withdrawal plan comes into the bank account, and from there we fund the SIP. So it's not directly going from scheme to scheme. It's actually going from bank account to the equity scheme.
I assume that is something that allows you to have more flexibility in the schemes that you invest in, because you don't necessarily have to transfer from the debt fund to the scheme from the same category. So let's talk about this. This is an interesting strategy. So let's pause our conversation on mid cap and small cap just so you understand exactly what is happening here. So a lot of people utilize systematic transfer plans to transfer from a fixed income scheme of one category, of one mutual fund, to equity of the same mutual fund. That's the restriction. You can't, for example, transfer from a fixed income mutual fund, say a liquid fund of a DSP, to a Nifty 50 index fund of an ICICI Prudential mutual fund. You can't do that. You have to choose a fund of DSP. So what Vineet is suggesting is that he has a debt fund of a particular fund house. He allows the money to come into your bank account through a systematic withdrawal plan, and the bank account is then used to push money into possibly 4 or 5 schemes through an SIP route, which is quite an interesting strategy to go by. Okay, so that's insight as to how you can stagger your investments going forward. But let's talk about first the top performers in the mid-cap category. And let's pull up the top 4 odd or top 5 odd. You have ICICI Prudential, you have HSBC mid-cap, you have Invesco India mid-cap, and you have Canro Robeco mid-cap fund, which are the top 4 performers in the mid-cap category. And the outperformance is anywhere between 3.4% for Canara Robeco to about 5.9, nearly 6% for ICICI Prudential mid-cap. Let's talk about what has worked, because Mohit, you have more schemes in the mid-cap category that have managed to beat the benchmark than the small-cap category. Why is that, and what has worked?
Alex, look, I think one of the stark things which we have seen from April 7 lows is that the mid-cap index has kind of bounced back by almost 19.5%, whereas there are only 4 or 5 schemes which have given considerable outperformance on the index, though there might be a total of around 8 to 10 odd schemes which have outperformed the index by a margin or a fractional point. Yet there are almost a good large majority of schemes, perhaps 16 odd schemes, which have underperformed the index. So it is a telling sign on active versus passive debate, which we can have for some other day. Having said which, the few schemes which you named, let's say an ICICI Prudential mid-cap or an Invesco mid-cap, an HSBC mid-cap or an Canara Robeco mid-cap, which are the first 4 names which have outperformed significantly. I think one of the bigger signs which I see emerging out here is they have a very, very manageable size in spite of being in the mid cap space, right? So all ranging between 6,000 odd crore to around 10,000 odd crore kind of an AUM gives them that flexibility, gives them that maneuverability, the ability of the fund manager to move a little quickly. Unlike the large schemes, if you see all the large schemes in the mid cap category, which are over 30,000, 50,000 crore kind of an AUM, they have significantly underperformed in this rebound, right? And perhaps they need a little bit more of pacing or portfolio designing before they can start performing like the benchmark. The second thing which I note is because of this rate cut significant movement which happened and which was 50 bips, which was unanticipated, the portfolios which were positioned to benefit more by virtue of the rate cycle reversing are the ones which have actually fiercely outperformed, right? So anyone who was positioned a little bit in non-PSU banking space, or let's say perhaps only an NBFC space in the financial services, or a little bit of rate sensitive sectors are the ones who have actually benefited the most in this rebound. So if you see few of these funds, they are a little heavy on such positioning, right? And one last point out here, there are few similarities if you see across some fund houses. So let's say if you were to pick up Invesco for a case in point, right? Across the categories, if you see, whether it be large cap, mid cap, small cap, they have handsomely beaten the index. Sometimes the portfolio positioning is such across fund houses, Alex, or the style of investing is such that when the cycle turns, they are across the board, all their schemes benefit. So I see this happening a lot on the Invesco, Bandhan, DSP, few of these AMCs, which are now playing perhaps a mix of quality plus growth cycle. And that specific positioning in their portfolios have helped them a lot across these fund houses, if you were to notice.
Interesting points that you make. And that last point is exactly what I wanted to get from you, which is at any given point of time, there is a seasonality in the kind of strategy that tends to work and that tends to not work. And there's no unmitigated 3-year, 5-year, 7-year time frame where only one strategy will work. So you will see moments in time when your portfolio is underperforming your neighbors, and that's perfectly normal. But Vineet, there are a few parameters that you would look at. In an upcycle, when the market is doing incredibly well, you would look for schemes that have an up capture ratio that is better than everybody else's, which is you look for schemes that are doing better. And obviously the schemes in our list, which we've discussed right now and what Mohit has just spoken about, would have a better up capture ratio than everybody else. Would you focus more on the up capture ratio, or would you focus more on the down capture ratio though?
In fact, both are equally important. Of course, in a bull market, you would want the fund to give you better returns than the benchmark. And of course, when the markets are not doing well, you would want the fund to kind of have a lesser low than the markets. So both are equally important. I would not discount any one of them. Interestingly, if I look at, and just adding to what Mohit said, if I look at why investors kind of outperform, I see a very interesting trend over there. They have a 47% allocation to mid cap and a staggering 21% allocation to a small cap in their mid cap fund, and about 30% to large cap. So they're kind of equally distributed their funds in these three categories. And when you talk about small cap funds like Bandhan, they have been sitting on about 13% cash. And probably one of the reasons why their funds have performed well in the last 1 year is because of the cash call that they've taken. And maybe they've kind of maneuvered their portfolio in a way that when the market kind of rebounds, if they're kind of putting in that cash, they have that upside capture. And at the same time, the drawdowns are lesser for their funds.
Yeah, that's an important point that you make. Just as we're speaking about winners, we also have to speak about those strategies that have not worked and why they have not worked. And Mohit, as I look down the list, at the bottom of the list are schemes like Baroda BNP Paribas Mid-Cap Fund, you have Quant Mid-Cap Fund, and you have SBI Magnum Mid-Cap Fund, all of which have underperformed to the extent of 5% to 7.9%. Versus the benchmark, which is quite a big gap. Of course, this is only a 2-month time frame. Why has this occurred though?
Alex, I think A, you are right that it's only a 2-month time frame. B, however, the reality is that versus an index of around 19.5, 20, these funds are significantly outperformed by a margin of around 5 to 7 odd percent, right? And I think market has completely changed in its style and texture. And if you were to notice few of these schemes, specifically the quant schemes across the board, across the spectrum, it's not just the mid cap, Alex, it's also the small cap and few other categories. If you were to watch, quant was a predominantly momentum oriented theme or a momentum driven fund house, right? Most of their schemes did exceptionally well when the market was on a tearing rush on an upward direction, right? And their schemes were outperforming with a large extent, and that's where droves of investors flew into the schemes. When the market's texture broke, when the reverse cycle happened, the momentum has completely got broken. The momentum theme has lost its sheen, and hardly there are any stocks which are now working on momentum. I think the cycle has reversed a little. If you see quality funds or the fund houses which are more oriented towards quality are picking up very specifically in this cycle, and also growth oriented companies, right? So a mix of quality plus growth is something which these funds were lacking. That's my clear reading out of it, and that's kind of led to a stark underperformance. And my sense is if the cycle keeps thus for at least 6 months to a year, then perhaps these funds will again take a longish while to rebound. Having said which, no fund is a bad fund, Alex. It's just that the right cycle has to strike at the right time for the fund to deliver returns. So for investors, it's just about patience and staying put with the themes.
We'll come back to that. We'll revisit that. But I do want to talk about small caps as well, because in the small cap category, Vineet, I'm coming to you first on this one. There are far fewer outperformers. There are just two schemes that have even 0.5% or more. You have DSP small cap fund that is managed in this time frame, and I know that it's a very short time frame, but it's still a time frame where the index itself has risen by over 20%. DSP has managed to achieve a 1.4% higher return, whereas HSBC small cap has managed a 0.5% increase. Invesco has more or less matched it, and then everything below that, GM small cap, for example, is performed not as well as the benchmark, 0.5% lower. UTI also 0.5% lower, going down the list. Why is that?
I think these funds have taken a good cash call. Plus, if you look at the small cap category, it's a wide choice that the fund manager has, and stock picking ability becomes a very, very important factor when it comes to the outperformance. So I think DSP and HSBC have done well on this part. Probably the stocks that they've picked have done well, have reasonably done well in the last 2 months, and because of which you are seeing an overperformance. And if I look at the broader index as well, the small cap 250 index, it's trading from a long-term median PE. If you look at the discounting, it's just 3.85% of discount that it is trading at. So which means that there are pockets in the index in terms of securities where you have opportunities where it's this kind of undervalued, probably out of flavor, because of which if the fund manager takes a stance and if that flavor works out, if liquidity gets created in those stocks, of course there's an upside. So I feel that these two factors have helped these two funds to kind of outbeat the benchmark and of course outbeat the other peer group in their category.
Okay. Mohit, do you want to come in on why so many schemes in the category have underperformed? And of course, I buy the argument, the fact that small cap funds, because of the universe available, it's difficult to build a portfolio, and therefore beating the benchmark is something that star fund managers are able to do. Why is it that they've not been able to do it in such a broad-based rally?
Look, Alex, it's actually very surprising to me because small cap as a category has huge choice to offer compared to the other two categories, right? And out there, typically the whole premise, which we've been often debating, is that the fund managers should be able, along with their experience and significant reading of market, they should be able to beat the benchmark. Having said which, 2 months is perhaps a little low threshold for us to evaluate. However, not a large majority of fund managers underperforming is actually concerning, honestly. And by virtue of if your portfolio was a little index hugging, or if your portfolio was tilted towards those high PE stocks or very expensive stocks or stories which were predominantly available, let's say last year, and if you haven't been able to change the texture of your portfolio very quickly, right? Then I think those are the portfolios which have suffered significantly in this last 2 months of rebound. If you see the top performing portfolios, let's say if you were to evaluate DSP per se, Vineet Sambre obviously has been managing that fund as a CIO now. He overlooks everything along with Resham Jain. But the fund was extremely heavyweight on consumer discretionary as a sector, and then materials, which if you see all the other funds, they aren't so heavy, barring one or two funds which have actually done very well, perhaps a Bandhan or something else, have consumer discretionary as a significant overweight exposure in their portfolios. And I think that's where the reading has gone right, and they've been able to significantly outperform. Again, we have to understand small cap as a category does not offer too many choices in the financial space. So the fund managers are a little constrained as to what to pick up out there, unless they pick it up as part of their large cap allocation or something. So trying to play the small cap within what is available in that space, and they're finding rate sensitives and finding something which will play out once the cycle turns, along with a good growth prospects. I think that's what has led to these one or two funds giving us a positive return.
Okay. Vineet, comment about the number of holdings in these small cap funds. And I have asked this question specifically about Nippon India small cap fund in the past. I mean, they've managed an outperformance over long periods of time, but I'm seeing that number tick up as the weeks go by. It's now at 240. And you have a few others that have a significant number of shares, like Bandhan Small Cap, for example, that has 190. You have Axis Small Cap that has 135. But by far and away, Nippon India now has the most stocks in the small cap category. Of course, it is holding the largest assets under management by far. But is that something that you pay attention to?
See, it could, I mean, it's actually in a way better for a fund to have too many holdings. There could be some management challenges there. But from a liquidity standpoint, and if the fund size is getting larger, if you're not getting adequate opportunities in the existing securities, you want to kind of diversify further. And that actually creates a long tail. So whenever we were speaking to, in fact, this was one of the concerns in some of the quarterly researches that we did. And when we reached out to the team, we got to know as an understanding that it's a purposely driven thing just to maintain liquidity, because if there is any sudden drawdown, they have enough securities that they can kind of liquidate and create those liquidity for kind of maintaining the redemptions. And in fact, if you look at some of the other category funds like Parag Parikh, FlexiCap, even they have started having large number of holdings, being one of the largest in the FlexiCap category. So I think as and when the fund grows in size, there is popular demand and the investment manager is not finding decent opportunities, the tail would go up. So there could be an inflection point where if it becomes too much to kind of manage, so we need to kind of wait and see. But at this point in time, I think look at the universe, 240 is still not a very, very huge number. I think we're good.
All right. So let's talk about what an investor should do if they are looking to invest for the first time. And we have a certain set of data. Of course, I'm stressing again, this is only 2 months. And so therefore, the outperformers in this 2 months should not necessarily automatically find it into your buying list. Mohit, I'll start with you. What advice would you give in the mid cap and the small cap category?
Alex, look, I've always been very clear. One has to have a mix of active versus passive in all the categories which one is investing in. And I would go with a mix of one active, one passive in both the categories, just to get a full flavor of what the index is doing. It could be a factor-based index. If you are really keen on it, then I think that's a great strategy to have, or it could be a plain vanilla index. And one active fund which you really believe in, where you kind of resonate with the fund manager's objectives and the philosophy, and then you stick with it. Don't just try and change your small and mid-cap allocations basis 6 months of performance, underperformance or overperformance, because every fund will get its cycle, will get its day in the sun. And I think one has to patiently wait for that day. When it comes, they really come very, very hard with performances. So
yeah,
one has to just...
Yeah, you know, to reinforce that, sometime next week, what we'll do is we'll pull up the worst performers of 2025, or maybe at some point in 2025, and we'll pull up the list of worst performers over the course of the last 1 year. And you will notice that there's a very stark difference between the two, even though it's a pretty short time frame. Vineet, last comments for you. Advice, similar question to what I asked Mohit.
Yeah, so I think in the mid and the small cap, actively managed funds has a very good chance of kind of outperforming over a longer period of time. And I was reviewing some data for the past 1 to 2 years, and I see that majority of the, at least the top 10 category funds have outbeaten the index by quite a margin. Some funds have beaten in excess of 5%. So I would still stick with the actively managed funds in the mid and the small cap space. Probably in the large cap space, I might go with a active passive kind of this thing, because I feel that even today in mid cap and small cap, it's a stock picking ability that actually derives the performances. Probably 10 years down the line, those options may not be there, and that point in time probably like a mixed strategy of active passive would work well.
Okay, fair enough. A very quick last question to both of you. I'm not asking for recommendations, but what's on your short list in both the mid cap and the small cap category? Vineet, first you.
So we are sticking with Kotak Emerging in the mid cap category, and in the small cap we're still sticking with Nippon being the largest fund. And since they have been having the experience of managing this since more than 20 years now, so we want to kind of stay with someone who has the ability to kind of stretch through the difficult times. So these are the topics in the category.
Mohit, what about you?
For me, in the mid-cap category, Alex, it's the quality factor. DSP mid-cap 150 quality 50 index fund. And in the active, I'd go with an Invesco mid-cap. In the small cap, we've been sticking around with Bandhan small cap for a while. And if someone is really keen, then we also go with a passive choice in the small cap.
Fantastic. Okay. All right. Gentlemen, thank you so much for joining me on this edition of Your Money Matters. It's been an absolute pleasure speaking with you. And viewers, that brings us to the end of this edition. As I pointed out, do let us know what you think in the comment section, and stay tuned. Lots more coming up on NDTV Profit.
Imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost.
Now, one of the things that's taken grip and center stage this week is the IPOs, and within that IPO frenzy, there is HDB Financial. Welcome, you're watching KYC, I'm Harsh Saita, and today we're going to focus in on HDB Financial. 3 or 4 parameters that really pique interest with regard to an HDB. One of them being the fact that it's owned 74% post this IPO by an HDFC bank. But what you want to see is whether there is a real large risk of that holding coming down to 20%, because that's what the RBI draft norms are pushing NBFCs to do. And within all of this, of course, is the fact as to whether you should subscribe to the IPO or not. And we'll get some insights from analysts on this entire RBI issue possibly, which could come up with regard to an HDB. RBI in a very different mood and therefore may not materialize as well as a risk, but we'll understand that risk better. The second piece is the interplay between growth and valuations. It's a decently fast growing company, and the IPO valuation is something that we'll highlight, compute and give you a deep dive on as to how you should look at. And we'll also ask analyst, one of the analysts who we're speaking with today, as to how he looks at both the price to book valuation as well as the 1 year forward and maybe the next 3 years that he sees with regard to this one. The promoter ownership shrinking, that's the third risk which I'm talking about, and we spoke a little bit about that risk. It'll come straight up on your screen. There you go. And whether this business is highly cyclical. How should we look at the business? Because you have HDFC Bank on the one hand with a very stable lending business trading at 2.5 times price to book. And then you have this business. Is it slightly chunkier? Is there a risk and high level of cyclicality within this, or can that cyclicality stabilize? And yes, in the good years, will it be extremely good? And in the bad years, can it maintain status quo? Even a 2% ROA is not bad in a bad year. And that's what I want to understand better. And fifth point being, can it sustainably continue to generate profits? I want to pull out one nugget. In the last 8 years, HDB Financial has not done a fresh equity raise even once. So from its loan book size of 35,000 crore to the current loan book size of 1,06,000 crore, it's not done one fresh equity raise other than ESOPs, of course, which is a big thumbs up, right? There you go. So what you want to actually understand is whether this profitability can sustain going forward as well. Again, even in the IPO dilution, it's a small dilution that they are doing with regard to fresh issue. It kind of raises the question that sustainably, our ROE ratio is just significantly strong to take care of growth. And we'll try and dissect some of those angles as part of KYC today. Let's though first off start by understanding what HDB Financial actually does. Let's start from scratch. Let's pull out the RHP. For those who haven't read it, let's pull out the RHP and do a little bit of reading. Well, it was incorporated in 2007. It's a retail-focused NBFC. So while at its core, it's not retail like a Bajaj Finance, but it does lend to individuals and small businesses. And that's why that granularity is what causes it to be called a retail-focused NBFC. And it's the 7th largest retail-focused NBFC in the country. It covers around 1,170 towns and cities. It's spread across 31 states and union territories. So even in terms of the diversity in terms of geography is very, very large, right? Which causes more granularity. It also brings in an element of stability, because no one region impacts the book as a whole. It has 1.92 crore customers. This has gone up from 1.2 crore customers in FY23. So just look at the growth in the customer count, which is getting added in the last 2 years alone, is nearly 60 lakh customers. So 50% of all its customers combined since 2007. 50% of that, or rather 30% of that, 33% of that, it's done in the last 2 years alone. That just goes on to show that the scale is starting to pick up. It has over 1770 branches and has an average ticket size of its loan is around 1.65 lakh. This shows how granular the loan book is. In fact, when I was reading through, the top 20 borrowers comprised less than 1/3% of the cumulative book of the NBFC. That kind of shows how granular it is. Now let's talk a little bit about what's unique with regard to HDB. I've already spoken a few things about what's unique, but let's talk about this, the macro factors that's unique. 80% of the branches are located outside of India's 20 largest cities. Over 70% are located in tier 4 plus towns. I also want to talk about how it's more focused to underserved and underbanked customers. That's the larger focus. And the low to middle income households with minimum or no credit history is what they cater to. In terms of a little bit more on that low to middle income households with no credit history, around 12% of the loans are to people or persons with absolutely no credit history. You want to take note of that number, because that also presents its set of risks, but it also lends to the fact that if they have been doing this for so many years, they've got some formula right, and therefore you want to look and pick as to whether that's a risk worth taking or not. But that's broadly what you should know. Let's talk about the business now. It's obviously into lending. Let's talk about enterprise lending. That constitutes around 40% of the book. Business loans, LAP, gold loan, and salaried personal loan. These are the constituents of enterprise lending that they do. Let's talk about asset financing. Again, around 38% of the book. Tractor, CV, and CE loans is what it caters to. And then there is consumer finance, and there are a whole bunch of consumer finance loans that they give, which contributes around 23% of the book. Asset finance is fully secured, and 73% of the loan book along with it is absolutely fully secured. Of course, in case of a default, there are certain processes which kick in and take time to kind of liquidate assets, but it lends some amount of comfort to the way in which the loan book shapes up. Let's look at the metrics that we look for in an HDB financial. We start off with the income statement, balance sheet. We look at key metrics individually, which includes yields, margins, ROA, cost to income. We'll also look at the asset quality of the financier. We look at shareholding pattern, valuations, and we look at risks. This is slightly different because street coverage is not something we have. So again, that is a key component. Let's quickly look at the income statement. You look at the net interest income growth. It's been at roughly 17% odd over the last 2-year CAGR. The operating profit has grown at a 41% CAGR. They're also doing, mind you, they also do back office services for an HDFC bank. So that contributes to the other income line and the other services that they provide. Provisions has in fact gone up in FY25, and that's why you're seeing that CAGR number quite high. Profit is up just about 5% due to the higher credit costs that we've seen. And therefore, any tapering down on the credit cost could well aid profitability if that were to happen, and any increase in the credit cost could cause cyclicality to profitability. This is a risk we've spoken about. We've given this a neutral because of exactly and precisely that reason. Let's now talk about the balance sheet and look at the way in which that one has grown. Last 2-year CAGR has been 24%, 3-year CAGR has been 20%. So decent growth on the balance sheet front. Borrowings is up around 26%. When you're also looking at the capital adequacy, it's very, very healthy. Mind you, you want to note those 2 points that I spoke at the start. The first point being that in the last 8 years, they've not done a single equity raise. Extremely solid. And profitability is basically what is driving growth here. And the second piece, of course, of that is that in the meantime, your gross loan book has gone up from 35,000 crore to 1,06,000 crore. So growth has been extremely strong as well in those years. But a 20% 3-year growth is not bad at all. We'll give this a thumbs up with a 19% capital adequacy. Again, not looking bad. Let's look at the key metrics now very quickly. Yields are at 14%. You see your cost of borrowing is roughly 7.9% for FY25. So again, that is not bad, and it gets advantage with regard to cost of borrowing because it's the subsidiary of an HDFC bank, and that kind of gives it a little bit of leverage in terms of cost of borrowing versus its peers. even within the same risk bracket. When you're looking at margins, they've come off slightly, but that's how the rate cycle has also progressed. With this rate cutting cycle starting, it could well aid margins as well going forward. Look at ROAs. ROAs have come off in this year, and that is because you've seen some bit of credit cost spike which has happened, and therefore that is playing out on the ROA number. But look at how cost to income has evolved as a result. Credit costs increasing, they've tapered down on their cost to income. 49% is where that cost to income currently lies, which is also elevated. But nonetheless, this looks like a decent set. 2+% ROA in a tough cycle is not bad. 3% roughly in a decently okay cycle is again very, very creditable, and therefore we've given this a thumbs up overall. Let's look at asset quality metrics. Your NPA ratios have come off but have bounced back up in FY25. We spoke about this, and your net NPA too has bounced back up. This will see cyclicality on a year-on-year basis, and it will depend on how the business and the cycle, credit cycle is evolving, and therefore we've given this a neutral, but it's fairly controlled. Given the kind of borrowing or lending that it does, this is not a bad net NPA ratio to have, which is sub 1%. So they're providing well with regard to their NPAs. Let's talk about shareholding now very quickly. You're looking at promoter holding, which is at 94% currently, expected to fall to 74%. Right? Now the real risk here is if RBI's draft norms are implemented and this promoter holding is mandated to fall to 20%. Two reasons why this will happen. One is if there is no distinction or distinct lending, which HDB Financial does versus an HDFC bank, it's a very real risk. They've carved out this risk. So you want to keep your eye out on that. The second is, of course, if they continue to hold HDB Financial and don't merge it into the bank, that these two could well translate. And of course, if the draft guidelines are made final in its current state, these are key risks with regard to shareholding pattern as well. And hence, we've given this a neutral. You want to wait and watch how this one evolves. This is a key risk for every holder of the stock. Vishy joining me as well. Vishy, any thoughts on this piece?
Yeah, so as what you were mentioning earlier, that there are certain risks that are inherent, Harsh, to this kind of business, especially the point that you made about the subsidiary guidelines of the RBI. Now, that is a bit of a roadblock especially as far as HDB Financial is concerned, because HDFC Bank owns the majority stake, currently 94%, post this issue about 71-72% that they're going to hold in the NBFC. And if the businesses are not materially different, then it becomes a real choke point. But of course, it is incumbent then upon the management of the NBFC to convince the regulator that, yes, they are similar umbrellas, but we are entirely two different entities doing supporting two different types of clientele. Remember that was what is the RBI's major concern, that you don't want the same group to lend to the same entity through multiple lending arms. So that is something that the RBI wants to avoid. And if they're able to convince the RBI that this is how the businesses function, then things might look a little bit better.
Right. So that's with regard to the shareholding pattern, something you should keep an keen eye out on. Let me look at valuations now. It's currently trading at the list price to the book value, or the IPO price to the book value, not the list price. The IPO price to the book value is 3.7 times. But that's not the right way to look at it. You have to look at the book value post the equity infusion, and the book value post the equity infusion is 3.33 times. That is the current book value post equity infusion. This on a 1 year forward basis could well be 3 times, and I'm assuming that last year's profit after tax will continue in FY26 as well. That's a conservative estimate. A lot of analysts on the street are estimating a slightly better 1 year forward price to book, but we've been conservative here. Doesn't look particularly expensive, but doesn't look particularly cheap either, and therefore we've given this a neutral, Vishy. And the last piece is with regard to risks. Now, we spoke about at length about how the promoter may be required to substantially reduce ownership to less than 20%. Seasonality, which impacts the business, we've spoken about this. Non-payment or default by customers. A lot of these risks are also highlighted in the RHP. So if you do have the bandwidth, please do read the RHP before you subscribe. But even if not, we've covered the key risks here. So kind of gives you a good lens. Also, secured loan defaults will likely lead to risks to enforcing collateral, which has its own set of procedures and practices. Offer for sale is 10,000 crore, which is a large chunk of the IPO. Conflict of interest with HDFC Bank, of course, both lend to, or rather are lenders in itself. Trademark and license agreement is present with HDFC Bank. Volatility in interest rates impacts the numbers, and competition, of course, is starting to rise again in some of the pockets where HDB Financial lends to. Last off, I want to also talk about how the street is looking at this. All analysts have an apply on this one. Let's quickly stack up all the ratings, and that gives us overall a 5.5 out of 8 on our KYC ratings. We'll have that on the screen in just a minute. There you go. So that's the rating on KYC. Let's go across to Shripal Doshi. He's joining us, research analyst, NBFCs and SFBs at Equirus Securities. Shripal, great having you. Apologies for the slight delay that we've seen. Let me start off by asking you, how do you look at the risk of HDB Financial having to go through multiple cycles? Because the ROA cyclicality is evident. So how should one view that?
So, good morning, Harsh, and thanks for having me. So with respect to the volatility in the ROA, it's a function of the product mix also, if you look at it from that angle. They have a product portfolio which is across 13 subsegments, right? So while you have highlighted the 3 key categories, but then within that there are 13 products, and those products have gone through turbulent times, let's say post-COVID twice. So in FY 21-22 was a period wherein those product segments led to higher credit costs, not only for HDB per se, but at system level as well. And then also in FY 25, we've seen that trend, let's say in segments like CV, in segments like personal loans, some of the retail loans. So therefore, the volatility in the credit cost leading to volatility in the ROA. However, if you look at it from the diversification point of view, it is still a very, very well diversified franchise, decoupling itself from one particular segment and the turbulence in that particular segment. So while there is volatility, it is the best probably in terms of diversification that a franchise can have to sort of decouple itself from these credit cycles or credit cost cycles.
Vishwanath here. I just wanted to join in this conversation and ask you a couple of questions specifically around the OFS bit. Now, HDFC Bank is going to offload shares worth 10,000 crore. Now, that's the stated goal that the bank has stated. Obviously, that will bring down a shareholding. Do you at any level see it as a material risk that the promoter is offloading a sizable chunk? And out of the 12,500 crore, this is a big part of this entire issue.
So see, this is also with respect to bringing the shareholding to, let's say, below 75%, right? Which is one of the requirements by the SEBI. So it is in sync with that, and I do not see so far any risk of this shareholding coming down to 75% or 74%, being very specific there. So I do not see any risk there because it continues to enjoy the AAA rating on the credit rating side, right? By most of the credit rating agencies. So bringing it down to 74% doesn't really have any impact on the credit rating or on any other operational aspect of the franchise.
Shripal, can they in some way circumvent the RBI regulation? And I'm assuming that this regulation becomes final, can they circumvent it by saying that they're doing a different business, it's a different cohort, a different set of clients that they handle?
So see, they are into different customer target segment actually. While the product portfolio is an overlapping product portfolio, or rather because they're into diversified product segments, right? But the kind of customer segment that HDB caters to is broadly different, or let's say relatively inferior versus where HDFC Bank is sort of positioned. And to your particular question on draft circular and its implication, so see, we'll have to wait and watch how the RBI comes out with the final version of that circular, because if they require the shareholding to sort of get trimmed down to a particular percentage, that could have an implication on how credit rating agencies look at these NBFCs at large. I mean, I would not only keep or contain myself for HDB, but also for some of the other bank-backed NBFCs such as Canfin Homes or let's say Fedbank Financial Services or PNB Housing. So that will impact all of these guys from where the credit rating agencies look at these NBFCs, and that can have some impact on their cost of fund or their ability to raise funds at a lower rate from some of the banks or some of the financial institutions.
Shripad, one of the points that came out when we were talking to the management as well, this is before the opening of the IPO and as well as last evening, they're a slightly more conservative lender as such in terms of the way the business is structured.